With that, if Ms. Taylor available.
Yes, I'm available. Good morning, Chairman.
Good morning, Ms. Taylor. If you would please call the roll.
Chairman Vasquez.
Present.
Vice Chair Schaefer.
Vice Chair Schaefer is here.
Thank you. Member Gaines.
Here.
Member Cohen.
Present.
Controller Yee or Deputy Controller Stowers?
Deputy Controller Stowers here.
Thank you.
A quorum is present and the board meeting is called to order. We will start with the Pledge of Allegiance. If I could just get you all to stand and we'll begin with that. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. With that, just another friendly reminder to all, especially for those that might be logged in with us who are making presentations on with our items in a few minutes with this hearing, that we all are sharing the same line, which means we need your patience and cooperation because the audio needs to be clean and clear for our transcriptionists to make sure that they're documenting clearly any motions, who seconds, and who is speaking. With that, I appreciate your patience with that. And let me ask members if there's any opening remarks before we begin our first item of business. And welcome, Controller Betty Yee. I just saw her join us.
Thank you. Good morning, Mr. Chairman.
Seeing no hands, Ms. Taylor, if you would please announce our first order of business.
Our first order of business is an announcement regarding public teleconference participation. Good morning and thank you for joining today's Board of Equalization meeting via teleconference. Throughout the duration of today's meeting, you will primarily be in a listen-only mode. As you may know from our public agenda notice and our website, we have requested that individuals who wish to make a public comment fill out the public comment submission form found on our additional information webpage in advance of today's meeting, or alternatively, participate in today's meeting by providing your public comment live. After the presentation of an item has concluded, we will begin by identifying any public comment requests that have been received by our public board proceeding staff with the AT&T operator, providing directions for you to identify yourself. After all known public commenters have been called, the operator will also provide public comment instructions to the individuals participating via teleconference. Accordingly, if you intend to make a public comment today, we recommend dialing into the meeting on the teleconference line, as the audio broadcast on our website experiences a 1 to 3 minute delay. When giving a public comment, please limit your remarks to 3 minutes. We ask that everyone who is not intending to make a public comment, please mute their line or minimize background noise. If there are technical difficulties when we are in the public comment portion of our meeting, we will do our best to read submitted comments into the record at appropriate times. Thank you for your patience and understanding.
Excuse me. With that, Ms. Taylor, if you would please call our first item.
Our first item will be item B, property tax appeals hearing. This is a constitutional function. The oral hearing procedures are as follows. The oral hearing will be announced in the order presented on the agenda. When I call your case to be heard, please be ready to unmute and turn on your camera as requested. The appeals attorney assigned to the case will introduce your case, stating the issues for the board's consideration in the oral hearing and noting any agreement where applicable. After the appeals attorney has completed the introduction, the parties will then be asked to introduce themselves and, if necessary, their affiliation with the petitioner or with the department for the record. For this morning's board meeting, there is one case for hearing. B1, Property Tax Appeals Hearing, Petition for Reassessment of Unitary Value, Southern California Edison Company, 0148 SAU 21-007. Contribution disclosure forms are required pursuant to Government Code 15626. Board Proceedings has received contribution disclosure forms for this morning's hearings from the parties, agents, and participants. No disqualifying contributions were disclosed. Additionally, all parties, agents, and participants were listed on the memorandum provided to your office. As this case is an adjudicatory matter, the board's hearing of this case is subject to restrictions on ex parte communications with any violations of the prohibition requiring a disclosure for the record. This is a hearing subject to Section 40 of the Revenue and Taxation Code. If any witnesses will be called, I will place them under oath.
Thank you, Ms. Taylor. We have scheduled 2 hours for this case, and there are 4 important issues for our consideration. After hearing the arguments and answers to our questions from the petitioner and the department, the board will consider the evidence and will take a motion either at the conclusion of the hearing or under submission later in the day. Ms. Garrett, will you now provide a brief introduction of the 4 main issues in the case? Is Ms. Garrett available?
Yes.
I see her on the screen.
Good morning, Chairman Vasquez and honorable members of the board. I am Sarah Garrett, the board's appeals attorney assigned to this case. In the case before you, the petitioner is Southern California Edison Company, a public utility operating in Southern, Coastal, and Central California. Petitioner has raised 4 primary issues with their 2021 board adopted value, which was based on the January 1st, 2021 lien date. For the record, I will note that Southern California Edison's original 2021 board adopted value was $31,322,100,000, which is reflected in the parties' briefings and the appeals attorney's hearing summary. However, the 2021 board adopted value was amended by this board in September 2021 via a roll correction, which reduced Southern California Edison's 2021 unitary value by $196,800,000. This nuance has not been reflected in the record to date. So at this time, I will note that the appeals attorney's recommendation must be adjusted to be consistent with that roll correction. Accordingly, the revised appeals attorney's recommended unitary value for this petition is $31,125,300,000. Similarly, the SAPD's appeal recommendation will likely need to be adjusted to be consistent with this roll correction, and I'd ask that the respondent briefly address this within their presentation later today. Petitioner is requesting a unitary value of $25,640,227,493 for purposes of this petition. Accordingly, this appeal is subject to Revenue and Taxation Code Section 40 as the amount in controversy exceeds $500,000 in tax. Thus, after the board's decision on this petition today, the appeals attorney will prepare a decision to memorialize the board's action in early 2022. Today, the parties will present the following 4 primary issues within this petition. First, whether the petitioner has shown that the State Assessed Properties Division, or respondent, has erred in placing 75% reliance on the historical cost less depreciation value indicator and 25% reliance on the capitalized earning ability indicator of value. Second, whether petitioner has shown that the respondent must adjust the board adopted value for Southern California Edison's $3.6 billion accrual for liabilities related to the 2017 and 2018 wildfires and mudslides. Third, whether petitioner has shown that the respondent improperly assessed $1.3 billion of wildfire mitigation capital expenditures. And fourth, whether the petitioner has shown that the respondent erred in its treatment of wildfire insurance fund related contributions. Petitioner has the burden of proof to show that the 2021 board adopted assessment is incorrect or illegal. The parties are present and ready to present their cases before the board. This concludes the appeals attorney's opening remarks. Chairman Vasquez, please proceed to hear this petition.
Thank you, Ms. Garrett. We will now commence the hearing. Welcome to the Board of Equalization. Petitioner, you have 40 minutes to make your initial presentation, followed by 40 minutes for the respondent's presentation. This will be followed by 10 minutes for petitioner's rebuttal and 10 minutes for the department's rebuttal. Although members may ask questions at any time, we are reserving 20 minutes after the last rebuttal for questions and board discussion. Petitioner's representatives, please unmute your microphones and state your name and affiliation with the taxpayer for the taxpayers for the record.
Good morning, Mr. Chairman and members of the board. My name is Marty DeKessian, and my firm DeKessian Law represents Southern California Edison. With me today are Ms. Andrea Wood, who is the Vice President of Tax with Edison International, Mr. Carl Matthews, Principal Manager with Southern California Edison, and Mr. David Lee, Tax Manager with Edison International, and they're appearing before you right now.
Welcome all. Thank you for those introductions, Mr. DeKessian. You and your colleagues have 40 minutes to make your presentation. The clerk will give you a 5-minute warning as you near the end of your time.
Thank you, Mr. Chairman. And I'd like to put everybody at ease. I'm not sure I plan on speaking for the entire 45 minutes, so we'll get through these issues as quickly as we can. I will say thank you, all of you. I have great respect for this agency and for the individual members, and I know you have a difficult job to do. And I'll say the same for legal staff and for SAPD. These are not easy issues. We were here before you last year, and we're here before you again on basically the same issues. And so I think that'll help because there's that familiarity I think that everybody has with the issues. Hopefully that will help expedite our presentation. But we're here, our time is yours. We're here to answer any questions you may have. But with that, the issues, as you know, from last year all relate to the ongoing wildfire crisis and its impact on the value of Edison's property. Unfortunately, just like last year, we disagree emphatically with staff's evaluation as a whole. And just like last year, we also disagree emphatically with staff's treatment of each of the issues we've raised in our petition, and which Ms. Garrett briefly introduced for us today. And just like last year, the wildfire crisis rages on with no end in sight. And I think that's pretty well documented. And as you may recall, at the end of the hearing last year during the board member questions portion and the board member comments portion, we were told that we made good points. We were told that we should monitor the situation and that there would probably come a point in time where we're going to need to make some potential adjustments in terms of how we approach value setting. That's what we were told. But we were also told that last year we weren't quite ready. The board was not quite ready for any of the value adjustments that we were seeking. And in May of this year during value setting, there's the same sort of discussion. We need to monitor the situation and so forth, but not quite yet for any of the adjustments we're seeking. And then of course on July 13, the Dixie fire ignited. It burned for over 4 solid months, burned 963,309 acres. It was set a record as the largest single fire in California's history. It was the second largest overall, nearly breaking the previous year's record set by the August complex fire. So the message we're getting from the board is, yes, we need to examine the wildfire issue. Yes, we need to monitor things. Yes, it's having an impact on certain companies and their property, including Edison, but staff is just not quite ready to do it yet. Respectfully, honorable members, the time to make those adjustments is now. The time is now. We have arrived. The time is long past due. But if there were any doubts last year as to whether the time is now, I think it's fairly clear that it's arrived. It is upon us. So as we go through these the issues presented in the appeal, please keep this in mind. So as Ms. Garrett indicated, the first issue that we have has to do with the weighting. I'm going to do it a little bit differently because I'm going to break it up into 2 subparts. First, there's the discrepancy between the value indicators. As we mentioned last year, according to this board's own assessor's handbook, the value indicators should yield approximately the same result. Are we looking for perfection? Of course not, but it needs to be in the same ballpark. And that's the problem that we're having with staff's appraisal and the weighting. If the value indicators were close, reasonably close, then the weighting as an issue would sort of fall by the wayside. It wouldn't be as important. But in the case of SAPD's appraisal, the cost indicator is 33 billion. The income indicator is 26 billion. The discrepancy is 7 billion. That's still a big discrepancy. Last year it was 9 billion, this year it's 7. And staff's response to that is, just they repeat sort of a truism in the assessor's handbook, which is that value indicators may vary and that differences may occur. This is true. No one is disputing that. But because they should be in at least the same ballpark, this raises red flags. Any independent appraiser, any valuation expert will tell you that. If you have a variance like we do here, that is a massive red flag and creates an appraisal that's suspect on its face. The $7 billion we're talking about here is not just a difference. It's one approach being 27% higher than the other. And Rule 2 talks about the 5%, property tax Rule 2 talks about the 5% variance in the context of the purchase price presumption. That's sort of treated as close enough. We're well beyond that. This is a significant difference. And, as I said, although staff says that appraisal is not an exact science, we agree. The value indicators may vary, we agree. That's not supposed to be the end of the analysis. And that's where they just sort of stopped. They just pumped the brakes, $7 billion apart, and there isn't really any explanation for that. And that is a problem. The assessor's handbook, this board's own handbook, says that when you have significant differences, you must reconcile. And what that means is you must resolve it, you must explain it, you must compare and understand the difference between the two approaches. That did not happen here. With all due respect to staff, that did not happen here. They don't really attempt to explain why their cost indicator is substantially higher than the income indicator. There's been exactly zero explanation. And I again, with respect, just saying that it's regulatory lag, that's not a sufficient explanation. This is a $7 billion difference. We need to know more than just throwing out a term like regulatory lag, especially when some of our issues don't have to do with regulatory lag at all. But what our counter evidence is contained in the assessor's handbook. This is obsolescence. When you have cost right here and you have income here, and that gap is significant, this board's own assessor's handbook, which is the guidance to the staff, says that this indicates that obsolescence exists in the property to such an extent that the owner may not earn the rate of return allowed by the regulatory agency. That's counter evidence. So we put that back on staff, and then they say burden of proof. You didn't prove it enough. Well, our citation to the assessor's handbook is evidence. That's plenty of evidence. So what's the rebuttal from staff? Hopefully we'll hear it today. I don't think it's going to be different from what we heard, but hopefully we'll hear it. The hearing summary is no different. They say differences may vary, and the hearing summary doesn't really question what staff is doing in any meaningful way. The only thing that really happens here is this fallback to this concept of burden of proof. And this is a quote from a case that this board in a decision made several years ago. It said that the only thing that has happened here is that staff has steadfastly maintained that appellants have failed to justify any adjustment, and recites the, quote, hoary shibboleth that its determination is presumed correct and the burden to overcome that presumption is upon the taxpayer. Okay, so what this means is we can't burden of proof away everything. We're pointing out obvious flaws, obvious deficiencies in this appraisal and the staff's methodology, and it's not enough to come back and say burden of proof. We've already pointed this out. I would say this. If an airplane has a broken wing and a missing engine, it is defective on its face. I don't need to go for a ride in it to figure out that something is wrong. That's what's happening here. $7 billion apart, no explanation. It's enough for us to say that this appraisal is defective. So, and it creates this feeling of arbitrariness, especially when it comes to the weighting. I will also say this. We've offered SAPD several solutions to correct this massive discrepancy. They can either, one, make the requested adjustments, two, they can make the obsolescence adjustment that we've requested, or three, they can change the weighting. And they've refused to implement any of these solutions. Instead, they seem to be content with $7 billion in valuation difference. So as I said before, moving to the issue of weighting or another sort of transitioning to why do we have a problem. If the value indicators were close, then would it really matter? If they were identical, I mean, obviously it wouldn't matter, 75-25 or 50-50 or flipping the value, it wouldn't matter at all. But what's happening here is that you have this broad discrepancy coupled with the weighting, and it's creating a distorted picture of what the value of this company is. We have always maintained that more weight should be given to the income approach than the cost approach. We've always maintained that. That has always been our position, and the reason is straightforward. And that's because although HCLD is one of the more important indicators of value for closely regulated public utilities, it needs to take a backseat to the income approach in this case for the following reason. And the reason is set forth in the regulation, in the law. Rule 8. The income approach is the preferred approach for the appraisal of improved properties and personal properties when reliable sales data aren't available, and the cost approaches are unreliable because the reproducible property has suffered considerable physical depreciation, functional obsolescence, or economic obsolescence. Is a substantial over or under improvement, is misplaced, or is subject to legal restrictions on income that are unrelated to cost. So let's unpack that. Considerable physical depreciation, economic obsolescence, legal restrictions on income unrelated to cost. This is in the reg, has the force and effect of law. Considerable physical depreciation, we have it here. These are largely older assets. Economic obsolescence, also called external obsolescence, we have it here. The wildfire expenses, the insurance situation, inverse condemnation, operational uncertainty under AB 1054, the overall economic environment for investor-owned utilities. These are all conditions external to the property that are impacting its value. And of course, legal restrictions on income unrelated to cost. We have it here, the entire regulatory framework that limits my client's return on investment and disallows it in some cases entirely. So for us, the income should be the preferred approach. The staff's valuation should probably be flipped, the weighting. It probably should be 25 income, 75 cost. 25 cost, 75 income. It should probably be flipped because Rule 8 tells us that income is the preferred approach in this situation. So staff's response has been that to emphasize that this has been the same approach in place for the past 15 years and to emphasize their consistency. And in many situations, that's laudable. In many situations, yes, that's great. We want that sort of consistency. That's a very praiseworthy approach. I'm not sure it's a virtue here. At the risk of stating the obvious, okay, this has been in place for 15 years, the 75-25 weighting. That takes us back to 2006. I think we can all agree that things have changed substantially since 2006. Obviously overall, but as it relates to this appeal in the economic landscape regarding investor-owned utilities. So I don't think it's a virtue to be extolled in this case. I think what this is showing is that the 75-25 weighting is an outdated practice. It must be questioned, scrutinized, and it must be changed in the context of this case. Without, addressing it, it just becomes sort of an arbitrary thing. Well, this is how we've always done it. Well, what about this year? What about the situation my client is in this year? What about their property this year? What about the unprecedented nature of what we're seeing now? Don't talk to me about what's happening in 2006. Tell me how you've made the adjustment. And I think everybody recognizes an adjustment's going to need to be made at some point. Again, today is that day. So, as I said, it should probably be 75-25 income versus cost, or maybe we should just go with income entirely. But the bottom line is, according to Rule 8, greater weight should be given to income than to cost. So that's our point on the weighting. So the next point is the claims liabilities, the wildfire claims liabilities, and the expenses associated with that. So staff objects to a reduction for 2017 and 2018 wildfire claims liabilities that total $3.6 billion. The first objection is that these are past expenses and therefore contrary to Rule 8, which seeks to capture either, depending on the specific approach you use, current year cash flow or a future income stream. But the problem with this is that the premise is flawed. The events giving rise to these expenses are in the past, of course, 2017, 2018, yes, we agree. But the expenses themselves are forward-looking expenses, they're future expenses. Claims and settlements will increase and will be paid in the future. the current estimate of liabilities that's been accrued over a 4-year period and expected to be paid over a 5-year period exceeds $5 billion. This is the amount after insurance recoveries. So these are clearly forward-looking expenses. I don't think that's controversial. Just as it's not controversial that the events giving rise were in 2017 to 2018, no one can dispute that these are future expenses. So not quite sure what else to say on that. The second point that staff has is they say that the expenses are non-recurring. And that's just wrong as well. As we mentioned last year, I guess first of all, there's nothing that says that the expenses need to be recurring, but leaving that aside, I think it's a gross understatement to say that most people would disagree. The scientific community, the business community, the appraisal community would disagree that future wildfire-related expenses will be non-recurring. I don't think any reasonably prudent business person would ever accept this, and it would factor in the cost of continued claims in purchasing the property. Let's think of it this way. If you are going to buy an investor-owned public utility and its assets, what would you tell the seller if the seller stated the wildfires and related claims are one-offs? They're not going to happen again. That we just don't know. You know, it's uncertain. And I'm really not sure. I understand staff's position on this because they've kind of bounced back and forth. They've said that they believe that the wildfire crisis is here to stay. Well, if you believe the wildfire crisis is here to stay, how can you not believe that the related expenses are here to stay? So they're not one-offs, obviously. I guess the other point is that claims such as these that haven't been paid yet but are attached to the property are past expenses that don't need to be considered in the purchase price. This is public utility property. It's heavily regulated. The property cannot be sold separate from the liabilities. You can't do it. So staff's position that these expenses are non-recurring runs counter to, I think, not only appraisal theory, but the public discourse in this area, the scientific discourse in this area, the business discourse in this area. So that's our point with respect to the claims liabilities. The capital expenditures, let's move to that issue. So the capital expenditures, okay, so we'll just back up a second. The historical cost indicator, all right, by definition, it's all about rate base, okay? Rate base is what is used to compute the allowable return for investor-owned utilities. We don't get to earn a return on these capital expenditures. This is undisputed. We do not get to earn a return on these expenditures. As for the return, there was this discussion, I don't know if you remember last year, between return on and return of. Staff agrees we don't get a return on. Okay, so we're in agreement on that. Staff is saying, though, that we get a recovery of the investment, a return of the investment. And that's just not accurate. That's just not correct. In the rate-based context, recovery means depreciation. We are not allowed to include depreciation expense on these assets and our cost of recovery for purposes of rate making. So there is no return of or recovery of property. So, so I think that's really an important point to remember, because it's not about whether these assets have value in the abstract. It's about what are we including in the historical cost indicator. The historical cost indicator includes certain items per established appraisal practice, just like the income indicator includes certain items per established appraisal practice. So staff says at one point that, well, these assets have value, and by not including them in HCLD, that we're somehow asking for an exemption. Nothing could be further from the truth. That logic is just, it's so fundamentally flawed. The idea that we're asking for an exemption, again, it's about what is included in the historical cost indicator. If the historical cost indicator is all about rate base, then we don't include items that we don't earn a return on. That's it. It's just that simple. Just as you would say, well, you know, did staff give us an exemption by not including the capital expenditures in the income approach? Of course not. Of course they didn't give us an exemption. What they did was they recognized that Those items don't belong in the income indicator, so they didn't include it. So there's no exemption taking place here. That was something that the hearing summary seemed to underscore for some unknown reason, and I just need to correct the record. No exemption. There's absolutely no, we're not seeking an exemption of assets. We're asking for the historical cost indicator to be applied properly. If we were looking at some other indicator, maybe these assets should be included. Replacement cost, reproduction cost, perhaps some recognition of those assets would be appropriate, but not here. Okay, a wildfire insurance fund. Quite simply, SAPD should have allowed Edison to annualize its initial contribution to the wildfire insurance fund, just as the assessor's handbook directs. You can see a lot of references back to the assessor's handbook, a lot of references to the rules. That's what we want. We want an appraisal and evaluation consistent with the law, consistent with this board's own practice and its guidance to its auditors. Staff says for its part that the wildfire insurance contribution was before the lien date, so it doesn't need to include it. The problem with this is, and it's a problem recognized in the assessor's handbook, under a direct capitalization approach, to get to a stabilized income to be capitalized, we annualize expenses to minimize fluctuation between different years, different tax years. So the value doesn't just go up and doesn't just go down. We normalize assets from an appraisal standpoint to make sure that there's no distortion in the value from year to year. And then staff in the briefing and the hearing summary again talks about how we amortize these expenses. I want us to pay close attention to this discussion of amortization, because that's not, we're talking about different things entirely. They cite to Deleuze Homes, which talks about capital assets being amortized. That's not what we have here. Here we have a spreading of expenses over years to stabilize the income. That's not, that doesn't, just because we're doing that doesn't preclude the item from being included, from being reflected in the current year operating expenses. So we're talking about an annualization of expenses. That's it, and that's how it's reflected on my client's audited financial statements. Then we come to the next objection, and it's again sort of a theme that we keep seeing over and over again. Staff says that we haven't established that these expenses are recurring. And I think that the disconnect here is that staff is arguing that we need to have an exact replica of the AB 1054 initial contribution, an exact duplicate, in order for this insurance expense to be treated as recurring. And that's not the case. I mean, we talked about this last year, you saw it in the briefing. The initial contribution is an insurance expense. And I disagree with staff. I think that's an important point. Staff says, well, it's not really important whether it's insurance. Yes, it is important. The reason it's important is because if it's insurance, then it is characterized as insurance. It's an insurance expense. And so we know that insurance expense is going to be a continuing item of expenditure for Southern California Edison. Whether it's government insurance, like we have here, whether it's private insurance, which would be much more expensive, by the way. We know that, significantly more expensive. We know that that expense is going to need to take place. That is just, I don't know any other way to say it. It's an insurance expense. The fact that it's not, the fact that an exact replica of an AB 1054 initial contribution is not on the horizon doesn't mean that this isn't an insurance expense that we should anticipate going forward. I mean, this is somewhat elementary. I mean, analysts like Morgan Stanley have published reports warning of the recurring nature of wildfire-related expenses, insurance expenses, the possible depletion of the wildfire insurance fund, which is even more of a reality now because we know that PG&E will be making the first claim to the wildfire insurance fund as a result of the Dixie Fire that was well documented in early November by major media outlets. So these are recurring expenses, members of the board. I don't think the proper way to look at this is the way that staff is looking at it. I understand their point, but these are insurance expenses. They're ongoing, they're continuing. If it's not the initial contribution, then it would have been something else. So that is that concludes our point on the insurance piece. So members of the board, to wind up here, please keep in mind the big picture of what's taking place here. The ongoing wildfire crisis, all the attendant risks, all the related expenses have made Edison's property worth less. And yes, it's the property we're talking about here. Because they're income producing assets, they should be valued using an income approach. Less income equals less value. It's as simple as that. If this board were to value Edison's property using the income approach, or primarily using the income approach, we probably wouldn't be here. But SAPD is unwilling to even think about changing this 2006 weighting approach, and is unwilling to allow us the straightforward, reasonable adjustments we've requested and to which we are legally entitled. This is wrong, and it's contrary to established appraisal standards. This board stated again last year that these issues raised by Edison were worthy of continued study, monitoring, subsequent adjustments. Since then, the ongoing events have confirmed that these adjustments should be made. For all these reasons, we respectfully request that the petition be granted. Thank you.
Thank you. We will now go to the State Assessed Property Division for their presentation. Is Mr. Moon available? You have 40 minutes, Mr. Moon.
I am. Good morning, members of the board. This is Richard Moon with the State Assessed Properties Division. And with me are Jack Cole, Chief of State Assessed Properties, and Daniel Jenkinson, one of our appraisers. Before I begin, we do agree with Edison that these are important issues regarding wildfires. And as the board requested last year, and even prior to last year, these are issues that are that we are looking at on an ongoing basis. Where we disagree is that this is the year or that enough evidence has been presented that this is the year where we should change the weighting. And either on our time after our initial presentation or on the Q&A, Jack McCool, our chief, would be happy to address some of the things that we've been doing to look at this issue. However, I would like to start giving the board an overall picture and then work our way down into the specific issues. So after last year's appeal, the board adopted a value of $28.4 billion. This year, petitioner added about $5 billion of property, but are requesting a unitary value of $25.6 billion. In other words, even though they added $5 billion of property this year, they're asking for a $3 billion reduction. Although petitioner likely believes that last year's value was too high, it was adopted by the board after a hearing where the board heard all arguments and denied petitioner's requests. Unsatisfied with the board's decision, petitioner is back this year with essentially the same issues and arguments as last year. The board should therefore reach the same result and deny the petition. Petitioner asserts that staff has not taken into account general wildfire risks and that staff is not following its own guidance in recommending denial of their specific issues. But as we will explain, petitioner misreads or misunderstands the rules in the assessor's handbooks and has not presented persuasive evidence on any of the issues. In fact, as we will explain, CPUC documents, petitioner's own statements, public filings, and its own appraisal report performed by EY last year supports staff's position on each of the issues. In doing its assessments, SAPD took all of the relevant information into account and appropriately computed and reconciled an HCLD and an income or CEA indicator of value. Rule 8 and the assessor's handbook fully support staff's position. Specifically, Rule 8 says the income method is preferred when the cost approach is unreliable. Here, HCLD is not unreliable. It is most reliable because the HCLD indicator of value begins with the actual assets on which PUC allows petitioner to earn a return. Thus, staff weighed it more heavily than the income indicator. Petitioner accuses staff of having no analytical reasons for its weighting. However, the only reason petitioner gives for its preferred weighting is that the HCLD is higher than the CEA. They simply conclude without evidence that this difference is obsolescence due to wildfire risk and that the CEA must be given more weight. But there's nothing that makes it necessarily true that a difference between HCLD and CEA is always obsolescence. And this is recognized by the assessor's handbook, which says that a difference might indicate HCLD is too high. It is, of course, entirely possible that the CEA is too low. We believe the difference is due primarily to regulatory lag, and following the guidance given in the Assessor's Handbook and using appraiser judgment, we weighed the income approach 25% and HCLD 75%. Additionally, to the extent that a difference between CEA and HCLD might be due to obsolescence, an adjustment has been made for obsolescence by allowing an increase to petitioner's rate of return. Petitioner first made this increase request to PUC to specifically cover their wildfire risk. And again, PUC rejected that request in large part because it believed AB 1054 mitigated much of petitioner's risk, including from inverse condemnation and lower credit ratings. However, staff allowed that adjustment, and it amounted to about $1.9 billion in 2020, and even by petitioner's count, about $1.8 billion in 2021. Staff believes this covers all appropriate obsolescence adjustments for general wildfire risks. In this appeal, after telling the PUC the adjustment would cover their risk, they are essentially telling the board that actually it does not. However, if petitioner believes that a greater weighting of the CEA indicator is necessary to cover obsolescence, they need to show us specific reasons why that's the case. And in the future, as always, if they were to present such evidence, we'd be happy to take a look to see if an adjustment should be made. On petitioner's issue regarding their 2017-2018 wildfire liability lawsuit settlements, they're requesting a $3.6 billion reduction to its board-adopted value for these lawsuit liabilities that are accrued on its books. This liability, however, is not deductible because it is not an ordinary expense, one that is expected to be paid in the future to maintain or operate the property. This $3.6 billion accrual is an estimate of expected lawsuit settlements stemming from the 1718 wildfires and mudslides, some of which may have been started by petitioner's equipment and damaged property owned by others. This is important because it means that these liabilities may affect the price someone would pay for the entire company, i.e. the entire business, sometimes referred to as a going concern, but it does not affect the value of the taxable property. And what is being appraised is the taxable property. The requirement to tax only the property is fully supported by the Assessor's Handbook, the property tax rules, judicial decisions, and generally accepted appraisal practice. Rule 3D states that if income from the property is regulated by law and the regulatory agency uses historical costs as a rate base, the amount invested in the property shall be considered by the appraiser. Rule 8A says the income approach to value is used in conjunction with other approaches when the property under appraisal is purchased in anticipation of money income. Rule 8C says that the income to be capitalized is the net return that buyers and sellers may anticipate on the valuation date that the taxable property existing on that date will yield under prudent management. Petitioner states in its filings that because state assessment is done on a unitary basis, business value or going concern value must be considered rather than the value of the taxable property. This is incorrect. Rules 3 and 8, which allow taxation of only the property, also apply to unitary taxation. The Assessor's Handbook explains what going concern value means in the unitary property tax context. It says, where the unit principal valuation is used, it has been said that the assessable property is valued as a going concern. This means only that the taxable property of the business should be valued as if put to beneficial or productive use. It does not mean that the entire value of the business can be assessed or that the going concern value is assessable. A simple example will illustrate why this is. If I own a business and get into an accident in my delivery vehicle, causing damage to the vehicle and also damage to someone else, for which I settle a potential lawsuit for $100,000. The price someone may pay me to purchase my business is reduced by $100,000 since the prospective purchaser must take on that liability. But the lawsuit settlement does not reduce the price a prospective purchaser of my vehicle would pay because it does not affect the vehicle's ability to operate as a vehicle. That is essentially the situation here. Petitioner used its property and damage was done to it, and petitioner estimates it also needs to pay $3.6 billion of damage that was done to property owned by others. That $3.6 billion is therefore a liability that may reduce the price a prospective purchaser might be willing to pay for the entire business, but it does not affect the price a prospective purchaser would pay for the taxable property because it does not affect the property's ability to be used to generate income. Petitioner is essentially asking the board to make a $3.6 billion reduction to its taxable property for damage done to someone else's property. Petitioner's own documents admit that any expense related to this liability affects the price of the entire business, not the taxable assets. The EY report on which it relies states it is reasonable to assume that a prospective buyer would consider this expense as part of the going concern of the business operations. And it does not matter when they actually pay out the liability, whether yesterday, today, or in the future. Payment of this lawsuit liability does not affect the taxable value of the property because it does not affect the property's ability to be used for its intended purpose. Petitioner also asserts that this liability should be allowed as an expense because it is not debt, by which we assume they mean in the nature of borrowing debt or a mortgage, but that is not the standard. The standard is appraisal of the taxable property, not the business as a going concern. In the same way that a mortgage on a house does not reduce the market value of the house, this lawsuit liability does not reduce the value of petitioner's taxable property. The next issue they raise is their wildfire mitigation capital expenditures. AB 1054 requires petitioner to spend about $1.6 billion on those capital expenditures for which they are allowed to earn no equity return. Petitioner has spent about $1.3 billion of that amount. It makes much of the fact that there's no amount for this investment in rate base and that these assets are financed through bonds issued by a special purpose entity that it owns. But the statutes are clear. They only prohibit petitioner from earning a return on that investment, which is reflected in the equity portion of their rate base. They do not prohibit earning a return of its investment, which is reflected in its recovery of amounts spent. And in their opening presentation, petitioner acknowledges as much. In its 10-K filing, it says the same thing. It says that this expenditure cannot be included in the equity portion of its rate base, but also that SCE expects to seek orders from the PUC to finance the remaining AB 1054 capital expenditures. In other words, what they're saying is that they are prohibited from earning a return on these expenditures, but they will seek a return of this investment through a CPUC financing order. Petitioner has applied for and PUC has approved a financing order for the first approximately $340 million. That financing order also makes very clear that the financing mechanism is for the purpose of recovering petitioner's costs for the capital expenditure. It states in its conclusions of law, SCE should be authorized to use the bond proceeds to reimburse itself for the CapEx. It also says that the capital expenditures at issue are recovery costs under the Public Utilities Code, which means costs spent for these capital expenditures. Thus, while petitioner points to the financing mechanism as the reason why these assets are not taxable, the financing mechanism is exactly how AB 1054 allows petitioner to recover its investment. It allows recovery of these costs through the financing mechanism rather than through rate base, because that reduces the ultimate cost borne by ratepayers. In other words, CPUC, through the approval of the financing order, has said, even though petitioner cannot earn an equity return on this expenditure, it can get its money back. But the way it gets its money back is not through rate base, but through this financing mechanism. Again, petitioner itself acknowledges this in its EY report, which says the securitization framework demonstrates a very different structure for SCE to get a return of their investment, as opposed to the traditional utility financing mechanism via rate base. The EY report also states that proceeds from the special purpose entity will be transferred to SCE, at which point SCE will consider their initial $400 million investment repaid. Finally, it's telling that the PUC order also anticipates that property taxes may be paid on these amounts. stating that any applicable property tax associated with the capital expenditures excluded from SCE's equity rate base and recovered through the bonds are to be recovered. It is also important to take a step back and see big picture wise exactly what petitioner is asking the board to do. Simply put, it spent 1.3 billion on property in the last 2 years and is asking the board to assess it at zero because they are not allowed to earn an equity return on that investment, ignoring the fact that they are getting their money back. In contrast, SAPD appropriately removed the value of the property attributable to an equity return on the investment and included only the portion attributable to a return of the investment, consistent with statutes, PUC decisions, and sound appraisal theory. The final issue raised by petitioner is the AB 1054 Wildfire Fund. As you know, AB 1054 sets up a fund from which petitioner can make claims against wildfire liabilities that exceed $1 billion or the amount of insurance coverage required to be maintained by AB 1054, whichever is greater. Funding will come from utilities as well as from ratepayers. For petitioner to participate in this fund, AB 1054 required a one-time contribution of $2.4 billion made in 2019 and 10 annual $95 million payments. The annual payments are expected each year, necessary to maintain and operate the property and thus allowed as an expense. Petitioner also has about $1 billion of wildfire-specific insurance coverage that kicks in before this fund can be used. That cost is also allowed. Petitioner insists that the initial contribution for this AB 1054 fund should also be allowed as an expense because it is for insurance. But the question of whether it is or is not insurance is a red herring. It is a distraction from the real point. While we do not believe this fund is best characterized as insurance for purposes of this discussion, we are fully willing to stipulate that it is. That does not make it deductible. This is because basic appraisal theory allows a deduction in the income approach for expected operating expenses necessary to maintain the property that are paid annually. In other words, a recurring cash expense. This initial contribution, however, is a one-time payment, never to be paid again. Petitioner itself acknowledges this, both in its opening statement and in its financial reports, identifying it as a non-core item. It defines non-core item as including income or loss from discontinued operations and income or loss from significant discrete items that management does not consider representative of ongoing earnings, such as income and expense related to changes in law. This is a perfect description of this payment. And so petitioner is telling the world that this amount will not be paid again, but is asking the board to treat it like it is. Because this is not a recurring cash expense, petitioner estimated the fund would last 10 years and calculated and amortized a future accounting expense over that time period. Thus, the initial contribution is not an allowable expense for property tax purposes because it is not part of cash flow and it will not be paid again. This is a fundamental tenet of appraisal practice and thus specifically disallowed as an expense under Rule 8. Although petitioner clearly admits this is a non-cash, extraordinary, amortized accounting expense, petitioner points to language in the assessor's handbook as supposedly supporting its position that this accounting expense can be deducted. However, when read properly in context and in conjunction with Rule 8, that language fully supports staff's position. The language to which petitioner points is referring to recurring prepaid amounts that represent future cash flows. That language says that certain expenditures are annualized when using a direct capitalization model. And a specific example given is of insurance prepaid for 3 years. A 3-year prepaid insurance amount should be annualized because there's an assumption that after the initial 3 years, there must be another outlay of cash that covers the next 3 years, and so on. This is because in a direct capitalization model, a single year of income is projected into the future in perpetuity. Thus, if the full amount of 3 years of recurring prepaid insurance is fully allowed as an expense in the year paid, it will distort the annual income calculation by front-loading the insurance expense into the first year. And then that distortion will be carried into perpetuity. To resolve this, recurring prepaid insurance is annualized. In contrast, it is undisputed that this single one-time AB 1054 contribution made in 2019 does not recur. Therefore, unlike the assessor's handbook example where you get a distortion of capitalizable income if you do not annualize the prepaid insurance, here you get a distortion of income if you do annualize the initial contribution. Because it will never be paid again, it is improper to allow it as an expense and then project that out into perpetuity as is done in a direct capitalization model. As it states in our Unitary Valuation Methods Handbook, non-recurring and non-operating expenses should be adjusted or deleted to eliminate revenue distortions and to reflect anticipated future operating expense. We also want to be very clear about what we are not asserting as much as what we are asserting. We are not asserting that wildfires are not a new normal or that some insurance type coverage in excess of petitioners' $1 billion ordinary wildfire specific insurance may be required after the expiration of the fund or to extend the fund. However, as of lien date 2021, the necessity and amount of any such cost is speculation. If an amount were probable and reasonably estimable, it would likely need to be disclosed in their financial statements. Instead, petitioner identifies the initial contribution as a non-core item. Another reason why the payment of another fund-like initial contribution is speculation at this point is because it is unknown how long this fund will last. Again, SCE itself acknowledges this. In 2019, they estimated the fund to last 10 years and also gave a scenario where the fund might last for 20 years. But this year, they changed that estimate to 15 years and will begin to amortize the initial contribution over 15 years in 2021. Yet another reason is that the entire purpose of AB 1054 was to reduce wildfire risk to utilities like petitioner. And thus far, it appears to be working. Petitioner itself states in its public filings, SCE expects that any losses incurred in connection with 2019-2020 wildfires will be covered by insurance and expect that any such losses after insurance recoveries will not be material. And the CPUC agrees. It stated, we find that the passage of AB 1054 and other investor supportive policies in California have mitigated wildfire exposure faced by California's utilities. It may be that more money will have to be paid into this fund or a similar fund, and staff is not saying that the exact AB 1054 $2.4 billion initial contribution needs to be recurring. But it's also, and it may be that some other type of fund may have to be started and contributed to. But it's also possible that no money or something far less than 2.4 billion will need to be contributed. The point is that as of the lien date, no one knows. The only thing that is known is that the initial contribution will not need to be paid again. In conclusion, SAPD has recommended all appropriate adjustments for petitioners' general and specific reductions related to wildfires, consistent with relevant authorities and petitioners' own public statements. Thus, making any of these adjustments would not only require violating generally accepted appraisal practice, it would require ignoring petitioners' own statements. And for these reasons, we recommend denying the petition on all issues. And as the appeals attorney requested, while we recommend denying the petition, we do want to be on record that any decision made by the board will not affect the rule correction approved by the board in September. That rule correction reduces the board adopted value by $196,800,000 for a final value of $31,125,300,000. And we would be happy to take any questions the board may have.
Thank you, Mr. Moon. Before we get into any questions from the members, I wanted to see, let's give Southern California Edison their rebuttal, an opportunity to rebut first. And I see Mr. Takajian here queuing up. Go ahead.
Thank you, Mr. Chairman. Appreciate it. We appreciate staff's presentation. I think there are a lot of points of correction here and redirection, but let's just start with the asset addition. Staff well knows that asset additions don't necessarily correlate to value increases. Otherwise, it would have given us a tax break in 2015 when we had a net asset decrease when we retired the Songs plant. But instead, we got a property tax increase in 2015. And as we showed you in the tables that we presented to the board last year, those two things don't always go together because of the regulatory lag and the regulated nature of these assets. So that's point number one. Staff, as you could tell, is spending a lot of time talking about general regulatory risk and CPUC and how they were generous in giving us risk premium adjustments. The risk premium is not before the board today. So that entire discussion on risk, we appreciate it, but it's not pertinent. We're talking about specific wildfire-related adjustments that are not addressed by a risk premium adjustment. We're talking about the CapEx, we're talking about the claims liabilities, and we're talking about the insurance premium. So any discussion on risk premium needs to bear that in mind. That is not a disputed issue this year. With respect to the different evaluation approaches and the weighting, staff says that the cost indicator is reliable. We couldn't disagree more. The cost indicator is $7 billion higher than the income indicator. Okay, so let's just use the income indicator. If we do that, we don't have a problem. Let's just use the income indicator. Is there something wrong with it? There's nothing wrong with it. Rule 8 says it's the preferred approach when you have older assets, obsolescence, and regulated income, or it's legal restrictions on income, I should say. So let's just use the income approach. What's wrong with it? What's wrong with the income approach? It's their indicator. Let's use it. $7 billion apart. That's problematic on its face. In terms of the claims liabilities, so I can appreciate Mr. Moon's analogy. It falls apart. We're talking about strict liability here. We're not talking about negligence or between private parties. This is what it's come to. We're talking about assets in a regulated environment that cannot be separated from the liabilities. It just can't happen. You can't go to CPUC and say, I'm going to buy Edison's property without taking on the liabilities. The CPUC would never allow that. So to compare it, I think, to a car crash of a business in a negligence context, that is inapplicable entirely. And again, we're talking about strict liability. No matter what Edison does with respect to these 2017, 2018 claims, they're on the hook. They're on the hook. There's no negligence analysis. There's no prudency analysis. There's none of that with respect to the 2017, 2018 claims. And we're talking about going concern value. Yes, Mr. Moon is correct. We're not talking about the value of the business, but we are supposed to look at the operating assets as a going concern and not separately. So when we say going concern, that's what we're referring to. I apologize if there's been any confusion on that point. With respect to equating the claims liabilities to a mortgage, again, this is what it's come to. We're talking about a mortgage and mortgage liabilities and depreciating a capital asset. What does that have to do with claims liabilities? Nothing. So with respect to the capital expenditures, yes, with respect to the capital expenditures, there's been a lot of discussion about securitization. We didn't raise it. That was asked of us sort of in the context of how this all worked. We explained it, but the bottom line in all this is we can't earn on these assets and we don't recover them. We don't get to depreciate these assets. So it's not allowed, the depreciation is not allowed as an expense in a regulatory environment. So there's no recovery of the asset. That's what recovery of means in a regulatory context. So we can talk all day long about financing mechanisms and securitization. We can do it, but at the end of the day, it's not included in rate base. It should come out of HCLD. So, you know, hopefully that clarifies that. I would like Ms. Wood to address something in a moment for us. But I would note that it appears that staff is ready to stipulate that the initial contributions and insurance expense. I'm glad we've made progress on that front. If that's the case, then it's indistinguishable really from the ongoing insurance costs and insurance expenses that Edison has. It happens to be an initial contribution. That's what it's called. It would be like having government insurance and then having to fill the void with private insurance once, government insurance is no longer available or no longer needed, but it's all insurance. So I'm glad that they agree that it's insurance, and hopefully we can achieve an adjustment here today on that point. But I would like to ask Ms. Wood to comment on the discussion on core versus non-core expenses as it relates to the public filings.
Sure, Marty, but before I start, I think Ted has his hand up.
We're going to try to hold the questions until after the rebuttals. I want to give you the opportunity as well as Mr. Moon, if that's okay.
Okay. All right. Yeah, no, I wanted to comment about the core versus non-core discussion because, primarily the reason why, core versus non-core is not really a gap, general accepted accounting principles type of concept. It's really to give the analysts a view as to what's happening with the core business being the utility. And in this case, the AB 1054, when they established the Wildfire Fund, which is administered by the California Earthquake Authority, again, another agency that was designed to provide insurance to folks that couldn't otherwise get insurance. That upfront contribution is really prepaid insurance, and prepaid insurance that if you put the upfront contribution and the annual, contributions that we're going to make over a 10-year period, you add them all together and then amortize them over the period of time that we're perceived to have coverage. That's about a $350 million a year cost for the insurance. And that's pretty similar to what we're paying in the open market for the $1 billion of insurance coverage that we're having to pay in order to participate in the fund. But going back to the core non-core, the reason why it was described as non-core is because it's not recoverable from ratepayers. It's a shareholder expense, which means that it doesn't go into our rates and we can't recover it. And so that's described by the law itself. So it's not that we chose to describe it as a one-time non-recurring expense. It's really prepaid insurance that's really designed to give us coverage over the 10-year period.
So, we'll keep it tight on the rebuttal. You've heard our arguments before. We believe that these are recurring expenses as it relates to the claims expenses, as it relates to the insurance expense. We believe that the CapEx should come out of HCLD because we can't earn on it. We can't recover it in the regulatory sense. We think the weighting is off. It should probably be flipped. We should be giving much more weight to the income approach than to historical cost. And I think that pretty much sums it up, members. I know that you're eager to ask questions, and we're here to the extent that you have any.
Thank you. Before we get into questions, let me just give Mr. Moon his opportunity for a rebuttal, and then I see a hand up from Member Gaines and then from Controller Yee, and then even Vice Chair Schaefer.
Mr. Chair.
Yes,
Chair,
did you have something else to add?
I just wanted to add one thing, which is that in the board's rules of practice, historically, and I don't know if there's a desire by the board to deviate from that today, the taxpayer gets the last word. We are the ones that get the rebuttal. So as long as we have an opportunity to respond to whatever Mr. Moon says, then that would be, I think, fair and reasonable, consistent with board practices.
Mr. Chair, if I could just jump in, Mr. Dekazian is correct. That is the procedure for our rules of tax appeals, and we are happy to defer any further comment on Q&A.
Okay. So with that, let me start with Member Gaines, and then we'll go to Controller Yee and then Vice Chair Schaefer. Go ahead, Member Gaines.
Yeah, thank you very much for the presentation and for trying to provide some clarity on a very complicated issue. But I think it comes down to how do you handle expenses, and whether that is insurance, and that's the kind of the area I'd like to focus on right now, is we had Andrea Wood explain that the initial payment made to set up the insurance fund was really a form of prepaid insurance. And so when I think of that, and I think of the earthquake fund that was set up by the state of California, that has provided a lot of benefits for California property owners, I see a correlation that looks to me that, you know, this prepaid insurance should be considered like a down payment on insurance. And, you know, in my view, when we take a look at the wildfire exposure, I'm not seeing that we've done anything dramatically differently from a policy perspective in terms of changing the threat. And are we seeing our forest managed better? You know, if so, it's maybe 1/10 of 1% or maybe 1% of our forests. So we haven't addressed the issue. We have not addressed the exposure as it lies for wildfire in the state of California. So I think this exposure is going to continue, and I don't understand why that initial payment cannot be allowed as an expense. Certainly, if we have another catastrophic wildfire and the fund is drained, all the utilities are going to be asked to pump more money into the fund. And so just seems to me that ought to be treated as an expense. It's a shareholder expense, not borne by the ratepayers. And so I guess that would be point number one. In terms of regulatory lag, I'm wondering if, Mr. Moon, I'd like you to respond to that in terms of my thoughts on the prepaid insurance aspect. And then I'd also like you to, if you could provide a explanation of regulatory lag. So I think I know what they're talking about, but I'd like clarity on exactly what you mean by that. And then thirdly, maybe a more in-depth explanation of AB 1054.
Do you want me to respond?
I'm just writing down all of your points so that I don't miss anything. If you just could give me just 5 seconds.
Sure. So initial.
So the first
insurance. Yeah.
Yeah, the first issue was on the prepaid insurance, and the issue here, Mr. Gaines, is not whether it is or is not insurance. The issue is whether this type of insurance is going to need to be paid again. The $95 million annual payment will need to be paid again because it's annual. The initial contribution, however, has been paid in 2019, and as far as anybody knows right now, that will not need to be paid again. So this AB 1054 wildfire fund, and perhaps this starts getting into your third question, what it does is it sets up this fund and it allows the utilities to access this fund for prudent operation of their equipment for claims in excess of $1 billion or whatever insurance coverage is required by AB 1054. So this is an insurance amount, if you want to call it that, above their wildfire specific $1 billion of coverage. Mm-hmm. And what staff is saying is that the initial contribution for that additional coverage is not going to need to get paid again, or at least as of the lien date, it's speculation whether that will happen. And again, staff is not saying that wildfires will not get worse or will not affect taxpayer. But what we are saying is nobody knows and nobody can estimate what that amount might be. So Edison itself has varying estimates for the length of the fund. AB 1054 does not have a length of the fund. And with all due respect, the PUC would disagree with you because they have said that AB 1054 has mitigated a lot of the wildfire, if not sort of the physical things that are done to stop wildfires, but at least mitigated wildfire risk exposure for Edison. The regulatory lag is essentially a timing difference between capital assets that are in HCLD but are not yet in CEA. So in other words, they are being taxed on them because they're being included in HCLD, but they cannot yet earn on them because those assets have not been taken up in petitioner's next rate case. And so we weight the income indicator in order to account for that lag. And Mr. Jenkinson, I think, has some more to say about that.
Okay. I think you said everything, Richard. Actually, thank you. But I did want to say, when it comes to the discrepancy between the two indicators, petitioner did say in their petition that it can take up 2 to 4 years for them to start earning on certain assets. And that can be a substantial amount. And so to say that those discrepancies, this discrepancy of $7 billion couldn't be accounted for based on the regulatory lag, I don't know that makes a whole lot of sense. It very much could be. That difference could very much be accounted for. In the appeals conference, we did suggest to petitioner that we work together and try to actually calculate what this regulatory lag amount represents. We presented that, and I specifically told them that we would be willing to look at any information that they provide, and at the time they weren't interested in pursuing that. So I just want to say that when it comes to that difference, we very much want to not just randomly change percentages, but to actually look into that and figure out what that difference is attributed to, if petitioner is willing to provide us the information to do so.
Yeah, and if I could just jump in, I would like to mention that was stated at the appeals conference, and I don't believe that that's because SE does not want to provide the information or that they're being uncooperative. I think it's because that they felt that wasn't the appropriate time to do that. And if they feel that they want to, this is an avenue that they want to pursue, as Mr. Jenkinson had said, we are more than happy to look at whatever information they might want to provide. And then finally, with respect to a little bit more detail on AB 1054, some of the things that AB 1054 did, you've heard about the wildfire mitigation capital expenditure. So there was a required expenditure from the investor-owned utilities to harden their assets to try to avoid wildfires in the future. There was this fund set up, and essentially the overall goal of AB 1054 was to ensure that the credit markets were stable for the utilities, and addressing many of these risks for wildfires.
Okay, yeah, maybe I could correct my statement on AB 1054, because I think what you stated is accurate in terms of it helping utilities. But my point is that these improvements in terms of hardening and things of that nature will take decades. It's not going to happen quickly. And in terms of forest management practices, I'm not seeing any dramatic change in terms of how we are protecting communities. And I think last year is a good example when you look at almost, what was it, over 2 million acres burned in the state of California from wildfire. So in terms of the regulatory lag as it relates to HCLD, historical versus CEA earnings related, does that change on an annual basis based on the obsolescence of utility equipment?
Mr. Jenkinson can give you more details, but I believe any amount of regulatory lag could change depending on what assets are added that are not included in the rate base.
Okay.
Yeah,
and
yeah.
That changed in the last year? That ratio change?
Well, so we don't actually know. If you look at the entire assets that are on the balance sheet, we don't know, which of those are actually included in the rate case or not. I think it's a process, and we're not experts in rate cases. But rate cases happen every, say, 3 years. But I think that, like, between the 3 year, during the 3 year period, there can be requests for additional assets to be added, I believe. And obviously petitioner can explain that better than we can. But it can happen probably annually if they're continuing to add assets that were somehow already included in the rate case.
Okay, if I could hear from the petitioner, Mr. Dicasian.
You're muted, though. Oh, here we go.
Sorry about that. Thank you, Mr. Chairman. Board Member Gaines, thank you very much. So, a couple of comments with respect to the regulatory lag. I understand staff has a difficult job, but I don't think they can quite put their finger on what the difference is between the income and cost indicators. Mr. Jenkins indicated that it could be regulatory lag, but that they don't know. And I think that when you're talking about a difference of this magnitude, that we should know more. We should have a better idea of what that is, instead of just saying it could be regulatory lag and leaving it at that. I'm not trying to impugn anybody. I'm just saying that I want you to understand our perspective on that. And similarly, we're not opposed to working with staff. We've tried to work with staff, obviously, throughout the valuation season. We did have a meeting at the appeals conference. I'm glad Mr. Moon understood the spirit in which we were there. We were trying to resolve issues, but we did not think it was appropriate a month out from the hearing to try and introduce new evidence, and I don't think the board's rules would even allow for that necessarily. But be that as it may, let's talk about the insurance piece. So what I heard Mr. Moon say, and correct me if I didn't get this right, but what I heard him say is that this type of insurance will not be paid again. I think the analogy to the earthquake fund is spot on, Board Member Gaines. I mean, it would be as though you made a payment under the insurance fund, the earthquake fund, and then you got private insurance at some other point, or you made another payment to try and insure your losses, protect against liability in the future. It's all under the rubric of insurance. And I think that's the fundamental disagreement we have with staff. I think they want to read the idea of a recurring expense, I think, really too narrowly. They want to say this particular type of insurance payment won't be made again. And I don't think that matters. I think that if that payment isn't made, then what's going to happen? I mean, if Edison's going to have to make some insurance payment, they're going to have exposure. They're going to have to make either a public insurance payment if there's another requirement that they do so, or they're going to need to buy private insurance. So I think that's really the heart of the matter. We think that insurance expense is recurring. And I don't think there's anything in the rules or appraisal methodology. These amounts will need to be paid again. Let's put it that way. These amounts will need to be paid again, whether they're through public insurance or private insurance. Mm-hmm. And as far as, if you have any other specific questions, I can leave it there.
No, that's great. Thank you. I appreciate it. But I still feel like that initial payment for the insurance fund that was set up should be considered a prepaid insurance and therefore a shareholder expense. So,
Mr. Gaines, may I just add one more thing, if you don't mind?
Sure.
When it comes to that concept, something actually last year that I had brought up relating to this is that our income model is based on forward-looking cash flows, right? And so the idea there is that an investor, that's what they're interested in. They're interested in cash flows. The amortization may come through and from an income tax perspective, maybe lower their taxable income, give them a benefit that way. But really, what they care about is, what am I going to pay for this business, and what am I going to earn based on the forward-looking cash flows of the business? No matter what they paid prior to that, the investor doesn't really care. He cares about the income stream, or he or she cares about the income stream, not the $2 billion that was paid prior to the purchase. So that's just please keep that in mind, that it's a cash flow model, and that's another reason why we wouldn't include it.
If I was buying a business though, and there was an initial payment, a large one, because of a new exposure, I would take that into consideration on the purchase price of the business based on that new exposure, which, you know, nobody can predict exactly how long that exposure goes out, but I would be, from a conservative fiscal standpoint, I would take that initial payment into consideration as a future expense, because no one knows exactly what the exposure is, and the fund could be drained, and then you'd have to figure out how you're going to come up with that capital to fund that insurance vehicle again.
Board Member Gaines, just to put a button on this, Ms. Wood has something to say about the point Mr. Jenkinson just made about cash and future incomes and so forth. Would it be okay if she made a quick point on that?
Yes, please. And then I'm done. Thank you.
Well, I agree with you, Member Gaines, absolutely. As far as the cash argument goes, I think that we need to level set each other. The SAPD and ourselves, because they use the cash payment argument in the context of the insurance. Oh, we paid it already, so it doesn't need to be taken into account, even though it gives us coverage over a 10-year period. Yet when we accrue the liability for the claims, those amounts get paid out over, I think we're projecting they'll be paid out over a 5-year period. Mm-hmm. And the liability and the payment of the claims is completely ignored in our value. So I think we need to think about that argument a little bit.
Mm-hmm. Yeah, I agree.
Mr. Gaines, may I address that very briefly?
Yes, sure.
So in order for it to be any expense to be an ordinary expense and deductible, it needs to be cash flows, but that's a necessary but not sufficient condition. So in other words, just because it's cash flows doesn't mean that it's an ordinary expense that can be deducted. So in order to be deducted, that expense needs to be expected to be paid in the future, and it needs to be necessary to maintain and operate the property. And what we're saying is that for the lawsuit liability accruals, those are not going to, that liability does not affect the value of the taxable property.
Okay, very well. I disagree. Thank you.
Thank you. With that, let me go with Controller Yee, then we'll go to Vice Chair Schaefer, and then I do see another hand here pop up from Member Cohen. Go ahead, Mrs. Controller Yee.
Thank you, Mr. Chairman, and thank you to the petitioners for the presentation. And Mr. Takazin, you're right, these issues are very familiar. And, I think part of what's really difficult and challenging with this case is that we're seeing, obviously some real-time events that are happening that obviously are affecting our petitioner. And what I wanted to say first and foremost, I appreciate the staff being open to looking at a number of these issues going forward. But at the end of the day, there are appraisal principles and really practices that we have relied upon to get to the best opinion of the unitary value for the petitioner. And I say this because it probably more than any other time when we have done valuation work on the board, I think our relationship with the regulatory agency and with the legislature is very key with respect to how many of these mechanisms are defined, how they're applied, how they're going to be characterized, and how we embrace them and understand them for valuation purposes. And so I will just say that there's a lot more up in the air than there are resolution to that. This board is not a policymaking board from a legislative perspective. And so what we have to go on, frankly, is how the legislature has set these mechanisms up. We also need to look at the decisions that the PUC has made relative to these mechanisms as well. The issue about the initial contribution, I know, was an issue the last time, and just from an appraisal or from a valuation standpoint, the fact that this was the initial contribution is not is a non-ordinary expense. It was amortized, has been amortized. Just on its face, just suggests to me that there really isn't any room to look at how we look at any other ability to, deduct it from our various, value indicator calculations. And so to me, that was a point that I thought we had addressed last time. And so I wanted to just kind of move on from that. What didn't get a lot of attention, and I appreciate the staff really trying to look at the data that petitioner is bringing forth. Hopefully more will be forthcoming as we look at potential adjustments, but there were quite a few adjustments that were made during the 2021 process. And I just wanted to see if we could articulate those, because it does speak in part to some of the issues that have been raised today, but I didn't really hear kind of an articulation of the, I think 4 or 5 adjustments that have been made as part of the process that is included in the board adopted value. So maybe Mr. Moon or Mr. McColl, if maybe can walk through the yeah.
I think Mr. Jenkinson can walk through those from the appraisal narrative.
Okay.
Yes, ma'am. So there were 4 adjustments related to the wildfires. The first was that we added a 0.85% equity risk premium to the cap rate in the CEA. That actually reduced the value by $397 million.
Mr. Jenkinson, when you go through these, can you give a little bit of more color as to what led to the adjustment? Was it additional data that was provided? Was it? I just kind of want to get a sense of how these got before you.
Yes, ma'am. Yes, ma'am. So the additional equity risk premium, the 0.85%, was actually presented to the CPUC. SCE had requested that they add that to their equity rate. The CPUC said that they thought that the wildfire fund fully mitigated the risk, and so they denied it. Edison did bring it to us prior to the valuation last year, and we decided to incorporate it, and really because we wanted to make sure that we were mitigating all risk that was out there that potentially was not being taken care of by the fund. So we did allow that when the CPUC did not.
Okay, so you exceeded the CPUC's declaration about full mitigation.
Exactly, yeah. So that adjustment reduced the overall value by $397 million.
Okay.
This year, yeah. So also by increasing the equity premium, we essentially it inadvertently creates a reduction in the HCLD, essentially because it's the value. You can say that the assets are devalued. I guess they're actually producing a lower income stream than what we would expect with the higher cap rate. So at any rate, that reduction was $1.4 billion to overall value. When it comes to the capital expenditures, the $1.3 billion, all that we did was removed the essentially the value associated with an equity return. Just like last year, same exact calculation, and that was an overall reduction of $387 million. That was also presented to us by SCE a couple years ago. And so that's really where that came from. And then along with the wildfire fund, the annual contributions of $95 million, we considered that a normal operating expense. The only reason that we calculated it a little differently is because it had a defined 10-year life. So we couldn't put that into perpetuity in our CEA, but we did reduce the value by $148 million overall. So it ended up being about a $2.3 billion reduction to value for these 4 adjustments.
Got it. Okay. Great. Appreciate that. Sure. I guess, Mr. Chairman, what I would say is this is going to continue to be, I think, a work in progress with respect to just how we look at any potential changes and how we arrive at the unitary value for these types of entities. And I think, Member Gaines, as you talk about the examples of what would happen if, let's say, you're selling a business and the like, I don't know of a lot of businesses that look like this that are, frankly, where the income is regulated. And, I in some ways, to me, this seems like a little bit more of a easy reach with respect to how we treat these issues because they're kind of contained. They're contained from a regulatory perspective. They're contained from a legislative perspective in terms of just how they've responded to how we should look at some of the risks that the petitioner has taken on with the wildfires. But that's not to say it's an easy approach for us because now we're looking at using value indicators that we have traditionally applied to regulated public utilities that, at some point may have to be revisited. But I do think that the staff has made some sound, has really applied them in a sound way. And I just hope that we can kind of continue to have kind of this open conversation. I do think the concept of regulatory lag does gain some prominence because of what we are seeing happening in real time. And so to the extent that we can get our arms around how we look at that issue as it relates to valuation, I think makes some sense. But other than that, I think we're kind of at the mercy of the legislature and the CPUC. So those are just my comments. Thank you.
Could I respond real quickly? This is Member Gaines. I appreciate Controller Yee's comments, and I would agree that if we can focus on some of this regulatory lag, that could really provide some relief, because I think there is a lot of investment occurring right now in a very changing environment. So, thank you.
With that, let me have Vice Chair, and then we'll go to Member Cohen.
Unmuted. Yes. Thank you, Chair Vasquez. First, I want to commend our fine staff and the petitioner for all the time and effort that they've brought to this issue. I do have a question for both staff and petitioner. Before I get to that, I just want to mention that staff itself has said that we do sometimes are having staff problems in being able to attack an issue. We do have insurance consultants and experts out there that we can hire on a fee basis for, something that's big enough to warrant that, like trillion-dollar issues. And I'm sure we do have some slush funds that we can reach into with a phone call, for the public interest. So I'm glad to see that you're coming forward, and you're coming forward sooner rather than later, because time is money. There is a $6 billion discrepancy between the different methods used to assess the value of our assets under study here. Could staff explain why there's such a wide disparity between the numbers in relation to the weighting methods? Should it be closer than $6 billion? Can that be done without prejudice to either side? What is your response to that?
Yes, sir. I can explain that. So, like I had kind of mentioned before, in petitioner's appeal, they had noted that it could take 2 to 4 years to be able to start earning on capital investments that they make, right? And so if we look in the past few years, here, where do I have that here? I think it was somewhere around, just say the last 3 years, I think it was about, nine. So they spent $9 billion as an example in the past 3 years, right? And so if it takes 2 to 4 years to start earning on that, what that basically means is that the revenues that are hitting their income approach, the income approach model, aren't realizing revenues for those 9 billion, as like potentially some of them or all of them or whatever. So there's a substantial amount of revenue that isn't being earned on some of these assets and isn't being included in the CEA model, and therefore the CEA value is lower. And so what we're saying is let's calculate, and so the petitioner is saying that they believe, and no, Mr. DeCasian is correct, we have not verified this in any way. And so they believe that it's due to obsolescence because of the wildfires. And so what we're saying is, hey, let's let's look at the data, let's get the data, and let's calculate, you know, like what the regulatory lag amount is, and then we can see kind of where that's at and what portion of the regulatory lag makes up that difference. But it's definitely something that I think that we can really work on and maybe come to a resolution, hopefully, by looking at the numbers.
If I could just add very quickly, Mr. Schaefer, our guidance tells us that a difference between the two indicators in an ideal world would be very small. But in the real world, the value indicator differences are often large. Now, petitioner is stating that it's due to obsolescence because of wildfires, and we believe that it's mainly due to regulatory lag. And as Mr. Jenkinson had alluded to, you know, if we get the right information and we work together with SCE, we can figure out what that lag is at least a little bit more accurately. But what we have done is taking care of obsolescence with that 0.85% rate of return increase. So we believe that we have made an adjustment for obsolescence, and any other adjustment to bring those values closer, we would have to see specific reasons why that is.
Thank you. Member Cohen.
Okay.
Was Kezia, did you have a follow-up on that?
Well, I think Board Member Schaefer had asked for us to address the issue as well. We'll be brief so that.
Sure, go ahead.
Okay, so as to the $6 billion discrepancy, the fact that we're having this discussion, the fact that we're talking about regulatory lag and economic obsolescence, external obsolescence, suggests that ACLD is not reliable. The other point is that external obsolescence, it's not us saying it, it's the board's own handbook that's saying it. So we have this unexplained, basically what I think we can all agree on, we have an unexplained difference of $6 to $7 billion. And so we're saying that in that situation, we don't have a concern with respect to the income approach, and let's use that. So, and then I wanted to make one point with respect to something that board member you said, and I get where the board is. I get that you want to, you know, follow or be consistent with the legislature and be consistent with the CPUC. If we're going to be consistent with the legislature, they refer to these initial contributions as insurance, and let's treat it as such. Let's treat it as prepaid insurance. And if we want to be consistent with the CPUC, then let's not include something that they don't include in rate base in the HCLB indicator. And with that, thank you.
Thank you. Member Cohen.
Yes, thank you. Thank you very much. Good morning, everyone. I just wanted to state for the record that I really value the comments made by Member Gaines and Controller Yee. I think they're actually really spot on and timely. And, you know, Mr. Duquesne, I appreciate your opening remarks, kind of framing like how we got here, why we are here. And when I'm listening to the details from your presentation as well as Mr. Moon's presentation, I found the presentation just to be just incredibly informative. And Mr. Chair, I got an idea that I wanted to propose here, and maybe all the parties involved would be amenable to this, but maybe it's time for us to ask staff to conduct an analysis of appraisal theories for regulated utilities separate from the state assessed valuations that occurred in 2022. And by doing so, what we would be doing is proactively initiating the process to begin to address this issue. I'm talking about like a big picture issue, especially considering considering the impact of wildfires and climate change. And as a result of that analysis, we could then work together, maybe find a partner in the legislature to craft legislation and begin to move this conversation a little bit forward. Because, you know, Mr. Duquesne, your argument resonated like, hey, this is what you said last year. And we know that wildfires, well, I'm not a climate change denier and understand the impacts of a lot of the decisions that we've made on our planet, the global impacts, and do expect that wildfires will be around. And although we're talking about this in context to the petitioner, to specifically to Edison, this is an issue that I think, quite frankly, are going to that other large companies are going to be facing as well. And so the Board of Equalization should be providing some framework, some guidance, even if it's in the form of this analysis that will inform future legislation. I'm just looking for a way to suggest a path forward. So I don't want to go too far in my remarks, but looking for a pathway forward, and perhaps the Board of Equalization could ask the staff to conduct this analysis. So I will put that out there, and I look forward to your comments. Maybe the executive director could weigh in. I'd love to hear what Ms. Fleming's thoughts are.
Thank you. Let me just finish the questions. I see a hand coming back from our controller, Ms. Yee.
Thank you, Mr. Chairman. And thank you, Member Cohn, for the suggestions. I just want to make a note of caution that this board not veer beyond our jurisdiction. You know, this is a particularly unique state assessee where it's, you know, regulated by the Public Utilities Commission. It is it has a complicated it has a complex business that's now been complicated by what has been happening, particularly with the wildfires. It has been the subject of, along with other investor-owned utilities, the subject of a lot of legislative attention and action. And I guess what I would say is I want to be informed by what the legislature does, and I want to be informed by what the PUC does, but I do not want to do their job. And I feel like we're kind of crossing into that area. You know, our job here is to set the unitary value. And we have a body of law and guidance with which we do that. And the way that we do that effectively is to have our eyes and ears open about what is happening that has impact on our assessees in real time and otherwise. And so I just wanted to just put that note of caution out there. First of all, I don't think we have the bandwidth to do a lot more beyond that. And I have a lot of regard for our team and our staff that, you know, we don't do rate cases, we don't legislate, we're not insurance experts, but we can be informed by the actions that are taken by the other entities that have impact on the state assessee. And so I just wanted to kind of frame that a little bit, because I think within the jurisdiction of setting the unitary value, there are issues that we can look at and be informed by those entities. And which is why I thought also that the staff's initial opening around looking at the issue of regulatory lag makes sense. And that could have an impact in some respects on the valuation.
Thank you. I just had a comment, and maybe kind of ties into this, and it sounds like, you know, many of us are having a little bit frustrated with this, because we're kind of in a unique situation here, you know, given what's been going on, especially with these wildfires. Let me start with a question for staff real quick, and that is based on the staff's 75% reliance on HCLD and only 25% on the CEA. How did you adjust for obsolescence here, given the impact of climate and other restrictions and costs on the petitioner's operations?
Mr. Chair, so what we primarily did was relied on CPUC and what petitioner, the information that petitioner gave to CPUC. So Mr. Jenkinson had mentioned the increase in the rate of return that was specifically requested by petitioner of CPUC because of these wildfire risks. CPUC denied that, but we allowed it in case there were some obsolescence issues that perhaps we may have missed. And so we allowed that increased rate of return. And again, as Mr. Jenkinson had mentioned, that resulted in about a $1.8 billion reduction.
And along those lines, you know, they claim UN Property left $7 billion in their assessed value that is not in their rate base. How do we account for that?
Well, I think what I would say is that HCLD begins with rate base, and then some things are added or not. I think the $7 billion was referring to the difference between the two value indicators. And again, that difference, although in an ideal world is not ideal, it is often the case that it happens. And so again, our view of that difference is because of regulatory lag. Their view is because it's obsolescence. But we've taken care, we believe, of the obsolescence. We haven't seen any other evidence that additional obsolescence needs to be taken care of through that method. And we're happy in the future to look at the regulatory lag issue to see if we can close that gap.
Thank you. And let me just ask one question of the petitioner. What is your most compelling evidence to prove that a 65% HCLD and a 35% CA weigh on the indicators is necessary to reach the fair market value of your property, and why?
So thank you for the question, Mr. Chairman. I know that we have stated 65-35. That's in the context of what we would be willing to accept in terms of the overall value. Our position is clear on this. We've always stated that the income indicator should be given more weight than the cost indicator for all the reasons we've mentioned before. So as far as the evidence, the beyond what we've provided in the value setting season and staff, I mean, I'd just say, you know, this is the perfect case for application of the income approach. We have considerable physical depreciation. We have what the handbook says is more than likely economic obsolescence, and we have legal restrictions on income that are unrelated to cost. So that would be my answer there. Income all the way here. Cost is totally unreliable.
Thank you. I have a couple other questions, but you know what? Let me go back to Member Cohen, and then I'll try to see if I can kind of wrap this up.
Thank you very much. I just wanted to, I guess, agree with what Commissioner Yee was saying and maybe walk back the comments a little bit. I wasn't suggesting that we were stepping out of our lane and going over to the legislature and being that heavy-handed in the legislative process. But, you know, overall, I don't know if Brenda, you know, Fleming had any thoughts that she wanted to share with us about what I was proposing. I mean, I was just basically asking staff to conduct an analysis. I don't know what their staff load is. I don't know what, you know, about the projects. I have an idea about the calendar that, so I know that the springtime is pretty heavy, but, you know, we should probably start to think about this, this issue. So that's all I really have to say. Thank you.
Okay, seeing no other hands or comments up, let me just take a stab at this. It says, while I agree with the petitioner that the regulatory landscape has changed, you know, climate, wildfires, and other requirements have an impact on its operations and the use of their property, I am not sure that their request for such a significant change in the weighing of the indicators is completely justified. What we've been doing for the last 10 years should maybe should be changed, but 10% is a lot for a business this large. I may be open to partially granting something less than 10% because I think we need to test the waters and adjust the new landscape. I am very open to suggestions from the members and from staff, most importantly, what SAPD, please make a few or take a few minutes, I guess, to provide and think of what possible recommendations or partial adjustments people would be comfortable with. And I'm seeing a hand up from our Controller Yee, and I'm sure you have some thoughts given the history with this. Go ahead, Controller Yee.
Thank you, Mr. Chairman. I'm just going to say, I don't believe this is a case where it's like, how do you split the baby? There's no substantiation for any action, from my perspective. There's no substantiation to do any more, which is why I do think that certainly to what Member Cohen suggested and what I think Member Gaines has suggested about issues to look at going forward, we can't operate without data and information that substantiates where we're going to be landing on this valuation. And I really don't think this is a good precedent to set. But going forward, and let me just say, I wanted to add to Member Cohen's remarks, maybe to not add to the staff's workload. It would be nice when we actually have the hearing leading up to value setting, that perhaps that be a time that we can maybe do an inventory of issues that may seem ripe to take on for analysis. And that could be based on information you're getting from the assessees at that particular time. But I just think, coming up with a number that then, that brings us right back to this place next year about how we're going to set the value, because we don't have a basis for setting the value, is not helpful. Okay. Thank you.
I appreciate, one, your history and your comments on that. Well, let me see. There's well, I was going to ask the members, I guess, pretty much we're at a point now where we need to either grant the petitioner in full or partially grant the petition or deny the petition entirely based on the views and arguments and the evidence presented. What is the thoughts and ideas of the members? Well, I see a hand now coming up from Member Gaines. Go ahead, Member Gaines.
Yeah, thank you. I'm just wondering, can we have staff take a look at this historical versus earnings approach? I mean, is there, to what degree has the staff already looked at this issue? And to what degree could that be adjusted based on the arguments that were presented today? And I don't think we should come up with a particular number. I'm just wondering if we should look at it and figure out if we handle it in the right way in terms of the valuation.
Mr. Gaines, this is Richard Moon from the legal department. That is an issue that we do look at, and if you would like, Jack McCool, the chief of SAPD, can explain to you what SAPD did this year. And as we look at this issue next year, I think one of the areas where we would want to delve a little bit further, and it sounds like petitioner is fully on board with looking at it, is to see if a difference between the indicators is due to regulatory lag. And so hopefully with some information, we would be able to at least bridge the difference a little bit. But if you would like, Mr. McCool would be happy to fill you in on sort of our process each year and what we did this year.
Okay, I guess the question I have is, were the comments that were made by the petitioner such that staff would take a look at the concerns addressed with this allocation of 75-25 between the HCLD and the CEA?
Yeah, so the information that we look at and specifically going forward with petitioner and in general may inform a change in the weighting. And if that's the case, and if that's where the numbers and the information lead, we're more than happy to make that change.
Okay, so is that something that would be looked at based on direction of this board? Or are we talking about the next year?
Well, yeah, I think at this point we're talking about next year, and that's a process that we go through each year to review and make sure that the weightings are appropriate.
Okay. And how about the initial payment on the insurance? Is that just, are you just viewing that differently than the way I'm viewing it, and that there's no opportunity to reevaluate that, or?
Well, I actually think that we're not viewing it that differently. I think the effect of that, the way we're viewing the effect of that is different, but from a purely appraisal perspective, because that initial contribution is paid, there's no considering that as a future expense. And again, that doesn't mean that some other insurance type coverage may be required on top of their wildfire specific coverage, but at this point we don't know if it will, and if it will, we don't know how much. It would just be speculation as to a number.
Okay. And could we hear from through the chair, could we hear from the petitioner on this discussion?
Sure. Is Mr. Casey? I see him up there. Go ahead.
Yes,
I think you're muted. Okay, go ahead.
Thank you, Mr. Chairman. Thank you, Board Member Gaines. What point would you like us to specifically address, Board Member Gaines?
Well, it looks like there's discussion on taking a look at the concerns that you've raised next year. And so I'd just like to know what your perspective is on that versus, you know, several issues that you brought up in today's hearing.
Well, you know, we're always open to have a discussion with staff, as long as, you know, staff is open-minded about making the changes we're requesting. But I have to say, I feel a little bit like Charlie Brown. Wait till next year. You know, this is 2 years in a row where, you know, we've had this same discussion, and we keep kicking the can down the road. I think that there is more than ample evidence to make adjustments in the current year for the current lien date. This has been an ongoing discussion for 2 years. As for the insurance piece, again, I think we just have a disagreement. Staff feels that an exact duplicate of the AB 1054 initial contribution needs to be made. We say no, it's an insurance payment. It was a prerequisite to participate in the wildfire insurance fund, and it was directly linked. It is a prerequisite to the making of the annual payment. So I think what we did and the way that we reported it for financial accounting purposes is totally reasonable, 100%. And the other point to keep in mind is, you know, we're a rate-based regulated utility. We have ratepayers, and each of you represent ratepayers in your district, and ratepayers continue to suffer. That's the bottom line here. And so I think the time for action is now, Board Member Gaines. And, you know, I don't know what the pleasure of the board is, if they want to look at these issues one by one. But, you know, maybe some members feel differently about some issues and feel more strongly about some issues than others. But that's our perspective on it. Thank you.
Great, thank you.
Okay, I see a hand up from Vice Chair Schaefer and then Controller Yee. Go ahead, Vice Chair Schaefer.
Thank you, Chair. I'd just like to note that the petitioner is not a Pavlov's dog. We don't know that they're going to be petitioning next year or not. We can assume they'll make that decision at some point between now and then. And I also want to strongly support Controller Yee's views as to the extent of our jurisdiction and as to the information we need to have. I'm very flattered that we're getting all this good information from her, and that's all I had to say. Thank you.
Thank you. Controller Yee.
Thank you, Mr. Chairman. I'm sorry, I'm kind of piping up a lot today, but you know, I just had a suggestion to make, and perhaps what we could do next year, just putting this case aside for a moment, is I'd like to see maybe a board education session on not just basics of value setting, but really kind of the process of how the staff goes through with applying the value indicators and the whole reconciliation process. Because there have been times in the past when we've had these appeals where we have adjusted the weighting, albeit slightly, but there was a basis for doing so. With late information coming in, the other information that informed, the staff, that we had the flexibility to do that. But it seems to me this is not a science, it's more an art. And I think it would be interesting to have, and I think really helpful, to have a board education session on just what staff does in terms of looking at the weightings, looking at the reconciliation process, looking at how they arrive at a final estimate, and factors that are considered at every point of that process. I mean, that to me seems like it could then accommodate Member Cohn's issue about then how do you do the analysis as you have other issues arise that are kind of substantive that do affect valuation. Where in the process do they get considered? Which value indicator do they actually kind of attach to in terms of where adjustments could be made if there were substantiation for an adjustment? So I would just put that forth because I think that would be instructive, and certainly as we're dealing with just so many challenges that particularly our investor-owned utilities are going to be facing going forward, and maybe some of our other assessees, that would be, I think, a session worth having among us.
Thank you. Was there a motion hidden in there somewhere?
I'm happy to make a motion, but that was really more of a suggestion, and maybe if there's consensus, a direction to staff to put a session like that together.
No, I agree. I think it'd be great because you're right. One of the things as I'm sitting here and listening to both sides of this issue, not having all the data, especially, where do we land on if we're going to make an adjustment? And I know, Controller, you've been around for some time, not only as a controller, but then also as a BOE member. So you have a little more history, especially with utilities. And I know it's difficult for us because of the situation we're in. We're not, like you said, we're not really legislators, and to try to come up with a figure or a formula after this presentation is very difficult without all the facts and all the data. So let me just put it out there. Is there a member that's willing to move this in one direction or another and see what the consensus is?
Mr. Chairman, I will move to adopt the revised appeals attorney's recommendation.
I would second that.
It's been moved and second. I see a hand from Member Gaines. Go ahead.
Okay, just a question of clarification. So does that motion include a denial of the appeal? Or is this a motion talking about what we're planning to do in the future?
Let me go back to the controller. Go ahead.
The motion is denial of the appeal, but to adopt the appeal attorney's recommendation of the value as reflected by the roll correction in September, and but also hopefully a direction to the staff to bring a session back to us that could walk us through the whole kind of application of value indicators and the reconciliation process, and also and maybe we can even get more granular depending on when we have this session, but to look then at what point in the process staff would look at consideration of adjustments on a whole host of issues that could be affecting investor-owned utilities, and so that would be more of a direction. But my main motion with the revised appeals attorney's recommendation would be denial of this petition.
Okay.
I second would so include.
Yeah, okay. So if I could just clarify my position, because I was in favor of the appellant last year. I'm still in favor, but I appreciate the suggestions made by Member Cohen and Controller Yee in terms of taking a look and getting ourselves better educated, and also having staff take a look at this historical costs less depreciation versus the capitalized earning ability so that hopefully it'll reflect what was discussed in the hearing today. But I still think there's a legitimate claim by the appellant in terms of the insurance aspect that we've discussed and also this ratio. So thank you.
Thank you. Vice Chair Schaefer, is that an old hand or is that a new hand?
It's an old hand and I'm trying to get rid of it and I'm not seeing where.
Okay. See no other hands or comments at this point. Ms. Taylor, could you reinstate the motion and then have a call for the vote here?
Chairman Vasquez, I think we do need to go to public comment.
Oh, I'm sorry, you're right. Is there any, do we have, first of all, any written comments before we go to AT&T?
We do not have any written comments.
Okay, can we check with AT&T?
Certainly. AT&T moderator, please let us know if there is anyone on the line who would like to make a public comment regarding this matter.
Ladies and gentlemen, if you wish to make a comment, you may press 1 and 0 at this time. You may withdraw your comment at any time by repeating the 1-0 command. If you're using a speakerphone, please pick up the handset before pressing the numbers. Once again, if you have a comment, you may press 1 and 0 at this time. At this time, I see no public comments.
Thank you. Ms. Taylor, if you would reinstate the motion, then go ahead and call the roll.
Certainly. The motion on the floor is to adopt the revised appeals attorney recommendation, which is to deny the appeal and to ask staff to provide a board education session on the topics of value, the valuation process, the reconciliation process, and at what point staff considers adjustments. Chairman Vasquez.
Aye.
Vice Chair Schaefer.
Aye.
Member Gaines.
No.
Member Cohen.
Aye.
Controller Yee.
Aye.
So we do have a majority with 1 no, so it'll that the petition will actually be denied. And thank you, petitioner, Mr. For all your presentation. I think for me, I think it was very educational. And like Controller Yee stated, I think we need to dive into this a little bit deeper and hopefully have a good, and maybe in the form of a workshop to really get a better understanding as we move forward. Because I think many of the members have mentioned already, wildfires and other disasters are here to stay. And sad to say, we need to figure out a better way to adjust these going down the road.
Thank you, Mr. Oh, go ahead, Mr.
Thank you all.
Thank you.
With that,
Thanks. I just wanted to express our gratitude for everybody taking the time, the members, and also Ms. Fleming and her entire staff. Not the result we wanted, but hopefully we can continue the discussions.
Thank you. With that, Ms. Taylor, if you could please call the next item.
Our next item is E3, Tax Program Non-Appearance Matters, Adjudicatory, Legal Appeals, Property Tax Matters, Petitions for Reassessment of Unitary Value. A, CCFC Sutter Energy LLC 1132 SAU 21-021. B, Delta Energy Center LLC 1128 SAU 21-022. C, Los Esteros Critical Energy Facility LLC 1143 SAU 21-024. D, Metcalf Energy Center LLC, 1133 SAU 21-025. E. Otay Mesa Generating Company LLC, 1134 SAU 21-026. F. Pastoria Energy Facility LLC, 1131 SAU 21-027. G. Russell City Energy Company LLC, 1151 SAU 21-028. Contribution disclosure forms are required pursuant to Government Code Section 15626. Contribution disclosure forms were not received for this matter before the beginning of the board meeting. No disqualifying contributions were disclosed. All parties, agents, and participants for these cases were on the memorandum previously provided to your office. Additionally, all parties have waived their appearances and have not waived confidentiality to the record. This is a constitutional function. These 7 cases will be presented by Ms. Garrett.
Thank you, Ms. Taylor.
Ms. Garrett, I heard your voice. Go ahead. Welcome.
Thank you. Good afternoon, Chairman Vasquez and honorable members. My name is Sarah Garrett, and I am the appeals attorney for the State Board of Equalization on the 7 cases on the board's E3 calendar, where I have served as a neutral fact finder for the board. Well, Chairman Vasquez, it is my understanding that you would like to proceed 1 case at a time today. Is that correct?
Is that possible?
Yes.
Okay.
So I'll just begin by providing introductory remarks that apply to all 7 cases, and then I will proceed to ask for the board's adoption of each case individually, consistent with that request.
Thank you.
Of course. I will now provide my introductory remarks, which will apply to all of the cases on the E3 calendar. So today, I have submitted 7 summary decisions for the board's consideration. In each of these cases, the parties are requesting the board decide the petition on the basis of the written record. The parties have waived their appearances before the board. Each of the 7 cases is owned by the same parent corporation, Calpine Corporation, and involves an electric generation facility company somewhere in California. In each case, the petitioner has raised the same primary issue with their 2021 board adopted unitary value, whether the functional obsolescence adjustment was sufficient. Based on the written record, and as reflected in greater detail within the summary decision, I am recommending the board deny each of these 7 petitions and let the 2021 board adopted value stand as is. Accordingly, for this first case, CCFC Sutter Energy LLC, I ask for the board's adoption of the appeals attorney's recommendation by denying this petition.
Members, are there any questions of Ms. Garrett at this point? Seeing no hands. You want to go ahead and continue, Ms. Garrett, or we need to take a vote before you move on to the next one?
It is at your pleasure, sir. If you would like the board to take them up individually, you may proceed to a motion at this time.
Let me entertain, well, if there's no other hands or questions, I would go ahead and move adopt the staff's recommendation on this. If I can get a second, we'll move forward.
Second.
It's been second by Member Gaines. Seeing no hands or comments or questions. Ms. Taylor, I guess, do we have any written comments on any one of these cases? Well, let's go with the first one first, I guess. Sutter Energy.
Yes, I can let you know we do not have any written comments on any of the 7 cases.
On any 7. All right. Can we check with AT&T and see if there's anybody wanting to speak on this before we vote on it?
Certainly. AT&T moderator, can you let us know if there was anyone who would like to make a public comment on this matter?
Ladies and gentlemen, if you wish to make a public comment, you may press 1 and 0 at this time. And at this time, there's no one in queue.
Thank you. Member Gaines, is that a hand or a new one or an old one?
That's a new one. If I could just ask a question,
Sure.
Ms. Garrett, and could you give us a little background in terms of the nature of these legal appeal property tax matters? Because aren't these issues that could have been brought forward by the appellant individually for a public hearing? Or am I wrong on that?
Thank you, Member Gaines. So the petitioners have not waived their confidentiality to these petitions and have elected to waive their appearance before the board. But you are correct, it is their right, should they choose to advocate for their positions before the board, similar to the B case that was heard earlier this morning. But in this case, as they have waived their appearance and have not waived confidentiality to the record, they have asked that the board decide this petition based on their submissions.
But it just seems a bit odd to me, because if the appellant was really concerned, then they would have brought this forward in a public hearing. So I'm trying to kind of figure out, what is the purpose of these moving forward and on our agenda when the applicant's not making a presentation, or the appellant.
Thank you for the question. They have advanced their arguments in writing and have requested the board adjudicate this case on that writing. I can't really comment as to why or why not a petitioner would choose to appear, but.
Okay, very well. Thank you.
Of course.
Thank you. We're getting a request from the controller's office to see if we could hold on the vote. So I guess I have more of a legal question. Are we able to hear each one of these cases and then hold the vote until the end? Is that possible? We can have motions and I guess to hold the vote.
Certainly, if I see
Mr. Nanjo on the screen.
But
Yes.
I believe the typical way to do that would be to take the items under submission and have Ms. Taylor recall the items when the board is prepared to vote on those at a later time. But I'm happy to make the remaining presentations for purposes of the record so that the board can be prepared to act at such a time they choose to take it up later on.
And Chairman Vasquez, Henry Nanjo, Chief Counsel, that's one of your options. The other options is if you'd like to have Ms. Garrett handle all 7 items together and then do one vote at the end, you can also do that as well.
Why don't we do that, since we had this request from the controller? I was prepared to take each separately, but it may be a little bit smoother if you just put them all together, if that's a possibility. Then we'll just have one motion to cover them all, and then by then we'll see if the controller is available to vote on this. I see hands nodding. Okay.
I would recommend you withdraw the motion that's currently on, and then you can entertain a new motion for all 7 items at the end.
Good point. So I will go ahead.
Concur with that. That's the second.
All right, so we have the seconder withdrawing, and then I am withdrawing my original motion. And now we'll go back and let me have Ms. Garrett. I guess we'll address them all in one and then entertain a motion and see if we're ready to vote at that point.
Certainly. Thank you, Chairman Vasquez. So I would just state for the record that my introductory remarks applied to all 7 cases on the board's E3 calendar, and similarly in all 7 cases, I am asking for the board's adoption of the appeals attorney recommendation in each case, denying each petition. And that concludes my remarks.
Okay. Is there any comments or questions from any of the folks? Seeing no hands. Oh, I see one hand here from Vice Chair Schaefer. Go ahead.
These are all or nothing cases. There's not 10% merit that could be recognized in any or all of them.
Thank you for the question, Member Schaefer. You're correct. There is one issue at play in each of these petitions, and it's certainly the board's pleasure to rule. But in my view, with respect to what the petitioner is requesting, it is truly a sort of an all or nothing issue to use your words.
Okay, thank you.
Thank you. Then with that, members, I would like to make a motion to adopt staff's recommendation on all. Do we need to list all? I guess there's 1, 2, 3, 4, 5, 6, 7 cases. Is that right, Ms. Garrett?
Yes,
Do we
that's
need to
correct.
spell them out? I guess we have the Sutter Energy, Delta Energy Center, Los Estros Critical Energy Facility, the Metcalf Energy Center, Otay Mesa Generating Company, Pastoria Energy Facility, Russell City Energy Company. And I'd like to move the staff's recommendation on all 7.
Second.
It's been moved in second. Seeing no hands. Ms. Taylor, you mentioned that there was no written comments. Can we now ask for AT&T and see if there's anybody on the line who wishes to speak on any one of these 7?
Yes. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on all 7 of these matters?
If you'd like to make a public comment on these 7 matters, please press 1, then 0 on your telephone. Again, that's 1, then 0 for public comment at this time. No lines in queue at this time.
Thank you. Members, I am still waiting back to hear from our controller. So why don't we could just let's hold the vote and move on to the next item, Ms. Taylor, and we'll come back to it.
Thank you, Chairman. Our next item is G1, rulemaking, proposed property tax rule 462.540, proposed adoption of modifications to property tax rule 462.540, change in ownership, base year value transfers to implement and make specific provisions of section 2.1 of Article 13A of the California Constitution and Revenue and Tax Code section 69.6. This matter will be presented by Mr. Moon.
Good afternoon, members of the board. This is Richard Moon with the legal department. As you know, the board adopted proposed property tax rule 462.540, which is the change in ownership rule dealing with Prop 19 and base year value transfers at the August board meeting after a public hearing. Subsequent to the board's adoption, staff submitted the rulemaking file to the Office of Administrative Law, who reviewed the rule and the file and requested that we make several changes that necessitated our reissuing the rule and allowing a 15-day period for comments to be submitted. However, no changes to the operation or meaning of the rule were made. The notice to the modifications to the rule, as well as an addendum to the initial statement of reasons, were published on November 16, 2021. 2 comments, I believe, were received, which will be responded to in the final statement of reasons, as is required by the Administrative Procedure Act. And those comments do not change staff's view or recommendation for the board to adopt this proposed rule as modified. And so we recommend that the board would adopt this rule. And upon the rule adoption, if the board should do so, we would amend the rulemaking file and resubmit that to the OAL. Thank you.
Thank you for your presentation, Mr. Moon. I have 2 questions. Because 2 of the changes requested by OAL seem pretty significant to me. First, the definition of a full cash value. On page 4, the words, the new date new construction was completed are deleted and the date newly constructed is substituted. When it comes to value, isn't the date the new construction is completed correct and the most accurate?
So the date the new construction was, I'm just looking for the exact change to which you're referring so that I don't speak incorrectly.
It's on page 4, I believe.
Yes, I see that now. Yeah, so it doesn't change the meaning of that definition. So that's in the definitional section, and it would still be the date that the new construction is completed. It just changes that phrase from new construction was completed to newly constructed.
Thank you. Second question, why is example number 12 dealing with the replacement value of new construction on page 8 deleted entirely with no substitute or replacement?
So for that example, that part of the rule in which that example is located has to do with, or as part of it, has to do with the definition of equal or lesser value. And as you may recall, this rule was published prior to SB 539. And SB 539 included a definition of equal or lesser value that this rule did not include because it had not been put into the law yet. And so what we did do when we wrote this rule is we knew that there was a possibility that that definition might go into SB 539. And so we thought we had covered that possibility. However, upon review, OAL thought that there was some ambiguity there. And we thought the best way to deal with it would be to remove the example from this rule and put in clarifying guidance in a future LTA. So that's what we thought would be the best way to handle this. And again, it does not change the meaning or the operation of the rule. It's just that we're going to deal with this type of specific example in future guidance.
So then you're basically looking to do some, in the future, I guess, maybe an amendment of some sort or LTA. Is that what you're saying?
Yeah, right now we're thinking in an LTA because it's a little bit more flexible to get out more quickly, and we can do that with a little bit more comfort because SB 539 is out there. However, if in the process of doing that, we need to do an amendment to the rule, we would be happy to do that.
Okay, thank you. Members, are there any other questions of Mr. Moon? Seeing no hands or comments, I would like to move the staff's recommendation on this if there's no other comments or questions.
I'll second that, Member Gaines.
And it's been seconded by Member Gaines. Ms. Taylor, do we have any written comments on this?
Chairman Vasquez, we do not have any written comments.
Can we check with AT&T if anybody's on the line who wishes to speak on it?
Yes. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Certainly. If you'd like to make a public comment on this matter, please press 1, then 0 on your telephone. Again, that's a 1, then 0 using your telephone keypad, please. Thank you. There are no lines in queue.
Okay, let me ask Ms. Stowers, we're okay to vote on this one, right? I don't think this is a constitutional item,
yes,
right?
I'm prepared to vote on this item.
Okay, then we will go ahead. Ms. Taylor, if you'd please call the roll on the motion.
Chairman Vasquez?
Aye.
Vice Chair Schaefer?
Aye.
Member Gaines?
Aye.
Member Cohen?
Aye.
Deputy Controller Stowers?
Aye.
So that's unanimous of all those present. With that, members, I was wondering if we can take a short break and give the controller an opportunity to come back. And I'm hearing that if we try to reconvene, let's say around 12:50, it's 12:37 now, she should be with us so we can, one, take up the vote and then continue on with the meeting. Unless I'm seeing, now I see a nod there from our executive director. I also wanted to be sensitive to staff. Is that sufficient? Because I know we've gone kind of straight through and we're cutting right through lunch here.
Chairman, if you'd like, we could certainly take a break and then reconvene at maybe 1.
Okay,
Keep us on schedule.
why don't we do that? Why don't we take a break and we'll reconvene at 1 o'clock and then take up the vote and then continue with the agenda.
Okay, very good. Thank you, members.
Thank you all. Just remember to mute your mics. to, is it E3 or, yeah, E3?
Yes, the item is E3, Tax Program, Non-Appearance Matters Adjudicatory. Legal Appeals, Property Tax Matters, Petitions for Reassessment of Unitary Value.
All right, and there was a motion. You want to restate the motion so we can bring the controller up to speed?
Certainly. The motion was to adopt staff recommendation for all 7 cases: CCFC Sutter Energy LLC, Delta Energy Center LLC, Los Esteros Critical Energy Facility LLC, Metcalf Energy Center LLC, Otay Mesa Generating Company LLC, Pastoria Energy Facility LLC, and Russell City Energy Company LLC.
All right, and there was a motion I made, and it was seconded by Member Gaines. And I believe we had no written comments, and then we asked AT&T and nobody was on the line, correct?
Correct.
So with that, unless I see a hand from anybody, we will go ahead and call the vote. Go
Chairman
ahead.
Yes.
I'm sorry,
Chairman
go ahead.
Okay. Chairman Vasquez.
Aye.
Vice Chair Schaefer.
Aye.
Member Gaines.
Aye.
Member Cohen.
Aye.
Controller Yee.
Aye.
Okay, so that's unanimous of all those present. With that, Ms. Taylor.
Chairman Vasquez. Yeah,
I'm sorry,
Chairman
go ahead.
Vasquez. Yes, this is Ms. Taylor. Ms. Garrett has an additional note to mention to the board members.
Sure.
Thank you, Ms. Taylor and Chair Vasquez and honorable members. I just wanted to note for the record that the Russell City Energy Company LLC petition is subject to revenue and taxation section 40 because the amount in controversy exceeds $500,000 in tax. And so accordingly, after the board's decision today, the appeals attorney will prepare a written decision to memorialize the board's action, which I will bring back to the board for consideration in early 2022. And with that, thank you. That concludes this year's appeals season.
Thank you. With that, Ms. Taylor, if you would please call the next item.
Our next item is I1, Other Chief Counsel Matters, Organization of the Board. The board will nominate and elect a new chair and vice chair effective January 1, 2022. Chief Counsel, Mr. Henry Nanjo, will make introductory remarks.
Members, the Chief Counsel will be right with you. He's having a little technical glitch. I apologize for the slight delay, and he will be right with us. Chief Counsel should be just getting everything set up now, so he's back and connected. I apologize for this slight delay with our technology. There he is. Thank you, members. My apologies, members. So which item are we on, Chairman Vasquez?
We're on I1, Other Chief Counsel Matters.
Thank you very much. It is afternoon, so good afternoon, Chairman Vasquez, Vice Chairman Schaefer, and honorable members. As you may recall, on January 15th, 2021, the board adopted its governance policy, which included procedures for the election of the board chair and vice chair. Consistent with this governance policy, this agenda item is on for the board to elect a chair and vice chair to serve for the January 1st, 2022 to December 31st, 2022 term. This conversation is a member-to-member discussion where a member may choose to nominate themselves or another member for either chair or vice chair. Additionally, members, it is your pleasure whether to elect a chair and vice chair together or separately. And at this time, I'll turn it over to Chairman Vasquez to continue with the item. Thank you, sir.
Thank you. It is now time to nominate and select members to serve in our board officer positions for the term beginning January 1st, 2022. First, we will open nominations for the board chair. This is an open nomination process, meaning any member may nominate themselves or another member for chair. Once all nominations have been made, each nominee will have 3 minutes to make a statement. Ms. Taylor will then call the roll, at which point each member has the opportunity to state the name of the member they are voting for as chair or whether they are abstaining from the vote. If a member receives the required number of votes, then members will be elected as chair. If no candidate receives the required number of votes, the board may discuss whether to reconsider any or all nominations. If no member receives the required number of votes, a tie may be declared consistent with Robert's Rules of Order. If there is a tie, the currently serving chair will continue to serve. To support or orderly process, I respectfully ask that you hold your questions and comments until you are called upon. If there are no other questions about this process, we can begin.
Chairman Vasquez, my apologies. I forgot to add one thing, if I may.
Sure, go ahead.
Chief Counsel Henry Nancher again. To finish up the kind of procedural reminders, there is no, pursuant to the governance policy I previously stated, there is no limit on serving consecutive terms. As you mentioned, if there's a tied vote according to the governance policy, the currently serving chair or vice chair, as the case may be, shall continue to serve. At this time, I'd like Ms. Taylor to confirm the number of votes necessary or the requisite number needed to elect a chair or vice chair. Ms. Taylor?
Thank you, Mr. Nanjo. As there are 5 members present, the majority to elect is 3 votes.
And that would conclude the procedural and legal remarks. So again, I turn it back to you to conduct the election. Thank you, sir.
Vasquez, I would like to make a nomination.
With that, let me open it up, and I see Vice Chair Schaefer stepping up.
Mr. Chairman, I would like to make a motion to nominate Malia Cohen as chair of the Board of Equalization for 2022.
Okay. Any other nominations? I see a hand from Member Gaines.
Yes, I would like to nominate Tony Vasquez as chair.
Thank you. Any other nominations? Seeing no other hands or comments, Ms. Taylor, if you would please call the roll on the 2 nominations. Well, you know what?
Can you hear me, Chair Vasquez?
Yes.
I'm frozen.
I'm sorry. I didn't see your hand, Ms. Stowers. I forgot. Go ahead. Ms. Stowers? I can't hear you.
Ms. Stowers is, her screen is frozen and we can't seem to get audio.
I see your hand though, but yeah.
Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4. Welcome to Verizon Wireless. Your call cannot be completed.
Ms. Stowers, I think we're.
Looks like she's having some
technical. Might be dialing back in.
So members, this is Brenda Fleming. I'm working with the Deputy Controller to have her log back in. I think she's clean now. You may proceed. Thank you.
I think I'm back. I froze.
You froze. All right, you're back.
I'm back. I was like frozen. I believe I heard a nomination for both Member Cohen and Chair Vasquez. Is that correct?
Yes.
And I was in the process of trying to make a second, and then I got frozen. I second Mike Schaefer's nomination of Malia Cohen.
Okay. Let me give the two, I guess, that were nominated an opportunity to give, I guess we can give 3 minutes, and then we'll go ahead and take a vote here. Ms. Cohen, do you want to go ahead and start?
Oh, yeah, sure. I'll say just a few, just really brief remarks. Colleagues, sure. I do hope to earn your support. As you know, I have provided leadership both during my term as chair and then also as a member, and look forward to continuing to work with our outstanding staff on continuing to steady the ship for the Board of Equalization and to continue the work that we've been doing this entire year on really important Board of Equalization issues, working with our stakeholders, our partnership groups, the Assessment Appeals Board, on some of the issues that we've been discussing all of this year and largely as a result of the pandemic. So I hope that you will consider supporting me. Thank you.
Thank you. With that, let me just open up. First of all, I wanted to thank the members for these last 2 years. And I know it's been a difficult time during this whole COVID period, but I'd like to, if it's the wishes of the board, to continue mainly for a couple of reasons. One, let me list a few things. You know, this last year was a very challenging year, but I think we were able to drill down real hard on Prop 19, not just to implement it, but also to make sure we had some legislation to modify it somewhat. And we're looking forward to hopefully continue some of those changes that need to be made still with the legislators through for some amendments to it. And there's even a movement, and I think we're going to need the legislators' support on this moving forward to possibly, if not modify it drastically, to possibly even reverse it. Because in my conversations throughout the state, and primarily in my district, there's a lot of folks that I think misunderstood this Prop 19. And I think we need to follow up on that and work with the taxpayers and specifically the homeowners, because it's intergenerational wealth. I think a lot of people misunderstood it when they were voting for it. The other thing that I was hoping to do is to continue our work that we started, especially on tax credits here, moving forward with possible tax credits for those that are interested in developing more affordable housing in the state of California. And the other real big one for me is how do we address, and we began this process working with several of you on the issue of trying to come up with some creative ways to get more folks in the pipeline to assist our county assessors as they look to try to deal with the workload that they have. And I'm hoping that we can continue that through our working groups, and looking forward for that to happen. And I would like to make sure that we continue many of the updates that we've been looking at our governance policy, not only our governance policy, but also some issues that I know some of you have raised with the Begley-King issue as well moving forward. And I'm looking forward to continuing some of those things that we started but weren't able to complete. And with your support, I'm really looking forward, and I'd be honored to have your support moving forward this next year. With that, let me turn it back over to Ms. Taylor, and she can call the roll.
Thank you. Please state the name of your selection for chair. Chairman Vasquez.
Vasquez.
Vice Chair Schaefer.
Cohen.
Member Gaines.
Vasquez.
Member Cohen.
Cohen.
Deputy Controller Stowers.
Cohen.
So we have a majority, we have 3, so congratulations. Member Cohen, you will be the chair starting in 2022 in January. With that, let me open it up for vice chair. Any nominations for vice chair for 2022?
Thank you, Mr. Chair. I'd like to nominate the current vice chair, Mr. Michael Schaefer, to be vice chair again.
Deputy Controller Stowers here. I second that nomination.
Hearing no other nominations, and I guess we could, you want to move this by acclamation?
Say that you'd like to speak.
We can move that by acclamation.
All right, why don't we do that? Unless there's an objection.
Well, I had a comment. Can I make that first?
Sure, go ahead.
Yes, I'd like to continue as your vice chair, working in cooperation with all my fellow board members to move our board forward for 2022. Continue the great work that we have had fighting for taxpayer justice and representing the best interests of all taxpayers with fair, effective, and effective tax administration and support of our state and local governments. I also have learned so much from Ms. Cohen, working with her and under her, and I appreciate the fact that all of my colleagues have been down to San Diego to our offices, and I try to get by to see them. I think we have a good team, and I want to thank those of you who supported me.
Chairman Vasquez, I'm sorry to interrupt. This is Henry.
Yes, go ahead, Mr. Nanja.
I believe procedure and protocol require a vote. So rather than vote by acclamation, I would recommend a roll call vote. Specifically, the governor's order regarding COVID and teleconferences regarding COVID, as well as companion legislation, requires roll call votes for any decisions of a board appearing by teleconference.
Not a problem. Let's, Ms. Taylor, if you would call the roll then.
Thank you. Please state the name of your selection for vice chair. Chairman Vasquez.
Mr. Schaefer.
Vice Chair Schaefer. Member Gaines.
Member Schaefer.
Member Cohen.
Mr. Schaefer.
And Deputy Controller Stowers.
Member Schaefer.
So that's unanimous. Congratulations, Vice Chair Schaefer. With that,
Chair
Chair
Vasquez, I wanted to thank you for your leadership this past year. I learned a lot from you, and you've been down to our office a couple of times, and I think you've done an outstanding job as our chair for 2 years.
Thank you. Member Gaines.
Yeah, I want to thank you, Chair Vasquez, for your leadership for the last 2 years. I feel like we've made a lot of progress with the BOE, and I think it's heading in the direction that I think all of us would like in terms of coming out of a reform stage with AB 102 and trying to get stabilized. And I've been encouraged by the work of the whole team. I think Brenda Fleming has done a great job as our executive director, and we've got some real talented folks, and we've been hiring a lot of folks that have been in those vacant positions. And so thank you for your service. And I also want to congratulate Member Cohen as the new chair, and look forward to working with you in the year 2022. Thank you.
Thank you. Member Stowers.
Thank you. Yes, I too would like to thank you, Member Chair Vasquez, for your service as a chair. You're not going anywhere. You're going to continue to provide a very important role as a member of this board. So I know you will continue and have some very valuable input on what you see as the future direction of BOE. Member Schaefer, thank you for your willing to continue as the vice chair and your partnership with all of the members. Congratulations, Member Cohen, as being chair this time around, starting January 1st, 2022. And all of you guys have done a really excellent job as far as working together as a team, moving BOE forward. And I'm sure it will be the same in 2022 with the partnership that you have with your executive director, Brenda Fleming, and her team. Thank you.
Thank you.
Could I add just a comment?
Sure, go ahead, Member Gaines, go ahead.
I want to congratulate Member Schaefer as vice chair and look forward to working with him next year. Thank you.
Thank you. With that, Ms. Taylor, if you would call the next item.
The next item is J1, Administrative Consent Agenda, Approval of the Board Meeting Minutes. The minutes of November 16th and 18th, 2021 were attached to the public agenda notice for your consideration.
Members, are there any comments, questions, amendments to the minutes of November 16 and 18 of 2021? Seeing and hearing none, I'd like to entertain a motion to approve them.
I move approval of the minutes.
It's been moved by Ms. Stowers.
Second.
And second by Member Cohen. Seeing no other hands or comments, Ms. Taylor, do we have any written comments on this?
We do not.
All righty. How about, can we check with AT&T in case there's somebody on the line?
Yes. AT&T moderator, can you let us know if there is anyone who wants to make a public comment on this matter?
Sure, if you wish to make a public comment, you may press 1, then 0 at this time. And at this time, there's no one in queue.
Thank you. With that, Ms. Taylor, if you'd please call the roll on the motion.
The motion is to adopt the minutes as presented. Chairman Vasquez.
Excuse me, aye.
Vice Chair Schaefer. Oh, Vice Chair Schaefer, you're muted.
You're muted, Mr. Vice Chair.
I'm having trouble unmuting. I'm sorry.
Thank you. Member Gaines.
Aye.
Member Cohen.
Aye.
Deputy Controller Stowers.
Aye.
So that's unanimous of all those present. With that, Ms. Taylor, if you call the next item.
The next item is J2, Approval of Assessor's Handbook Section 531 for 2022. Request the approval for publication of the 2022 revision of the Assessor's Handbook Section 531, Residential Building Costs.
Thank you, Ms. Taylor. I have one quick procedural question for Mr. Young. Is Mr. Young available?
Good afternoon, Chair Vasquez and honorable members of the board. I am available.
How you doing?
Doing great.
All right. On the revisions to these 3 assessors handbooks, always on consent because they merely update the current cost increases. Have the board conducted a more thorough review of these in the past several years? Do you know of your knowledge of this?
Yes, thank you for the question, Chair Vasquez. As far as I've checked back, they've always been on consent consent agenda. And as a matter of course, when we update these annually, we do a fair amount of research on each one. We gather both primary data, direct sales data. We look at published data, some we subscribe to and some that are just published off the internet. And we also talk to industry experts. So we do a fairly comprehensive search before we update these, and we have usually presented them to you on the consent calendar. But that being said, we are always looking for ways to improve our processes and to relook and to to do a second look at how we come up with the figures. So I believe we do a pretty good job, but there's always room for improvement, sir.
Thank you. Members, do we have any questions or comments for Mr. Young? Seeing no hands or comments. Ms. Taylor, do we have any written comments on this?
Chairman Vasquez, we do not have any written comments.
Can we check with AT&T real quick?
Certainly. AT&T moderator, can you let us know if there is anyone on the line who would like to make a public comment on this matter?
Ladies and gentlemen, if you wish to make a public comment, you may press 1 and 0 at this time. And we have no one in queue.
Thank you. With that, members, do I hear a motion to approve the publication of the 2022 revision of Assessor's Handbook, Section 531, Residential Building Cost?
So move.
It's been moved by our Vice Chair.
Seconded.
And second by Member Gaines. With that, Ms. Taylor, you would please call the roll on the motion.
The motion on the floor is to approve the publication of the 2022 revision of Assessor's Handbook by Section 531, Residential Building Costs. Chairman Vasquez?
Aye.
Vice Chair Schaefer?
Aye.
Member Gaines?
Aye.
Member Cohen?
Aye.
Deputy Controller Stowers?
Aye.
So that's unanimous of all those present. With that, Ms. Taylor, will you please call our next item?
The next item is J3, approval of Assessor's Handbook Section 534 for 2022. Request approval for publication of the 2022 revision of the Assessor's Handbook Section 534, Rural Building Costs.
Thank you, Ms. Taylor. Members, do we have any questions or comments on this item? Seeing and hearing none. Ms. Taylor, do we have any written comments on this item?
We do not have any written comments.
Can we check with AT&T if anybody's on the line?
Certainly. AT&T moderator, can you let us know if there is anyone on the line who would like to make a public comment regarding this matter?
If you would like to make a public comment, you may press 1 and 0. And at this time, there's no one in queue.
Thank you. Member Gaines, is that a hand on this item? Yes, go ahead.
Yeah, could I just ask a question of David Young in terms of when we're going through these handbook updates, isn't this something that's in a sense routine that we do on an annual basis and just update?
Thank you, Board Member Gaines, for that question. Yeah, it is fairly routine in the sense that we do it annually. We do it every single year. But with each one of these updates, there is a fair amount of staff work and due diligence that goes into it before we come up with the numbers. And as I mentioned before with my earlier remarks on the 531, it's very much the same for this one. We use both primary data and secondary data, published data, and we actually consult with some industry experts. So it is in the sense that it is an annual update that is fairly routine, but the amount of work and due diligence that goes into it is pretty extensive. It takes staff several months of dedicated work in order to do this work, sir.
Okay, and these sections of the handbook, because we already voted on 531, but this is 534, and we're going to take a look at 581. These are critical aspects of the handbook that are reviewed on an annual basis and updated.
They are reviewed on an annual basis. They are updated. The assessors use it as part of their valuation when they look at this type of property. It's used for the cost approach for residential property. This one is for rural properties, and the forthcoming one will be the business personal property. So it is reviewed and looked at pretty carefully every year.
That's great. Thank you.
Of course, anytime.
Vice Chair Schaefer?
Yes, go ahead, Vice Chair Schaefer.
Mr. Young, you brief us on all four of these, or at least the handbook issues, all at the same time. Could these not be framed as something we would adopt as one motion instead of four?
Thank you, Board Member Schaefer. It is at the board's pleasure as to how you wish to adopt it. I have no objections to it being one way or another, sir.
Thank you.
Any other comments or questions? Seeing no others, Ms. Taylor, do we have any written comments on this?
We do not have any written comments.
Can we check with AT&T?
AT&T moderator, can you let us know if there is anyone on the line who would like to make a public comment on this matter?
We all need that.
If you would like to make a public comment, you may press 1 and 0.
I got sick and tired of it.
Vice Chair Schaefer, there you go.
And at this time, there's no one in queue.
With that, members, do I hear a motion to approve the publication of 2022 revision of Assessor's Handbook Section 534, the rural building cost?
I would so move.
It's been moved by Vice Chair Schaefer.
Second.
And second by Member Gaines. Ms. Taylor, have you called the roll on that?
Yes, the motion on the floor is to approve the revision of the Assessor's Handbook 534, rural building costs. Chairman Vasquez?
Aye.
Vice Chair Schaefer?
Aye.
Member Gaines?
Aye.
Member Cohen?
Aye.
Deputy Controller Stowers?
Aye.
So that's unanimous of all those present. With that, Ms. Taylor, we call the next item.
The next item is J4, approval of Assessor's Handbook Section 581 for 2022. Request approval for publication of the 2022 revision of Assessor's Handbook Section 581, Equipment and Fixtures Index, percent good and valuation factors.
Thank you, Ms. Taylor. With that, members, are there any questions or comments on this Assessor's Handbook? Vice Chair Schaefer, go ahead.
I would move adoption of approval of this.
Vice Chair is moving adoption.
Yeah.
Ms. Taylor, do we have any written comments on this?
We do not have any written comments.
And just to formalize that, I'll second that motion. But let me ask and see if we can check with AT&T if anybody's on the line.
Certainly. AT&T moderator, can you please let us know if there is anyone on the line who would like to make a public comment?
If you would like to make a public comment, please press 1 and 0 at this time. And at this time, there's no one in queue.
Thank you. So just to be clear, Vice Chair Schaefer is moving the approval of the publication of 2022 revision of the Assessor's Handbook, Section 581, Equipment and Fixtures Index, percent good and valuation factors. And I second that. And with that, if we can have Ms. Taylor call the roll.
Chairman Vasquez,
Aye.
Vice Chair Schaefer,
Aye.
Member Gaines,
Aye.
Member Cohen, Deputy Controller Stowers.
Aye.
So that's unanimous. Even though I don't think we heard Member Cohen, but I saw your lips move though.
Oh, I said aye.
Okay. Thank you. With that, it's unanimous.
I heard her.
Ms. Taylor, if you would please call the next item.
The next item is K1A, Executive Director's Report, Operational Priorities. Report on the status of pending and upcoming operational priorities. This matter will be presented by Ms. Fleming.
Thank you, Ms. Taylor. Good afternoon, Chairman Vasquez and honorable members. I'm Brenda Fleming, the Executive Director. Let me begin, members, by congratulating our new officers of the State Board of Equalization for 2022. Board Member Cohen, congratulations as Chair of the Board, and Vice Chair Schaefer as our Vice Chair for the 2022 term. I'd like to also take this moment to extend my sincere appreciation for the opportunity to work with current Chair Vasquez as our chair for the 2021 calendar year and with Vice Chair Schaefer for 2021. It's been an honor to work with the existing and then the incoming officers. Thank you for your support and for your leadership. Greatly, greatly appreciated. Members, just a quick update. As you know, we currently under current statute through the end of January can continue with our remote hearings, continuing them with the video and the teleconferencing, just as we've been doing. As you know, we're seeing some numbers recently with the COVID activities sort of increasing and ebbing and flowing here. As a result, we'll continue to monitor the public health guidance and see if there will be any changes, potential changes to the legislation. And of course, members, as we get into January after the first of the year, we should have more information and we can advise you appropriately. There's no questions, members. I would like to take this opportunity just to applaud some of the work that we've accomplished in 2021. As I reflect back on the 2021 calendar year, first, again, I'm so grateful and thankful and appreciative for your leadership and your support moving the BOE as an agency forward. I'm grateful, very, very grateful and honored to work with a team of extraordinary tax professionals, the employees of the State Board of Equalization. Their expertise and dedication to the successful administration of our programs continues to impress me every single day. Staff members, as you know, have been reporting their progress and work activities throughout the year. And today, I'm going to take the opportunity, if you bear with me, to highlight just some of the 2021 accomplishments to date. Despite, members, the COVID pandemic and the ups and downs that we've experienced there, we have ensured the continuity of our government functions and responsibilities. And in addition to that, we've accomplished some significant milestones. Since the passage of Proposition 19, for example, we immediately engaged, as you know, with your participation in the implementation of Proposition 19. And as you know, again, from our monthly reporting, it's been an extensive undertaking, and it has involved the work of staff from all areas of the agency, including the members in your offices and your staff. Activities have included, just a quick list, developing and issuing guidance and a range of informational material. Again, LTAs, legal memos, FAQs, information sheets, web updates, etc. We've worked on developing legislation in the form of Senate Bill 539. As you know, we've done rulemaking and rule changes. We've moved forward with new forms. We've had a host of public policy hearings and responded to a large number of public inquiries. In addition to Prop 19, some of the other accomplishments include we've initiated our business processes improvement projects, which will result in a range of improved processes and greater efficiencies. We've hosted the annual meeting of the State Board of Equalization with the assessors for 2021. We held that in October. We've successfully held our required monthly meetings via video and teleconference, and just for note, members, 120 hours of actual online meetings, which has resulted in significant increase in public engagement and participation. Additionally, we've had many public hearings, which resulted in focused discussions and actions on many important topics like AAB, which we're still in the process of. So thank you for that. As a thanks to board proceedings, if I can pause and shout out to board proceedings and our media services team, thank them and acknowledge them for they've successfully facilitated 21 public meetings, managing the range of services needed for the remote and the video and teleconference activities and technology. So that's been quite a feat, and they've done it seamlessly. In 2021, there were a significant number of recruitments and hires, resulting in 26 new employees and 20 promotions. Outstanding. Our telework policies and practices were successfully executed with minimal to little impact on our operational objectives. We're grateful that we've had very few incidents of employees testing positive. That's good news. Little highlights from the State Assessed Properties Division. State Assessed Properties team has produced and adopted the 2021 board roll of state assessed properties with a total assessed value, members, of over $123 billion, and transmitted these values to the 58 county auditors, representing $1.99 billion in property tax revenue for schools and local governments. State Assessed team has produced and adopted and billed the 2021 private railroad car tax roll for a total amount of over $9.3 million that will go into the state's general fund. They successfully completed 28 state assessed property appeals, completed 9 property tax audits, and physically inspected and valued over 7,700 state assessed land parcels. They processed 247 statements of land changes and coordinated the corresponding assessment jurisdiction for each change within the 58 county assessors. They processed over 200 jurisdictional boundary changes, resulting in over $350,000 in revenue for the state's general fund. We produced the 2021 valid tax rate area list with 61,183 tax rate areas. For the first time, members, our tax area services section, affectionately referred to as TAS, made tax rate area data for 34 of the 58 counties and online mapping publicly accessible by placing the information on our BOE website. We continue to make strides with our transparency of information on the website. We responded to approximately 1,800 phone and email inquiries on various issues related to state assessed properties. Kudos to that team, members. And our county assessed properties division, that team published 7 county surveys and samplings and issued 56 letters to assessors and 25 county assessors only letters. Responded to over 13,000 property tax inquiries from stakeholders. Just a little nuggets there. Over 8,800 phone calls, over 2,600 web inquiries, 42 letters, and over 1,500 faxes. 160 permanent and advanced appraiser certifications and 15 permanent and advanced assessment analyst certifications were issued. Additionally, in 2021, we provided training to 548 students in 17 virtual courses, 183 students in classes provided through American River College and Sacramento State University, and 634 students via graded self-study sessions. This team issued 540 organizational clearance certificates and 228 supplemental clearance certificates. We discovered and reported 398 changes in control and 169 changes in ownership to county assessors. And for reference, Assessor's Handbook sections 531, 534, and 581 were just recently adopted. Thank you, members. In our communications area, we expanded our communication program and social media platforms, which has resulted, members, in significantly enhanced communications, transparency, and greater outreach to the citizens of our state. We are projected to have over 70 social media and web posts on all our channels by the end of this year, and featured disaster relief, notice of upcoming board meetings, Proposition 19 information, etc. Our BOE website, as you know, was modernized, which has increased the value of our public website as a resource for statewide property tax programs, and we continue to make strides there. We generated and updated several new publications for stakeholders and taxpayers, including the publication 21G, which is entitled Introduction to the BOE. We created a new public service announcement, or PSA, promoting the 2021 Taxpayer Bill of Rights hearing. In our LEDGE Research and Statistics Division, members, we sponsored Senate Bill 825, which was signed into law, congratulations, which among other things helps protect open space lands for all Californians by extending the property tax welfare exemption for land conservancies and land trusts. Additionally, Senate Bill 539, the Proposition 19 implementation bill, was signed into law with the BOE and other stakeholders playing key leadership roles in developing the legislation. We tracked 46 Assembly and Senate bills in 2021 and issued 8 bill analysis. And we published the 2020-2021 annual report. Some updates on our Equal Employment Opportunity Office, affectionately EEO. As part of the EEO office's focus on diversity, equity, and inclusion, an inclusion statement has been added to the BOE's CalCareers job postings. We established the BOE's Disability Advisory Committee in July 2021. We adopted an agency-wide training calendar for all mandatory training to ensure consistent compliance. We've enhanced BOE's employee onboarding processes and procedures, and kudos to the EEO office. Members, our Taxpayer Rights Advocates Office completed approximately 200 taxpayer cases, providing responses and resolving taxpayer issues. We published the Taxpayer Rights Advocates Fiscal Year 2019-2020 annual report in February of 2021. We, of course, held the 2021 Taxpayers Bill of Rights hearing in August of this year, allowing taxpayers the opportunity to speak before the elected board. In collaboration with the communications officer, we developed a simple fact sheet providing basic information on Prop 19, and there is more to come in that area. We transitioned to a case management system for more efficient tracking and management of taxpayer cases. This aligns, as you know, with our strategic plan to modernize and leverage technology. In our legal department, they issued 10 legal opinions on novel and complex property tax issues facing the 58 counties, responded to over 180 legal inquiries by providing resources and analysis to county assessment appeals boards, county assessors, and the public. We submitted 5 rulemaking packages to the Office of Administrative Law, including 2 Prop 19 implementation packages. And we received 1 published Presidential Court of Appeal decision, Verizon California Inc. versus Board of Equalization, and had 8 additional cases against the BOE dismissed. Members, this review of the 2021 accomplishments to date highlights the more significant work accomplished, but by no means does it represent the full array of work that staff have achieved. Again, I just want to ask you to join me in applauding and commending our staff for the extraordinary efforts and their dedication to this agency. If I may, just a few more comments. Just want to take a brief moment. Thank you. Applause, applause, applause. Kudos to the team. Thank you, thank you. Just a few moments. You get to the end of the year and you want to reflect back. And I reflect back to where we were in 2017. We've had some significant accomplishments in addition to this last year. Each year that passes, members, we are leveraging the lessons learned and build upon our achievements from those lessons learned to continue to fuel our continued success. Members, we will continue to modernize. We will continue to rebuild, and we will revitalize and rebuild and modernize over and over and over again so that our agency remains a highly valued and effective state agency serving all Californians. We won't give up. We will persist. We will not fail to succeed. I'd like to extend my appreciation and thanks to the outgoing president, the Honorable Ernie Dronenberg, the legend, for his partnership in 2021. And as many of our accomplishments were achieved through this great collaboration with CAA, I thank all of the assessors. Moving into the new year, I'm looking forward to working with the Honorable Leslie Morgan, the president-elect, for 2022. Finally, members, I would be remiss if I didn't give you a high five, an applause, and a shout out. For your leadership has been invaluable. Your partnership and support of me and the agency have been extraordinary and greatly appreciated. Thank you for continuing with me in this modernization journey and helping to ensure that our taxpayers and stakeholders are aware of who we are and how our value is important to state and local governments. We've accomplished a lot in 2021, but there is so much more to be done. So I hope you guys have a great holiday season because we're going to need you to recharge your batteries and be ready to go when we come back in 2022. I look forward to working with you in 2022 and continuing to achieve our objectives and just being amazing and successful. Members, if there's no questions, I thank you again and now give the opportunity for Ms. Renati to give updates on the operational priorities. Thank you, members, and thank yous to the staff.
Thank you, Ms. Fleming, and that is very tough to come afterwards. Thank you.
But I think you can do it.
Good afternoon, Chairman Vasquez and honorable members. I am Lisa Renati, Chief Deputy Director. Today, I'll report on some of the agency's operational priorities and projects. The first item is in regards to our workforce capacity. Since our last meeting, we have filled 4 positions, including 1 promotion at the managerial level and 3 staff who are new to the BOE. Currently, 75% of the agency's remaining vacancies are in active recruitment. Members, during last month's meeting, Member Cohen inquired about the possible cost savings as we transitioned our in-person training programs for county assessor staff to a virtual format during the COVID-19 pandemic. Overall, we know that the travel and related costs for BOE staff decreased during the last year due to the travel restrictions because of COVID and the pandemic. But at the same time, during the past year, we redirected additional staffing to our training department to augment the services we provide. So at this time, our system isn't currently set up to provide the specific detailed information related to particular activities or functions. And to get the data, we need to do a deep dive, which we are working on. And I need a little bit more time to answer your question, Ms. Cohen. One of our modernization efforts is to improve our system to provide a better accounting of activities and projects. So hopefully in the future, that information will be readily available for us to make better decisions and also have the information as needed. The next item is an update on our process improvement project. Currently, managers are performing process reviews on some key operational processes to identify areas and opportunities for improvement. Staff are currently prioritizing projects, and this work aligns with our strategic goals to modernize the property tax system. I'm happy to report the project's going well and no issues to report. This concludes my report on operational priorities. I am available to answer any questions you may have.
Do we have any questions of Mr. Renati? I don't see any hands. Yeah, Ms. Taylor, I forgot to ask on the when Ms. Fleming finished up her comments. We didn't have any written comments on this, did we?
We did not have any written comments, sir.
Do we need to check with AT&T now or wait until we finish with K1?
I think as long as you state it, we could wait until we finish with K1.
Okay. Go ahead, Ms. Renati.
The next item is the status of our Proposition 19 implementation project. I'm happy to report there are no issues or concerns to report. As mentioned by Chief Counsel Henry Nanjo, rule changes related to Prop 19 have either been approved or will soon be approved by the Office of Administrative Law. Staff continues to provide assistance to taxpayers with any information they need or questions they may have. And so far, everything's going well on our Proposition 19 implementation project. And that concludes my presentation on this subject.
Ms. Renati, you know, on this item, I was wondering if you'd be able to come back to us, I'm thinking next month, just with kind of a presentation on the legislative and initiative update on Prop 19, because I know there's several movements afoot, and we probably won't know too much until the beginning of next year. And I was just wondering, I guess the taxpayers are asking about the proposed legislation and ballot initiatives that are intended to fix some of the big problems. And I'd like to be able to respond and provide as much information as possible. I understand that the ballot initiative called the repeal of the Death Tax Act.
Excuse me, Chairman. This is Ms. Taylor. I'm sorry to interrupt, but we have a difficulty with our live stream at this moment. So I hate to have you launch into that.
Okay.
We're working on it right now. So
I know with the storm out there, I wonder if it's affecting it, huh?
Perhaps we could take just a short recess, 5 minutes, to resolve this technical issue.
All right, why don't we take
that would be helpful.
Is 5 minutes sufficient?
At this point, I hope so.
Okay. So this is Brenda Fleming, Executive Director. Let me make a suggestion that we take a quick 10-minute break just to make sure that it's not just refreshed but stabilized. So Chairman and members, if you would give us 10 minutes, that would be appreciated.
All right, I have 1:50 and I have like 2 o'clock. So let's say 2:10 then.
2:10 is perfect. Thank you, sir.
Thank you.
All right,
Thank you, members.
Mute.
Mute and cameras off, please. Thank you.
Cameras. Okay.
So
Let's see,
Chairman
we-
Vasquez, we're just waiting for, there is, Member Gaines is back. All set to go.
Yes. Continue, please.
Ms. Chairman Vasquez, I think you were asking a question.
Yes. I was referring it to the, I guess coming up, you know, as we're hearing, excuse me, and we're seeing so much movement, both from the legislative side and then also from outside groups, specifically the Harvest Jarvis group that looks like it's putting together some kind of a signature gathering that they're calling the Repeal of the Death Tax Act. So I was wondering if it was possible, hopefully by next month, when we meet again, maybe next year, that we hopefully have the latest and the greatest information on what is all out there, and possibly if there's anything we could do, one, for informational purposes, because I know many of us are getting approached by groups as we're going out and about ourselves and asking about Prop 19. One, possible amendments, and then two, some are going as far as, you know, is there an opportunity or a chance to repeal this thing?
Thank you for the question, Chairman. I'll let Dustin Weatherby, our Chief of Legislative Research and Statistics Division, answer that question for you. And any information that he could provide regarding Prop 19, we can have him add that to his report next month.
Sounds good. Members, are there any other questions or comments for Ms. Renati so far? Seeing no hands. Thank you, Ms. Renati. Well, we're going to wait until the end of K1. I think we're still going, right? We have K as a K3A now?
Yes, the next item would be K3A. So perhaps this might be a good opportunity to take public comment and then move on to the next item.
All righty. Is there any written comment, Ms. Taylor?
We have no written comments for the K1 items.
Let's go ahead and check with AT&T and see if there's anybody on the line.
AT&T moderator, can you let us know if there's anyone who would like to make a public comment on this matter?
Presently, there is no one in queue. To queue up, it's 1 followed by 0. 1 and then 0. And still no one in queue.
Thank you. Ms. Taylor, if you would please call the next item.
The next item is K3A, Property Tax Deputy Director's Report, Operational Updates. Report on the status of pending and upcoming projects, activities, and departmental issues. This item will be presented by Mr. Young.
Yes, thank you, Ms. Taylor. Good afternoon, Chair Vasquez and honorable members of the board. David Young, Deputy Director of the Property Tax Department here to provide an update on our operations. So first of all, I will give a brief report on the department as a whole, and then I will go ahead and turn it back to Ms. Taylor, and she will introduce the next 5 report to give you a little bit more detail. But before I do that, I also would like to take this opportunity to recognize and to commend the staff of the Property Tax Department on all their hard work and efforts for this year. So I recognize and appreciate all the tough work that staff has performed over the years. So thank you and thank you. With that, I will start with our updates. So first of all, we continue on our rebuilding efforts. We are hiring and continuing to build our workforce capacity. So we are making great strides in that. But with each hire, I know it is a process, a disruption in work from the whole management team in order to do so, to interview, to hire, and then once we get the new person on board, to also onboard them, orientate them, and to train them. So with that, I know it is an investment in our future, and it takes a lot of work. Also, we are continuing our business process review. We are taking a look at each one of our work processes. We are documenting how it is being done, and we are looking for efficiencies and improvements that we could make. There will be a report more specific on that by Ms. Keach later on in this presentation. With that, CAPD, our County Assessed Properties Division, right now, much of our work is concentrated on the implementation of Prop 19. With the passage of SB 539, we continue our work of reviewing our guidance, our annotation. We are looking at our website, what is being posted, whether that still comports to and needs improvements or updating on SB 539, and we are developing some guidance on it also in the form of an LTA. With our SAPD, our State Assessed Properties Division, as you have already concluded our assessment appeals hearings for this month, that concludes our seasonal work for SAPD, but with each completion of this work, we prepare anew for next season's work. So right now, staff has shifted and is preparing for next year's 2022's appraisal season, and Mr. McCool will be able to give you a little bit more detail on that also. So this basically concludes my portion of the updates for the Property Tax Department operations. I'm available to answer any questions you may have, and if not, I will turn it back over to Ms. Taylor.
Thank you. Actually, I had a quick question, but if I heard you correctly, it sounds like you're already working on this, preparing an LTA basically to deal with SB 539. Is that correct?
That is absolutely correct. We are 539. What we have done is we've actually bifurcated the issue. 539 covers both the intergenerational and the base year transfers provision of Prop 19. We have developed an LTA that addresses the base year transfers. It is currently under internal review, and I am planning on issuing that in the very near future. And of course, before it will be issued, it won't be presented to your offices for a preview.
Thank you.
Of course.
Seeing no other hands or comments, then Ms. Taylor.
Our next speaker on the subject of letters to assessors will be Ms. Lumsden.
Good afternoon, Chairman Vasquez and honorable board members. This is Patty Lumsden, and I'm the chief of the County Assessed Properties Division. Today, I will provide you with a brief report on letters to assessors. Attached to the agenda this month is a memo on letters to assessors. This memo provides a list of the LTAs that have been issued since our last board meeting and provides a link to the BOE's website where a list of all LTAs issued to date can be found. So far to date, calendar year 2021, BOE staff have issued a total of 56 LTAs, and 8 of those LTAs have been issued since our last board meeting. And they consist of an LTA which provides notice to interested parties that modifications were made to the original text of proposed Rule 462.540, change in ownership, base year value transfers, and additional documents and information were added to the rulemaking file. The next LTA provides the 2022 calendar for the valuation of public utilities and railroads. The next LTA provides a summary of the 2021 legislation affecting property taxes. The next LTA provides information and guidance on assessment and exemption of community land housing, community land trust housing. And the next LTAs provides amendments to Revenue and Taxation Code Section 408B2, which added the California Department of Tax and Fee Administration to the list of governmental agencies that may have access to assessors' records. The next LTA, which after following a public hearing, announced the board's adoption of Property Tax Rule 462.520, exclusion from change in ownership, intergenerational transfers. The new rule was approved by the Office of Administrative Law and becomes effective on January 1, 2022. The next LTA provides the approved schedule of timberland production zone values for the January 1, 2022 lien date as certified by the California Department of Tax and Fee Administration. And finally, the last LTA provides amendments to Government Code Section 65852.26 as it relates to the separate conveyance of accessory dwelling units. And this concludes my report on letters to assessors, and I'm available to answer any questions you may have.
Seeing no hands or comments, I just had one quick one, and it refers one more towards the LTA, I guess the number 2021/56, informing assessors of their staff of a new law that allows ADUs, both attached and detached, to be sold as complete independent dwellings under certain circumstances. How's that going?
I'm not sure in what context you're referring to by when you ask how that's going.
Well, it's my understanding that I guess depending on the situation, folks could actually sell these as complete units, these ADUs. Is that correct?
I believe so, that the law does allow for them to do that. What letters to assessors number 2021-056, what it does is it provides the amendments that were brought up by Assembly Bill 345 and that affect Government Code Section 5852.26. And Assembly Bill 345, what it does is it amends that Government Code section to remove the local agency ordinance option and instead requires local agencies to allow an accessory dwelling unit to be sold or conveyed separately from the primary residence to a qualified buyer if they meet that certain criteria.
Do we have any way of following up on that to see how many of the assessors, or I guess basically property owners, are possibly taking advantage of this?
At this time, there is nothing requiring the assessor to report information to our office, and there's nothing requiring the BOE to collect this data, but there's not to say that we couldn't do something like that in the future if that's found to be something that would be useful.
Okay, thank you.
Certainly.
Seeing no other hands or comments, you can continue, Ms. Lumpson.
Well, thank you. I will return it back to Ms. Kathy Taylor.
Okay.
Thank you. Our next speaker is Ms. Lumsden on the topic of appraisal training and certification.
Thank you, Ms. Taylor. I will now provide a brief report on the BOE's appraisal training and certification. Since our last meeting, we have taught one more virtual class of our most requested courses. And to date, during calendar year 2021, we have taught a total of 17 virtual classes and trained a total of 548 students. And that will conclude my report on training and certification. And I'm happy to answer any questions you may have.
Thank you. I'm seeing no hands or comments. I guess you continue something. I believe you have the third item too, not the third sub.
Yes, I'll return it back to you, Ms. Taylor.
Yes, Ms. Lumsden has the third sub-item, assessment practices surveys.
Thank you, Ms. Taylor. So I'll give my final report on the BOE's assessment practices surveys. So far to date for calendar year 2021, we have completed and issued assessment practices survey reports for 7 counties. Those counties are San Diego County in District 4, Alpine County in District 1, Yuba County in District 1, Orange County in District 4, Lassen County in District 1, Calaveras County in District 1, Nevada County in District 1. These survey reports were issued via letters to assessors and are posted on our website. In addition, we are actively working on completing surveys and/or samples for 12 other counties. 7 of those are in District 1, 4 in District 2, and 1 in District 3. These surveys and/or samples are in various stages of completion, and once the survey and/or samples are completed, a copy of the report is provided to each of the board members and their office for preview. Staff continue to conduct surveys and samples remotely, In doing so, we work closely with each assessor and their staff to determine the best way to collect the necessary information and data in the least impactful way to the county as possible. This concludes my report on assessment practices surveys, and I'm available to answer any questions you may have.
Vice Chair Schaefer has his hand up, and Member Gaines after.
Ms. Lumsden, I didn't hear about anything going on in District 4. Are we too far away, or did we just didn't have any problems?
Oh, currently, I don't believe that we are doing any surveys or samples in District 4 at this time. Let's see here.
Maybe everything is perfect down here.
No, we just don't happen to be on that cycle yet. They may be a couple of coming up, but right now we have already issued in your district survey reports that are completed for San Diego County and Orange County, and those are already completed.
Okay, thank you.
You're welcome.
Member Gaines.
Yeah, just a question of clarification. So we do these surveys for counties, and that information is given to the assessor, and then it's also forwarded to the Board of Supervisors in each of those counties. And do we make those publicly available in any other capacity?
Yes, so each of those reports, once it has been completed and reviewed, it is issued in a letter to assessors, and it is published and posted on our website for public viewing.
Okay, so if you you highlighted some particular issues for a county assessor's office, that would be sent to the Board of Supervisors, and they could take corrective action, or the assessor could too. You know, it's pretty common that assessors are looking for additional staff or additional funding for upgrading equipment and things of that nature. So our role as members of the BOE is just to alert the assessor and the Board of Supervisors, and then of course the public can take a look at those surveys also. But it kind of stops there. Is that correct?
So what we do is when we do these compliance audits, that's what they are, they're compliance audits, and we look at the policies and procedures and looking to see if properties are being valued or processed properly in accordance with statutory regulatory provisions. And those are the things that we point out in our report. And then the assessor has the opportunity. We actually meet with the assessors ahead of time before after we are done with our report. We go over the issues that will be brought up, and then we complete the survey report based upon that conference that we have with them. And then once they see what we call a post-conference draft, then they're able to provide responses to each one of the recommendations that we are going to be putting in the report, and that is attached to the report as well. Okay. And most assessors and their staff are very open and compliant to the recommendations, and so they want to comply with the things that we bring up, and we like to work together with them in order to not only provide these recommendations, but also as a teaching opportunity for other items that come up, or things that they bring to our attention, or they may ask questions of us while we're in their county of different procedures and processes.
Okay, that's great. So, it's possible that we could do a survey of a county, and we could highlight issues that need to be resolved. They're not resolved by the assessor. They're not addressed by the County Board of Supervisors. It becomes controversial in nature and ends up on the front page of the local newspapers in that county. And if folks are coming to look at the BOE and what they did, we've satisfied our constitutional duty in terms of doing the survey.
Yes, that would be the purpose of our survey, is to make sure that the county assessors and their staff are following policies, procedures, and statutory and regulatory guidelines. So,
Right.
so that would be, yeah, there are certain things.
We don't have the authority to make a county assessor accept any of the recommendations, right? So we're simply advisory. We highlight it, we make it public, and that's where our duties end. Is that
Yes.
correct?
I would have to say probably yes, and in the sense that, however, we do, when we go back to the county assessor's office to do the following survey, because we survey each of the counties approximately every 5 years, then we look to see if any of those items have been resolved, and if they haven't, then we will make another recommendation in that capacity. So, but as far as being able to, we don't have authority to have them comply with whatever our recommendations are.
Sure.
We can make the recommendations and then hope that they will put them into place.
Yes. Okay. I just wanted to clarify that so that I'm thinking correctly in terms of what we can do and what we can't do.
Certainly. Yeah. Most, like I said, most of the county assessors and staff are very compliant and very open to our recommendations and willing to try to put those recommendations into place.
Yes, I absolutely.
Yeah, it's a very good collaborative,
Sure. Very well.
For experience,
yes.
for both us and for the assessors. We work together with them very well.
Yeah, very well. That's great. Thank you.
You're welcome.
Thank you. I had just one quick question for you. What type of feedback are we receiving from the assessors now, since these surveys and audits have been conducted remotely for the past 2 years?
Yes, so when we first started doing these remotely, it was mostly because, we still have these surveys that we need to still do, and it's in statute that requires us to do these surveys and samples. And we came up with a plan to, do this remotely. So in the beginning, it was a little bit cumbersome for the assessors. It kind of required them to assist us a little bit more in trying to collect some of this information. But as time has gone on, we've been able to work not only with the assessors and their IT departments, as well as CDTFA's IT department, so that we have a better way of collecting the information and keeping it secure and confidential. And so that has actually helped a lot and has sped up the process. So we have found that it has slowed down the process a little bit, and it has, we kind of do enjoy that collaborative effort and the building those relationships with the staff members, the assessors and their staff on this process. So, we are looking forward to getting back out in person when we can, but it has been a good experiment in the sense that it's allowed us to collect this information remotely. So it's put that out there for us to see how we could maybe utilize that as part of, again, like a hybrid, where we could still collect maybe some of the information remotely and impact the assessors and their staff less than what we've had to in the past. And so just by being in their office is what I mean by impactful. So, by us not having to be in their office maybe as long or as much, if we could get some of the data remotely continuing forward, that would be great. But I think there will be probably like a hybrid of that, where we do find it's very beneficial to still have that communication and that one-on-one with staff. So moving forward, we hope to make that possible.
Thank you.
Thank you.
Seeing no other hands or comments, Ms. Taylor, if you would call I guess we're on the 4th sub-item.
Yes, our next speaker is Mr. McCool, who will report on state assessed property.
Good afternoon, Chairman Vasquez and honorable members. My name is Jack McCool, Chief of the State Assessed Properties Division. Today I will provide information on the status of ongoing work in our division. Staff continue to work on finalizing the property statement forms in preparation for the 2022 appraisal season. Staff are busy compiling the hard copy versions of the forms by industry and are preparing the mailing of the forms to each state assessee with the target date being the last week of December. Staff are also working with CDTFA Forms and Publications Unit on the remaining electronic fillable and ADA compliant forms, which will be placed on our website. As a reminder, the annual property statement forms are due on March 1st of each year. Staff are continuing to work on property tax audits. COVID-19 and office and telework restrictions remain in place for most of our state assessees, and SAPD staff have been flexible in working with assessees on obtaining the documentation necessary to conduct the audits. All of this year's audits have been completed and are now going through the review process. Any audits that result in a change in value recommendation will be brought before the board in early 2020 for the board's consideration. I am happy to report that our work on state assessed appeals for the 2021 year is now complete. Today's agenda included the final 8 petitions in this year's workload. That brings this year's total of petitions resulting in board action to 28. I would like to thank our partners in the Board Proceedings Division for their hard work overseeing the petition process. I would also like to thank our partners in the legal department for their tireless work and collaboration throughout this year's appeal season. And finally, honorable members, as we close out 2021, I would like to take a moment to thank all of the staff of the State Assessed Properties Division. I would like to thank each member of the SAPD team for their hard work and dedication throughout the year in service to the people of California, and to each member of the Tax Area Services section, Field Appraisal and Board Roll section, and the Unitary Valuation and Auditing section. I thank you for all of your contributions and efforts this year. That concludes my report on the status of the State Assessed Properties Division for this month. Thank you.
Thank you. Members, do we have any questions or comments of Mr. McCool? Seeing no hands, or I think we're good. Ms. Taylor, can we introduce the next speaker?
Yes, our 5th sub-item, welfare exemption process improvement, will be presented by Ms. Keach.
Good afternoon, Chairman Vasquez and honorable members of the board. My name is Lauren Keach, and I am the manager of the welfare exemption section of the Property Tax Department. Today, I'll provide you with an update on the welfare exemption supplemental clearance certificate process improvement project. Our goal for the project is to streamline the SCC process for claimants seeking to exempt low-income housing from property taxation. We have identified opportunities for improvement and ways to increase efficiency when processing SCC claims. Since the last board meeting, staff continues the detailed work of reviewing each step and requirement in the welfare exemption process of granting an SCC. We have made progress in our examination of the application process. Staff analyzed and revised the checklist and claim form, which was submitted for internal review and has been approved since the last board meeting. The outcome of these revisions will make it less cumbersome for claimants to navigate the SCC claim form and make the form more user-friendly in order to accomplish our goal of providing a more clear and concise application process. Now that the internal review process is complete, we have moved on to phase 2 of the application process, which is the plan design phase to implement the revisions. As we move forward, we will continue to provide updates and information regarding our progress and improvements to allow for visibility into the process and to ensure the board members are kept informed. And members, this concludes my presentation. I'm available for any questions you may have. Thank you.
Thank you. I just have 2 quick ones for you. One is, what specific procedures will you be trying to improve in this next phase?
So the next phase will be the claims process, and we will be specifically focusing on the SCC claims procedure. So we'll be doing a thorough internal review on our procedure and processing SCC claims, looking for areas of improvement and ways to increase efficiency on our end.
Great. And then on the, as you're talking about improvements, what are you considering in response to taxpayers' complaints over the years, or is Or I guess maybe giving me an example of what you're looking at along those lines.
Absolutely. I would say one of the biggest complaints we've received from taxpayers over the year aligns directly with our goal for this project, which is the time frame it takes to process an SCC claim. So that's really what we're focusing on here with these 3 steps or these 3 processes we're looking at, and how we can increase efficiency and increase the time frame for processing the SCC claims.
Thank you. Members, if you're not speaking, please mute your mics. Okay, any other comments or questions for Ms. Keach? Seeing none, thank you again, and then Ms. Taylor.
All right, we'll go out and seek public comment. So AT&T moderator, can you let us know if there was anyone who would like to make a public comment on these matters?
Certainly. Ladies and gentlemen, to make a comment, please press 1 and then 0. 1 and then 0 on your touch tone phone. And presently we have no one in queue.
Thank you. And Ms. Taylor, I'm assuming we had no written comments as well, right?
You are correct.
Okay, with that, if you could please call the next item.
The next item is K4A, Legislative Research and Statistic Division Chief's Report, Agency's 2022 Legislative Proposals. The board will consider suggested proposals from the Legislative Research and Statistics Division for legislation to be sponsored by the Board of Equalization in the second year of the 2021-2022 legislative session. K4A1, 2022 Legislative Proposals, Property Tax, amend Section 15620 of the Government Code. Amend to provide a 60-day extension in the case of public calamity for reports filed with the Board of Equalization. This matter will be presented by Mr. Weatherby.
Thank you, Ms. Taylor. Good afternoon, Chair Vasquez, Vice Chair Schaefer, and honorable members of the board. This is Dustin Weatherby, Chief of the Legislative Research and Statistics Division. So attached to the public agenda notice, I have provided the board with 3 legislative proposals and the respective analyses for consideration by the board for inclusion into the BOE's 2022 legislative package. For proposals approved by the board, I will begin the process of working with the legislature to secure authors and assist with moving the board-sponsored proposals through the legislative process. For each of the proposals I am presenting today, I will summarize the proposed legislation, provide background and history on why the proposal is necessary, and state any fiscal effects the proposed change would have. Each of these proposals will be discussed and presented separately. So the first legislative proposal for your consideration is amending Government Code Section 15620 to authorize the State Board of Equalization to extend deadlines for reports that must be filed with the board by up to 60 days in the event of a public calamity. This proposal comes from the hard work done by the board, agency staff, and interested parties in relation to deadline extensions related to the COVID-19 pandemic. This proposal was discussed by agency staff and various stakeholders in an interested parties process in early November. During that IP process, no individual stakeholders raised any concerns with the language that is being presented to the board today. So during the COVID-19 pandemic and the related restrictions from the governor's stay-at-home orders, the ability of assessors, assessment appeals boards, and taxpayers to meet certain property tax deadlines was a primary concern. Based on existing laws, the board was limited in the relief it could provide. Accordingly, the board and its stakeholders were dependent on the governor issuing executive orders to grant relief. Current property tax laws provide the board the authority to extend certain deadlines, but limits who may be granted an extension and the amount of time granted. This authorization includes Government Code Section 15620, where the board can extend deadlines by up to 30 days, but makes no provision for extra time in the case of a public calamity. This proposal will provide the board the flexibility to grant a 60-day extension to report filers in the rare instances of a public calamity. Without a public calamity deadline extension, the board would be reliant upon future governors to issue executive orders that would authorize the board to extend these deadlines. This proposal would result in only minor absorbable costs to agency staff to update any publications that are necessary. This will conclude my presentation on this legislative proposal, and I'm available to answer any questions you may have. Thank you.
Thank you. I see a hand from Vice Chair Schaefer. Go ahead.
Mr. Weatherby, you said you want to take each one of these proposals separately. Does that mean we can't vote on them as a group, or is there some reason you want to have 3 separate votes?
Thank you, Vice Chair Schaefer. So for each of the proposals, they're each an individual legislative proposal. So the board would need to vote on each one of those items separately and not on a package as a whole.
Thank you.
Any other comments or questions for any of the members? Seeing and hearing none. Ms. Taylor, we don't have any written comments on this, do we?
We do not have any written comments.
Can we check with AT&T before we move forward?
Yes. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Certainly. Presently, we have no comments.
Okay, so then I understand we need to make separate motions for each one. Is that correct, Mr. Weatherby?
That's to my understanding, yes, Mr. Chair.
Okay, so let me start, I guess, with the first one. I'll make a motion to approve this proposal as presented. I believe the board will use the extra 30 days only in the most serious circumstances or obvious hardship or disaster. Is that correct?
That would be correct. It would be in the instance of a public calamity.
Okay.
30.
Vice Chair Schaefer, you got your hand up.
I heard the chair, you mentioned 30 days. What I'm reading here is to provide a 60-day extension. I'm a little confused.
So my understanding was 30, but is it more, Mr. Weatherby?
So the board currently has authority to do a 30-day extension, but in the case of public calamity, the board can go up to 60 days. So it's like an additional 30-day extension on top of the board's current authority of 30 days.
Okay, I see. Thank you for the clarification.
You're welcome, Vice Chair.
Okay, it's been moved. Do we have a second on this?
Yes, Mr.
Deputy
Chairman.
Keller Stowers, I second it.
All right, I see a second. I see two. Member Cohen has got a second. See no other hands or comments on this. Ms. Taylor, we already checked with AT&T on this, correct?
Correct.
Why don't we go ahead and take a vote on this first one?
All right, the motion on the floor is to approve the proposal as presented. Chairman Vasquez,
Aye.
Vice Chair Schaefer,
Aye.
Member Gaines,
Aye.
Member Cohen. Member Cohen, I didn't quite hear you. Thank you. There seems to be something wrong with your microphone, but.
Your audio is a little off, okay.
And Deputy Controller Stowers.
Aye.
Okay, so that's unanimous of all those present. So now we need a second motion for the legislative proposal tax amendment section. Is it 15620 of the government code? Is that correct, Mr. Weatherby?
That was our motion that was on the floor, Chairman Vasquez.
Oh, then which is the second one? He said he needed.
So now we're going to present item K4A2.
Oh, I got you. Okay.
Yeah.
I see what's, okay.
All right. Our next item is K4A2, 2022 legislative proposals, property tax, amend section 97.68 of the Revenue and Taxation Code, amend to make a technical changes of reference of State Board of Equalization to California Department of Tax and Fee Administration. This matter will be presented by Mr. Weatherby.
Thank you, Ms. Taylor. Board members, the second legislative proposal for your consideration is a technical cleanup amendment to align the code section with current practice. This proposal would amend Revenue and Taxation Code section 97.68, which relates to the sales and use tax in the Educational Revenue Augmentation Fund. This code section requires a total amount of ad valorem property tax revenue otherwise required to be allocated to a county's Educational Revenue Augmentation Fund to be reduced by the countywide adjustment amount. The countywide adjustment amount is to be deposited into a sales and use tax compensation fund that is to be established in each county treasury. Section 97.68 specifically identifies the State Board of Equalization rather than a general reference to board. However, the responsibilities itemized under this section have been handled by the California Department of Tax and Fee Administration since July 1st, 2017. These amendments relate to the sales and use tax program, which the BOE no longer administers and does not impact any BOE related items. This proposal would follow current practice and provide a technical cleanup amendment to correctly reference the CDTFA in relation to the sales and use tax in this provision. This proposal will not have any fiscal impact on the agency. This will conclude my presentation on this legislative proposal, and I'm available to answer any questions you may have. Thank you.
Seeing no other hands, and I believe you clarified my question, because you mentioned right now that this procedure, I guess we're talking about, our operation that's currently performed, I guess, by the BOE or the CDTFA will be changed or will not be changed.
So the code section that's being amended by this proposal now applies to the CDTFA, whereas prior to July 1st, 2017, it was under the BOE's jurisdiction. So now it's just updating the code section to reflect current practice, but no other BOE related programs will be affected by it.
Got it. Thank you. Seeing no other hands or comments, Ms. Taylor, we don't have any written comments on this, do we?
We do not have any written comments.
Can we just check with AT&T before we move forward here?
Yes. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Certainly, to make a comment, please press 1 and then 0. 1 and then 0. And we presently have no comments.
Thank you. With that, members, I would like to just move the staff's recommendation on this.
Being that the board sponsored to amend RT section 97.68, I make that motion.
Okay, it's been moved by Ms. Towers, and I will go ahead and second that. Seeing no hands or comments, Ms. Taylor, if you'd call the roll.
Chairman Vasquez,
Aye.
Vice Chair Schaefer,
Aye.
Member Gaines,
Aye.
Member Cohen,
Aye.
Deputy Controller Stowers.
Aye.
So that's unanimous of all those present. Thank you, Mr. Weatherby. And with that, Ms. Taylor, you can move on to the next item.
The next item is K4A3, 2022 legislative proposals, alcoholic beverage tax, amend to section 32253 of the Revenue and Taxation Code. Amend to provide a 3-month deadline extension for reports or taxes due for the alcoholic beverage tax during a governor's declared state of emergency. This matter will be presented by Mr. Weatherby.
Thank you, Ms. Taylor. Board members, this proposal comes from board conversations around deadline extensions during the COVID-19 pandemic for tax programs the board administers. This proposal would amend section 32253 subdivision B2 of the Revenue and Taxation Code to expand the definition of disaster to include the infectious disease, which would authorize a 3-month deadline extension for the alcoholic beverage tax for situations similar to the COVID-19 pandemic. For background members, on March 4th, 2020, Governor Gavin Newsom signed a proclamation of a state of emergency to contain the spread of COVID-19. During this time, taxpayers were still liable to remit tax liabilities and file reports by specified deadlines. The board may extend deadlines for good cause by 1 month and up to 3 months in the case of a disaster. However, the board was not able to utilize these sections to extend deadlines and relieve interest for COVID-19 because the definition of disaster was interpreted as not including disasters such as the current COVID-19 pandemic. The current definition of disaster includes fires, flood, storm, tidal wave, earthquake, or similar public calamity, whether or not resulting from natural causes. This definition was interpreted to not include a situation like the COVID-19 pandemic. As a result, the BOE was reliant upon the governor issuing executive orders to extend deadlines and provide relief from interest. Without these executive orders, there would have not been the authority to extend alcoholic beverage tax deadlines or relieve interest from these deadline extensions during situations like the COVID-19 pandemic. If future pandemics were to occur, the BOE would be relying on future governors to also issue executive orders authorizing these deadline extensions. Additionally, taxpayers who receive a deadline extension pursuant to RTC section 32253 and pay the full tax within the period for which the extension is granted must also pay interest at a modified adjusted rate per month from the date the tax would have been due without the extension to the date of the payment. Interest relief may be provided if it's found that a taxpayer's failure to make a timely return or payment was due to a disaster. A taxpayer seeking interest relief must file a claim. For legislative background on this issue, the BOE sponsored AB 1559 in 2016 that authorized the BOE to extend for up to 3 months the time for a tax or fee payer to file a tax or return report or pay the tax in the case of a disaster across several tax and fee programs the BOE administered at the time, and additionally added the definition of disaster in RTC section 32253 in effect today to conform with BOE regulation 1730 in relation to the sales and use tax law. AB 1559 was signed into law, and this proposal would provide a narrow expansion to add infectious disease into the definition of disaster the board sponsored in 2016 for purposes of providing a 3-month deadline extension. This proposal would result in only a minor fiscal impact from the delay in the state receiving tax revenue from the program and any related interest revenues that are waived from the deadline extension. This will conclude my presentation on this legislative proposal, and I'm available to answer any questions you may have. Thank you.
Thank you. Members, any comments or questions? Seeing and hearing none. Ms. Taylor, we don't have any written comments on this, do we?
We do not have any written comments.
Can we check with AT&T before we move forward here?
Certainly. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Yes, please press 1 and then 0 for comments. 1 and then 0 for comments. And we have no one in queue. Back to you.
Thank you. With that, members, I will move the staff recommendation on this proposal to amend the alcohol beverage tax, amend section 32253 of the Revenue Taxation Code.
Second.
It's been second. Seeing no hands or comments, Ms. Taylor, if you'd call the roll.
Chairman Vasquez,
Aye.
Vice Chairman Schaefer,
Aye.
Member Gaines,
Aye.
Member Cohen,
Aye.
Deputy Controller Stowers.
Aye.
So that's unanimous of all those present. With that, Ms. Taylor moves on to the next item.
The next item is K5, Taxpayer Rights Advocate Office Report, an update on the activities of the Taxpayer Rights Advocate Office. This matter will be presented by Ms. Thompson.
Good afternoon, Chair Vasquez and honorable board members. I'm Lisa Thompson, the Chief of the Taxpayer Rights Advocate Office. I'm here to provide you with an update of the activities of the Taxpayer Rights Advocate Office to keep you informed. I'm pleased to share with you some statistics on the number of cases completed by the Taxpayer Rights Advocate Office last month, and then provide some insight on the types of those cases. In November 2021, we completed 21 cases. 4 were in Board Member Gaines's district, District 1. 10 were in Board Member Cohen's district, District 2. 5 were in Board Member Vasquez's district, District 3. And 2 were in Board Member Schaefer's district, District 4. Of the 21 cases completed, 2 were in the administrative category and 19 were in the valuation category. The administrative category includes topics such as creating and mailing of tax bills, refunds, penalty cancellations, defaulted taxes, access to data, special assessments, or direct levies on the property tax bill. And the valuation category includes topics such as change in ownership, declines in value, appraisal methodology, exclusions, exemptions, new constructions, actual enrollment of values, general property taxation, and assessment appeals. With respect to the administrative category, 1 case involved delinquent taxes, and the second involved creating and mailing of tax bills. The Taxpayer Rights Advocate Office assisted the taxpayers by providing information about property tax due dates versus delinquency dates. In the case of the delinquent taxes, we also helped the taxpayer understand the availability of payment plans as long as property taxes were not delinquent for more than 5 years. We also helped the taxpayer navigate viewing of taxes owed online with the tax collector's website. With respect to the valuation category and its 19 cases in total, 2 pertain to decline in value, Prop 8 issues. 7 cases addressed exclusions from reassessment, of which pertain to the base year value transfer exclusion for persons age 55 and over. 2 cases pertain to the parent-child exclusion. 1 case involved the welfare exemption. 2 cases addressed new construction. 2 pertain to actual enrollment of values. 1 involved assessment appeals, and 2 cases pertain to general property taxation. For the decline in value cases, the TRA office provided information on California's property tax systems, explaining that for real property, it is assessed annually at the lower of factored base year value or market. The TRA office helped the taxpayers understand that they can request an informal appeal or a formal review from the assessor's office, and can provide support to show the market value of the replacement is lower than the assessed value, even if the property was assessed under a decline in value below its factored base year value. We also explained their appeal rights and directed them to resources on our agency's website that can assist them in the appeal process. In this past month of November, there were numerous cases involving exclusions, the majority concerning base year value transfers. 7 of the 9 exclusion cases addressed base year value transfer exclusions for seniors age 55 and over, and 2 of the cases involved a parent-child transfer exclusion. The issues involved with the base year value transfers cases varied among those taxpayers. In 2 of the cases, the taxpayers had purchased their intended replacement property before the April 1st effective date of Proposition 19. And because the property purchased was more than the market value of the original property, and because it was purchased in a different county than the original, then it did not meet the qualifications for the base year value transfer. The Taxpayer Rights Advocate Office explained the requirements of the base year value transfer provisions under Proposition 60 and 90 in place prior to the April 1st effective date of Proposition 19, as well as the requirements for the base year value transfer provisions of Proposition 19. We provided information explaining that prior to April 1st, 2021, the base year value transfer provisions only allowed transfers to other counties if that replacement county had adopted an ordinance accepting base year value transfers from other counties. And we help the taxpayer to understand that if they wanted to take advantage of the Proposition 19 base year value transfer provisions, they could buy another property as long as it was within 2 years of the sale of their original property. With respect to the other 4 of the base year value transfer cases, they concerned the timing of processing applications for base year value transfers under Proposition 19. Taxpayers contacted our office with concerns that they needed to pay taxes on a higher amount and wait for the assessor's office to process the base year value transfer claims. In some cases, the assessor's office had told the taxpayers that they were holding off processing base year value claims because the law for Proposition 19 had only recently passed. The Taxpayer Rights Advocate Office explains to taxpayers that although Proposition 19 was approved by the voters in November of 2020, implementing legislation for Proposition 19 had only recently passed on September 30th, 2021. The Taxpayer Rights Advocate Office also explained that the 2021 property tax bill represents the property's assessed value as of the January 1st, 2021 lien date, which was that of the prior owners, and that roll value cannot change. We explained that once the assessor's office approves a base year value transfer claim, a negative supplemental would be issued for the difference between that amount on the assessment roll and the amount that the assessor determines to be the new taxable value of that replacement property, considering the transferred taxable value and any excess market value. Additionally, we help taxpayers understand that there is a lot of work in processing base year value claims, especially when the original property is located in a different county than the replacement. The assessor's office must coordinate with the other county to obtain information on the market value of the original property, as well as on its factored base year value, and then adjust it for any time to the purchase date of the replacement. To help taxpayers understand what information is obtained by the replacement county, we directed them to a sample of the form BOE Form 19C, Certification of Value by Assessor for Base Year Value Transfer, which is posted to our website in the forms area for forms that are used by assessors' offices. In all these cases, we coordinated with the assessor's office to confirm that they had received the base year value claim, and where appropriate, we advised the taxpayer that they had not provided a full assessor's parcel number representing the condo they purchased. So we had asked the assessor's office to make note of that, and they did. The remaining base year value transfer case pertained to the denial of a base year value transfer after the taxpayer completed construction on a home that the taxpayer built on land that was in part inherited from his family. The TRA office researched the situation, found that the taxpayer, along with 2 siblings, had inherited vacant land when their parents had died, and subsequently the taxpayer bought 2/3 of the property from his siblings. The TRA office explained that the assessor's office was correct in not approving the base year value transfer because 1/3 of the interest of the land was inherited by him. Therefore, it did not meet the requirement that both the replacement and the original must be purchased for consideration. The Taxpayer Rights Advocate Office provided the taxpayer with resources confirming the unavailability of the base year value transfer under Proposition 60, since the taxpayer's portion of the land was not purchased for consideration, and we directed them to LTA 2006-20 and several property tax annotations. With respect to the 2 parent-child exclusion cases, one involved a taxpayer that inherited property after her mother passed away and later sold it, and the other involved the inheritance of legal entity interests. For the taxpayer that sold the property, the TRA office coordinated with the assessor's office to confirm receipt of the claim and ask for the status of the processing of that claim. since the taxpayer indicated the assessor's office had acknowledged a mistake. We then explained to the taxpayer that the roll correction to cancel the supplemental assessment had not yet been processed, and once the assessor and auditor's office completed its work, the auditor's office would issue a refund and adjust the amount of property taxes owed. We helped the taxpayer to understand that the assessor's office, by doing a roll correction, did not mean that they had made a mistake, and that a roll correction is a term used to change, to reflect a change in value that was assessed on a particular assessment roll, such as in the case where an exclusion is granted. We also indicated that an exclusion is from change in ownership, which a parent-child exclusion is, and that is not automatic, which a taxpayer must apply for, and then the assessor determines whether that claim is approved, which takes some time to process. For the taxpayer that inherited a legal entity that owns California property, the Taxpayer Rights Advocate Office explained that the parent-child exclusion does not apply to transfers of interest in legal entities, and that the parents would have had to own the property as an individual for that to count for the parent-child exclusion. We also directed the taxpayer to resources on our agency's website regarding the parent-child exclusion to help the taxpayer understand why it did not apply to transfers of interests in legal entities. The TRA office completed work on one exemption case, which pertained to the welfare exemption. The TRA office provided information on the co-administration of the welfare exemption with our agency, determining the organization itself qualifies for the welfare exemption, and the county assessor where the property is located, which is responsible for determining if the property of a qualifying organization qualifies for exemption. We also coordinated with our agency's property tax department to determine receipt of the claim for organizational clearance certificate and ensured that the taxpayer understood they did not need to wait to file the welfare exemption claim on their property until the organization was issued an OCC. With respect to two cases involving new construction, they involved a disagreement of the assessed value after they had completed new construction. The Taxpayer Rights Advocate Office provided information on what is considered new construction for property tax purposes and provided the taxpayers with resources. Additionally, we explained appeal remedies if the taxpayers disagreed with the assessed value of the new construction for that base year value, or if they felt at any future time the market value was lower than the assessed value on a subsequent lien date. The next cases completed by the TRA office pertain to the actual enrollment of values. In one of the cases, we provided information on the statute of limitations for corrections and the appeal period for the base year value for completed new construction. And for the other case, the TRA office explained to the taxpayer what was needed to support that a boat was no longer owned by the organization as of the 2021 lien date in order for the assessor to cancel the assessment. The remaining three cases involved assessment appeal and general property taxation. With respect to the case involving appeals, the taxpayer had concerns about the historical assessment of his family's property. Our office provided information on appeal filing periods and coordinated with the assessor's office to ensure that his questions were responded to. With respect to the cases involving general property taxation, one pertained to state assessed property and the other one pertained to local assessment. The Taxpayer Rights Advocate Office explained that when property is assessed by the State Board of Equalization, there is a unitary value determined for the state assessee, and that unitary value is allocated to the various counties and districts, so they will not have a specific tax bill for each and every property they own, like a person would on a home. The TRA office also helped the taxpayer understand California's property tax system, and that for locally assessed property, each year property is assessed at the lower of factored base year value or market, as well as the assessor's process for reflecting change in ownership for a new owner. We directed the taxpayer to resources on our agency's website concerning California's property tax system. And in one case, we provided a chart to the taxpayer showing that each year's assessed value since they purchased it 5 years ago, and how the application of the inflation factor based on the CPI was applied to arrive at the factored base year value. Additionally, since the taxpayer was concerned about licensing and increasing property taxes and not being able to afford them, when he retired, the Taxpayer Rights Advocate Office advised that taxpayer about the availability of the Property Tax Postponement Program from the State Controller's Office. To provide some additional insight on the workings of the Taxpayer Rights Advocate Office with respect to the defaulted tax case, the Taxpayer Rights Advocate was contacted by the taxpayer's daughter because her daughter found out that her elderly mother was behind on paying her property taxes for several years. The daughter was concerned that the mother would lose her home, so she reached out to our office. Our office helped this taxpayer understand that the property owner can ask the tax collector to enter into a payment plan as long as taxes have not been delinquent for 5 years. We explained to the taxpayer that our review of the tax collector's website confirmed that the 2017 taxes had been paid, so she would be able to enter into a payment plan. We also explained that once her mother was current on her property taxes, then she could look into the property tax postponement program offered by the State Controller's Office, since that could be of benefit to her. This is particularly important because a taxpayer must apply for that program each year, and the application period is over a 5-month period. And this year, that filing period opened October 1st, 2021 and ends February 10th, 2022. Whenever a taxpayer expresses financial difficulty and that they may meet some of this criteria, such as being elderly or disabled, we always make them aware of the availability of that property tax postponement program that could be beneficial to them. Additionally, I would like to inform the members about the Taxpayer Rights Advocate Office and that we have had a new member join our team. We hired an associate property appraiser and she began working on taxpayer cases in November, and we are pleased to have an additional member to help taxpayers. The last item I want to update you about is on concerns taxpayer education. At the August board meeting, Board Member Cohen inquired about taxpayer education, followed by other board member discussion and the value to taxpayers. In 2022, part of our plan for the taxpayer education is to work in collaboration with the California Assessors Association to identify the top 5 issues or topics in need of taxpayer education, then develop materials addressing those areas. At future board meetings, I will provide you with further updates to keep you informed. That concludes my update. I'm available if you have any questions.
Thank you. Members seeing no hands or comments, I would just make a brief comment that actually at our last franchise tax board meeting, they were giving kudos to you, Ms. Thompson, and your department for doing such a great job. And people were asked, actually the public was asking that the FTB might want to take a look at your examples.
Oh, well, thank you. I have a great team, so I owe it all to them. Thank you.
Kudos. Any other comments or questions? Oh, Ms. Stowers, go ahead.
Thank you, Chair Vasquez. Thank you, Ms. Thompson. I just want to give you kudos as well, and thank you for cross-marketing your property tax postponement program. It's a very important program for those who are qualified, so they can have their taxes postponed for a year or so. So again, thank you very much. Great report.
Seeing no other hands or comment. Oh, Member Cohen, go ahead.
Thank you. I just want to say great job. Great report.
Thank you. Ms. Taylor, we don't have any written comments on this, do we?
We do not have any written comments.
Can we check with AT&T?
Yes. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Yes, please press 1 and then 0 if you have a comment. 1 and then 0 if you have a comment. And no one in queue, Ms. Taylor. Back to you.
Thank you. With that, Ms. Taylor, if you'd please call the next item.
The next item is L1A, issues raised by 2nd District County Assessors during the annual meeting of the Board of Equalization and County Assessors. Recommendations regarding issues raised by the 2nd District County Assessors during that meeting. This matter will be presented by Member Cohen.
Member Cohen, you're up.
Great, thank you very much. Colleagues, I'll be tight and succinct as I can. So during the Board of Equalization 2nd District breakout session of the annual meeting with the Board of Equalization and the County Assessors, this was held on October 19th, 2021. There were several county assessors that expressed interest in pursuing proposals that address ongoing challenges impacting property tax administration and their offices. And while those concerns may not be universal to every county in the district, I think that it's prudent that we present these proposals here before the board so that we can initiate a review and most importantly have a discussion during the upcoming board meetings, so that it's possible that some of the issues raised are also, so that it's possible that because some of the issues that are raised and faced in my county, maybe other county assessors and other equalization districts would be able to either know how to solve or how to address. So bringing these issues to light now provides us with an opportunity to ensure that our property tax administration practices and that we're ensuring that it's a statewide guidance as well as service to all of our 58 county assessors. So I'm just going to go over briefly the list, and here they are. So here are the issues that were raised. First, this is pertaining to the subject matter of training for members of assessment appeals boards. This is a really interesting topic. So the assessment appeals boards, which I'll also refer to as the AABs. The AABs are charged with performing often complex analysis and analyses of data and evidence, challenging or supporting property valuations. And in the interest of supporting the AABs, it's been suggested that a training program be established to provide guidance to AAB members on the valuation issues. Here at the Board of Equalization, I could leverage its training. You could leverage the training as well, along with any other training at the county level to ensure that AAB members have the best knowledge to perform their critical valuation duties. Now, another topic had to do with training for county councils. And similarly, just like training for AABs, county councils provide legal guidance on property tax issues to the county assessors as well as to AABs. And their duties are to ensure that county councils possess the knowledge and expertise to provide guidance on a myriad of complex property tax issues. It's been suggested that a training program be established to enhance the skills of county councils who provide guidance on these particular property tax issues. Now, the third topic that I want to discuss is the acceptance of electronic signatures. During the pandemic, the requirement was reviewed about having wet signatures on documents submitted to the assessor's offices. Now, wet signatures have historically been required to ensure that the authenticity of documents filed. However, with modern technologies, third-party verification or second-party two-tier verification, processes that we go through ourselves even when we're logging onto our own system, it's likely that the requirement for wet signatures is outdated. Now, there's been a lot of consternation around this issue. It's been suggested that the requirement of wet signatures on documents submitted to county assessors' offices be eliminated, and that electronic signatures be accepted as a regular course of business. This may require a statutory resolution in order to be achieved. The fourth topic that I want to talk about is the review of depreciation, valuation guidance, and schedules. As part of the Board of Equalization's constitutional and statutory responsibility, it is incumbent upon us to provide guidance on the valuation of property and the BOE issued assessor handbooks. And many of these handbooks include depreciation schedules. And these schedules, in addition to them, we present good factors or other guidance to ensure that there is accurate valuations, again, that equalizes this process so that it's consistent throughout every county in the state. It's been suggested that the Board of Equalization review its depreciation value guidance and schedules to ensure that valuation procedures, the methods, and the recommendations are consistent with contemporary values. And I want to lean in on this. I think this is actually really important and very interesting. One of the assessors at the District 2 breakout sessions suggested that a review of the schedule is in order, and as an example offered up that the depreciation schedule for food manufacturing is 15 years old, and this assessor suggested it could be shorter. And I tend to agree, but we have not studied it, we have not discussed it. This is kind of just on a gut level. I know that things have changed in 15 years. Our technology has changed, how we communicate, how we operate has changed. So I would imagine that there was a shorter timeline that we could use in this schedule for the depreciation schedule for food manufacturing. Now, while saying this, I also recognize the excellent work of our property tax division staff in preparing and issuing the assessor handbooks. There may be an opportunity here for some additional reviews of the depreciation schedule and the schedule to ensure that they reflect the real world practices. So of course, ongoing staffing and funding issues will likely have to be addressed before we can have a perfect solution for updating our assessor handbook. The fifth topic that I want to need to let Yvette back in. The fifth topic that I wanted to discuss is enhancing funding for state supplementation for the county assessors program. This is the the SCAP, is what people in our industry calls it. So finally, I'll close on this, but I believe that it would be prudent for us to acknowledge the ongoing personnel and technology challenges facing county assessors' offices. The state of California in 2018 Budget Act appropriated $5 million to create the state supplementation for county assessors program as a 3-year pilot program. And this has been a wildly, I'd say, exciting program, but not without its challenges, like most things from the government, right? The SCAP funds, they're available for both new assessment staff and for technological improvements, but what they do is they require a local match at the rate of $1 local dollar for every $2 the county receives in the SCAP funds. This works for the wealthier counties, but it provides a challenge for the more rural counties or counties with just a smaller budget. Here's a fact. In 2019, the agency and the California Assessors Association joined my office in discussions with the administration about expanding this program to increase funding and change the criteria to increase smaller county participation and their ability to leverage these grant dollars. Well, it's been suggested that expanding this program could be beneficial due to prior success in utilizing grant funds to address technology and personnel challenges in local assessors' offices. So, in the interest of fulfilling this body's constitutional and statutory responsibilities, what I'd like to do now is to ask the executive director to report to the board and the agency, report to the board her recommendations on possible BOE actions that we may take to address the issues that I just raised, all 5 of them. And I'd also like to suggest that the executive director consult with the CAA in developing a response to these items. So at this time, in closing, I'd like to respectfully ask board members and colleagues to join me in this request. Let's discuss it. And I'd like to make a motion to be a part of our discussion, Mr. Chair, if I may go ahead and read this motion into the record.
Sure, go ahead.
Thank you. So my motion is to ask the executive director to report to the board her recommendations on possible Board of Equalization actions that we may take to, as well as the agency actions for the BOE, as well as the agency that we may take to address the issues raised in this L item, and to recommend that the executive director consult with the California Assessors Association in developing her response to the board on this item. That's my motion. There's no time limit on this, by the way. Ms. Fleming, Merry Christmas to you. There's no time limit. However,
accept it.
However, I think that it's important work, and so I don't want you to feel that pressure. But I really look forward to looking and reviewing what your suggestions would be. So, Mr. Chair, that is my motion. I don't know if there's a second, but let me know if you need me to restate, clarify anything. Thank you, colleagues. That's it for me.
I see a hand from Ms. Stowers.
Thank you, Chair Bassler. I'm gonna go ahead and second the motion, mainly for discussion purposes. I want to say I appreciate what Ms. Cohen is doing, sharing the concerns that was raised by the assessors in the 2nd district from that meeting that you guys had in October. I really appreciate it since I'm not a party of that meeting. So at least I have an idea of what the 2nd district assessors are saying. I do support a review of the issues identified within your item, and with the executive director going out and speaking with the CAA and seeing if there's what should be done, what should we do? Is it just a one-off issue for the 2nd district assessors, or is this throughout the state? So I do support that. As far as one of the items, I think is kind of the assessor handbook dealing with, I think it's section 581. I would like for the executive director to really, I'm not saying take it off the table, considering that we just adopted the most recent changes to that handbook, and Mr. Young explained that they do a deep dive every year on that issue. But I would like for the director and her staff to kind of double check that and make sure there is a deep dive. I don't want to take anything off the table. Just want to make sure that we're doing a thorough analysis on how we may need to improve our processes, and including if this change in process is going to cost the state or the assessors, the counties, any money, to consider that fiscal impact as well. And I also kind of would be curious for the other districts. I mean, you guys also met with your assessors. I just lost my video. Good thing my phone is working. You guys also met with your assessors, and I don't know, again, because I'm not a party of it, if you guys had similar concerns raised. That's all I have to say for right now.
Thank you. I just want to say, Ms. Towers, thank you. You have been a trooper throughout this entire meeting. I've seen you come in and come out and freeze and like, I don't know what's going on. Maybe this is an indication that we just need to end the board meeting on a positive note and just upgrade our technology for 2022. But with that said, I share with your interest. I would love to know what happened in other districts as well, because I suspect that there may be some symmetry, and the issues that are affecting District 2 are universal, but I don't want to make that assumption without checking with my colleagues. So I join you in that request to find out what's going on.
Let's see no other hands. Yeah, I'm supportive of this proposal, and I know many of these things, like you mentioned, I think, and then we've heard from some of the staff already, are moving forward. But I think whatever we can do to facilitate and moving forward, because I think you're right on in terms of other counties throughout the state. I know in our meeting in LA, at least when I was working with LA folks in Ventura, these issues came up, especially on the AAB training. And I think whatever we can do to move that along and hopefully try to expedite it as quick as possible would be helpful. But those are just my initial thoughts at this point. Oh, Member Gaines, I see his hand up.
Yeah, I want to thank Member Cohen for bringing this forward. And my thought is that if we could try to take a look at what might have commonality throughout the state. And she mentioned several items, and you highlighted it, Tony. The aspect of some training for the assessment boards, I think, would be really helpful. And I also like this idea of taking a look at depreciation tables too. If things could be sped up for particular industries, I'd be really open to taking a look at that and see if it made sense. I thought that was a good suggestion. I think, did that have to do with agriculture, Member Cohen?
That's an interesting question. Yes, but not as much as what goes on in your district, sir. So yeah. Let me know. Let's explore it. I mean, I have some agriculture, needless to say, right? You think about the wine making industry. I'm thinking about Monterey County also, but I think the lion's share of agriculture still rests in District 1 with you. You're District 1, right? Yeah. Okay, so tell me, what are your assessors saying? You're muted.
Sorry about that. Yeah, I'd like to take a look at the depreciation tables. I think that would be helpful in my district. And I think in terms of training, I think that would be very helpful for the assessment board, so that the members have a kind of a base of knowledge when it comes to valuation. And in some cases that, you may have people that are experienced on property valuation where that might be very basic, but at the same time, sometimes you have individuals that don't have a background and they're serving that capacity. So those are a couple areas that I think I'd like to see, and I think I would love to hear from the other board members to see what their thoughts are too. But in terms of the idea and what you want to move forward with, I'm in support of it.
So does that mean, is that a second to the motion?
I think you have a second already.
I already seconded the motion.
Oh yeah.
Okay.
Okay.
Oh, I'm sorry. I did not hear that, but you're right.
Okay.
Unless you need a third.
No, I don't need a second. All I need is a second, and then we can keep moving.
Yeah, then we're prepared to go to public comment and vote, members, if you're ready.
Perfect. I'm ready. If there's no other discussion. Great.
You're muted, sir.
Let's just check with Ms. Taylor real quick. We don't have any written comment on this, do we?
We do not have any written comments.
Well, let's just check with AT&T then real quick before we vote.
Sure. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Yes, please press 1 and then 0 for a comment. 1 and then 0. And there are presently no comments.
Okay, with that, Ms. Taylor, if you would please call the roll on the motion.
All right, I'll just restate the motion on the floor is the executive director to report to the board her recommendation on possible BOE actions.
Oh, wait, one more thing. I'm sorry, Ms. Taylor, because I want to make sure that we get this correct. Not only report back to the board, but I also am asking the executive director to collaborate with the Assessors Association. So I just want to make sure that that language is inserted into the motion.
Okay, I was going to put it at the end. Would that?
Oh, okay. I'm sorry. Okay, all right.
No problem. The motion on the floor is executive director to report to the board her recommendation on possible BOE actions that the board may take, the board and the agency may take to address the issues raised in this L item, and with the ED consulting with CAA in developing her response.
Sounds good.
Chairman Vasquez.
Members, this is Brenda Fleming, Executive Director. If I can make just, I'm trying to overstep my boundaries, but one minor amendment, if I could offer to that, and that is not just to confer with CAA on the development of my response, but on the plan. So Ms. Taylor, I just want to make sure, because the response is one thing, but to plan this involves a little bit more. So I just want to make sure that that correction is noted, please. Thank you, members, for your indulgence.
All right, Chairman Vasquez.
Aye.
Vice Chair Schaefer.
Aye.
Member Gaines.
Aye.
Member Cohen.
Aye.
Deputy Controller Stowers.
Aye.
So that's unanimous of all those present. With that, Ms. Taylor, if you would please call the next item.
The next item is M1, Public Policy Hearings, discussion on the implementation of Proposition 19, the Home Protection for Seniors, Severely Disabled, Families, and Victims of Wildfire or Natural Disasters Act of 2020. There are no staff reports or external speakers for this agenda item for this month's meeting. However, persons who wish to address the board on this topic as a public comment may do so. This matter will be presented by Chairman Vasquez.
Thank you, Ms. Taylor. Once again, as we keep this as an ongoing issue, especially with Prop 19, all the changes that are happening and hopefully down the road amendments that are coming, let me just open up this hearing to the public. And if there's nobody wishing to weigh in right now, let me just check with Ms. Taylor if there's any written comments on this.
We do not have any written comments on this item.
Can we check with AT&T before you move on?
Certainly. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
Yes, 1 and then 0 for comments. Please press 1 and then 0 for comments. And we presently have no comments.
Thank you. The only thing that I would just mention is that I know next month it looks like we'll have a little bit more an in-depth report from at least our staff on some of the movement that's happening with these potential initiatives and as amendments that may be moving forward within the legislature on making some adjustments to Prop 19. And with that, let me ask Ms. Taylor if she would call the next item.
The next item is N, public comment on matters not on the agenda. Persons who wish to address the Board of Equalization regarding items not on the agenda. Please note that the board cannot take action on items. However, the board can schedule issues raised by the public for consideration at future meetings.
Are we checking with AT&T on this?
Right, we have a written comment, sir?
Oh, we do. Go ahead.
Yes. This is a letter from Mr. Ben Lee, Tax Counsel, California Taxpayers Association. The California Taxpayers Association thanks you for the opportunity to provide comments on suggested revisions to LTA 2021/002 regarding remote hearings for assessment appeals boards during the COVID-19 pandemic. Although we are aware that the Board of Equalization is still working on this issue, CalTax has some concerns that it would like to share with the board. CalTax appreciates all of the hard work of the agency and staff have put into this issue and the extensive effort from stakeholders to provide detailed input and feedback. Although there are benefits that remote hearings have provided during these remarkable times, CalTax echoes concerns made by others regarding any permanent requirement of forced remote hearings. Remote hearings are suitable for some appeals, but a one-size-fits-all approach in which all taxpayers could be required to have their appeal in a fully remote setting is problematic. Certain disputes involve complex and intricate issues that benefit from an in-person setting. For example, complex appeals may involve countless pieces of evidence, making it more difficult for the taxpayers to present their case in a remote setting. During an in-person appeal, taxpayers can refer to specific exhibits with the assurance that board members and others have the materials readily available. In a remote hearing, however, there is no assurance that the evidence referred to will be in front of the participants, making it more arduous for taxpayers to present their case zealously. To safeguard taxpayers' due process rights and ensure that all parties are able to present their case in a meaningful hearing, taxpayers must continue to have the opportunity to determine the format of their appeal hearing. Additionally, a virtual setting may make it more difficult for the appeals boards and parties to evaluate the veracity of witnesses. Witnesses appearing in a virtual setting could refer to notes without being detected or could be coached by others out of the video camera's view. An in-person setting allows appeals board members and the parties to adequately judge the veracity of a witness and ensure that there is no improper conduct occurring. Furthermore, in certain counties, some parties have been allowed to appear at the hearings in person, while the other party participated remotely. This situation could provide an advantage to the party appearing in person and put the taxpayers at disadvantage. Taxpayers should retain the option to choose the format of their appeal hearing to avoid these types of potential issues. Other administrative adjudicatory bodies in California have and continue to provide taxpayers with control over the format of their hearings. The agency tasked with the handling administrative tax appeals, the California Office of Tax Appeals, has provided taxpayers the option of holding their hearings remotely or delaying them until an in-person option is available. While this may not be a perfect comparison, it illustrates that a similar election in the property tax appeals arena is warranted and practicable. To preserve taxpayers' due process rights and guarantee the opportunity for all parties to present their case in a meaningful hearing, the board should continue to allow taxpayers the discretion to select the hearing format for their appeals. Lastly, LTA 2021/002 should be revised to ensure consistency in the rules regarding document submission deadlines and the penalty for failure to meet those deadlines. While we understand the need for a bit of lead time to avoid unduly burdening the county clerks, the LTA should make clear and include language that the penalty for failure to meet the document submission deadline is a continuance of the hearing. For in-person hearings, the offended party is allowed to request a continuance if the other party seeks to introduce new evidence or documents the day of the hearing. A similar rule should be instituted for virtual hearings that would allow for a continuance if either party seeks to introduce evidence after the document submission deadline. Thank you again for the opportunity to provide feedback on the proposed revisions to LTA 2021/002. If you have any questions about these comments, please contact us. That concludes the comment today.
Thank you. Can we check with AT&T if there's anybody on the line who wishes to speak?
Yes, certainly. AT&T moderator, can you let us know if there is anyone who would like to make a public comment on this matter?
For comments, please press 1 and then 0. 1 and then 0 on your touch-tone phone. There are no comments. Back to you.
Thank you. With that, members, I want to know that the board's work group on wine industry and the wine group excise tax data will convene immediately upon the adjournment of this regular board meeting. And with that, I just wanted to wish everyone a happy, healthy, and safe holidays. And also a happy new year, because our next meeting will be in January the 25th and 26th. But before we adjourn, I just wanted to also announce that tomorrow's meeting is being canceled. It's my understanding we were able to complete everything today, so there's no need to reconvene tomorrow for our second meeting. Is that correct, staff?
That is correct.
And unless there's somebody that has any adjournments for the day, the only thing I'd wanted to just adjourn in honor all the lives we've lost in this tornado that just hit. I don't know, people have been following the news. I mean, it's getting close to 90 people so far. And I mean, they're still going through all the debris where this tornado in Kentucky, where it touched down. It's my understanding that's where it hit probably the hardest. It literally touched down over 200 miles, which I understand is a record. Not that's a record you want to break, but so it was a devastating tornado that hit these folks in the evening, and we're still waiting on the count. And the only other adjournment I have is that I just wanted to also adjourn in honor of, they called him El Rey, Vicente Fernandez, who we lost, a well-known folk singer, originally from Guadalajara, Mexico, but was well-known here in the States. He actually has a star on the Walk of Fame there in Hollywood. And it happened Sunday, and since then, it's been growing and growing, and there's so many tributes and flowers and dedications, and it's been all over the news, both on the English and the Spanish networks. And I just wanted to chime in and also weigh in and adjourn in his honor. A very great man and very giving, not only to the public, but to many folks around the world. And I see a couple hands, so there might be a couple other adjournments. Member Gaines.
Yeah, thank you. I just want to take this opportunity to give thanks for the rain and snow that we're getting. So that's important for the entire state. It's important in my district because there's a lot of tourism that's derived as a result of snow. I know that they've received 5 feet of snow in the Sierra, so that is good for the Christmas holiday and good for skiing and restaurants. But also the snowpack is really good for water statewide. So I just wanted to highlight that. And I want to wish everybody a happy Merry Christmas, Merry Holiday, Hanukkah, and spend time with your families and enjoy your time. We have a lot to be thankful for. Thanks.
And speaking of family members, I hear one screaming back there. I guess she's got something to say about the holidays too. And I don't see you on the screen, Member Cohen, but I think you had your hand up too, no?
They said they heard somebody screaming.
No, it was actually me, Chair Vasquez.
Oh, is it Ms. Stowers? I'm sorry, Ms. Stowers, go ahead.
Well, yeah, I think I want to follow Member Damesley and say Merry Christmas, Happy Holiday, Happy Hanukkah.
Wait for nothing.
Anything else that we celebrate, but Merry Christmas.
Thank you.
And thank you for the snow. I see you guys on the slope.
Vice Chair Schaefer, I believe you have also some closing remarks or adjournments maybe.
Yes, Chair Vasquez, you know, I often commemorate important birthdays in the world, and we have a very important birthday in 2 days on December 16th of a leader of California, who is a new mother this year, who has been police commission president in San Francisco, who's been chairman of the board of supervisors of the city and county of San Francisco, and who is our incoming new repeat chairman of the board, Malia Cohen. I want to extend our warm love and affection and holiday greetings to her.
You know what? That's really, really sweet. I appreciate that because you definitely honor and recognize a lot of great folks in the state of California. So thank you, everyone.
And
Thank you
also
all.
Madison, our happy holidays to Madison. Bring Madison down here to go on our merry-go-round when she's old enough, okay? And
Yes,
the zoo.
And the zoo, yes.
And the zoo, you ditto.
I have free passes to that.
So I just also want to say thank you very much. It's been an incredible year. And appreciate you all for being flexible with me as we work from home and you hear Madison in the background, and I've had to turn my camera off, and everything from nursing to feeding to just speaking about the issues. So I just want to appreciate my
She wants to weigh in too.
Yes. She was born on almost literally on Zoom with this body, so pretty much interesting to have her grow up in front of the Teams platform. But thank you. Okay, that's it. Bye-bye.
She said that's it. Bye-bye.
With that, members, if there's no other closing remarks or adjournments, and we'll officially close out this meeting. Today, I guess I have 3:56, and we'll reconvene in January on the 25th. But we will go on now after we officially adjourn this meeting and begin the board work group on the wine industry and the wine group growers excise tax data working group. Ms. Taylor, if you would call that, please.
Certainly. Our next item is the board work group on wine industry and wine grower excise tax data. This board work group will be facilitated by Member Cohen and Member Schaefer.
So is it Vice Chair Schaefer or Ms. Cohen? Who's going to take the lead on this?
I'm here. Thank you.
Oh, okay.
I'm definitely happy to take the lead on this. Just for clarification, Chair, is it possible if we could just recess and convene the work group and then reconvene right before closing? That way we could give all of our closings at the same time. I don't know. Never mind. Forget that. Let's just go ahead and get started. Hold on. Ugh. If you guys could see me, if this camera was really on, juggling baby and my notes.
In your notes, I understand. Go ahead.
Okay, so I actually have several remarks that I want to make at this time. So this has actually been an enjoyable process, and I have to say that I've enjoyed working with Mike Schaefer's staff on making this possible. And I want to also begin by thanking the executive director and her staff for working on options for a potential administrative solution that would actually allow disclosure of volume of sales data and other relevant information filed by taxpayers to continue to preserve the confidentiality of individual taxpayers. Of course, this is acknowledging the fact that we are extracting taxpayers' zip codes. So at this point, we welcome this examination of potential administrative solutions that would provide for the public dissemination of additional data. Of course, again, speaking within the confines of taxpayer confidentiality. The preservation of taxpayer confidentiality is essential to any administrative solution in this area. And want to acknowledge also that we must carefully examine our options to make sure that by disclosing this data, we also preserve the taxpayers' confidentiality requirements by the current law. So, Ms. Fleming, excited to hear what you have to say. Just upon review of today's report of the executive director, I just wanted to, I can make the following motion now. I don't know if there's any discussion, but well, let me just go ahead and make the motion, and then we can discuss the motion and discuss anything and everything else. I'd like to make a motion that the board direct the executive director to post taxpayer data related to the wine industry by zip code that has been redacted to preserve the taxpayer confidentiality in accordance with the existing law. So that's the motion that I have on the table and happy to discuss. Thank you, Mr. Chair.
I second that motion unless someone else has seconded. I heard it.
I don't think you heard a second. I think you heard Madison in the background. So we don't have a second.
So it's been moved in second. Now, did you want the executive director to weigh in on this, or you want us to discuss it?
Yes, I think it would be interesting just to get her on the hear her voice in the meeting. So yes, executive director, please weigh in.
Thank you, Madison. So members, thank you for the opportunity to respond. So just to recap, the board tasked me with looking into the feasibility of providing the wine grower excise tax data by zip code. And this was designed to look at the feasibility of an administrative remedy. In the original discussion, if you recall, members, we were looking at two options. One was an administrative remedy. The second was a legislative remedy. The importance that was stated as a part of this proposal, members, was that we would continue to protect the confidentiality of taxpayer information, of course, and we've done our diligence to ensure that that occurred. I applaud my staff because they've completed a very, very detailed and very thorough and analytical review of the broad range of wine grower excise tax data based upon the request to determine what data could be made available by zip code. To make the most information available, we wanted to take the broadest opportunities that we could while still maintaining the confidentiality precautions. We applied the following set of standards or criteria, if you will. The first set of criteria that we used was we wanted to look at the broadest scope of data, which means that we included all of the reporting periods. So this exercise included a full calendar year of information. That was the first step in the scope of information that we reviewed. The second set of standard or criteria that we applied was there had to be at least 4 taxpayers per zip code. The third item was that one taxpayer could not represent more than 80% of the information in a particular column of data per zip code. The results, and I'll give you a little bit more insight into that. The results of our detailed analysis utilizing these criteria are as follows. The results showed that there are approximately 1,040 different zip codes represented in the 2020 Wine Growers Report. So over 1,000 zip codes, 1,040 specifically, were represented in the 2020 Wine Growers Report, and that was the scope of the material that we did as a part of the exercise to see what's possible. Of those 1,040 zip codes, 136 zip codes met the standard for 4 or more taxpayers. And in that, the 136 zip codes with 4 or more taxpayers contained some disclosable data. So if you imagine the first sort was broad, we narrowed it down to out of the 1,000 plus zip codes down to 136. So with that 136, some of the information is disclosable. A little bit more detail. The disclosable detail in those 136 zip codes was further reviewed to ensure that no taxpayer represented more than 80% of a specific column per zip code. Again, based upon the criteria that we noted earlier. Let me help you visualize this to see if it helps, because I would like to encourage us not to have a real technical discussion on data analytics because it's a brain teaser. But just to simplify it for you, if I may. If you consider, and I think everybody for the most part has seen Excel spreadsheets. If you imagine a spreadsheet with rows and then columns, right? There are 136 rows, and that represents the zip codes, representing a disclosable zip code. And then there are 58 columns representing the data fields and that information is represented what's on the tax return. So 136 rows with 58 columns of information. Of the 136 rows of zip codes, approximately 70% of the rows had over half of the columns redacted, and many of the rows had one or two of the 58 columns redacted. So if you imagine this, the redaction would show that we just basically would darken that area. So what that tells you is that some portion of the information is redacted, but then there's also a portion of the information that is available. It's just a smaller set, but there is disclosable information. Members, basically the results of the analysis revealed that the information indeed to your initial question can be aggregated and reported by zip code. However, by adding zip code as an additional element to consider and then applying the criteria, the results conveyed an increase in redacted information. So again, let me offer a bit of an example. You've all been online and done a Google search. So if you were to go in and do a Google search, for example, and just type in restaurants, it's going to give you a long list of restaurants. If you go in and apply Italian restaurants, it's going to narrow your scope. If you then go in and say Italian restaurants in Sacramento, it narrows it. That's what happened when we applied zip codes. It just narrows the amounts of information. It narrows down that list. It basically trims it down. When it's trimmed down, then we have to do a closer examination to make sure that the confidentiality is there. Even with that exercise, much of the information is still non-disclosable, but there is a smaller portion of the data that could be disclosed. Based on our analysis, the annual statewide aggregated data on this specific program that is complete and disclosable is either currently available or will be made available on the BOE's open data portal. And we'll work with our technology staff to make sure that we can add that information so it's publicly available. People can look at ways of searching that. I don't have the detail on that for you today, members, but any disclosable information, we will do our best to make sure that that information is made available, consistent with the open data portal. We're always going to continue, members, to look for ways to increase our transparency and access to public domain data, and we'll continue to review what can be done on an ongoing basis. That concludes my report. If there's any questions, I am available to, and I'd like members if we just keep it without getting into the technical examination of data analytics, if you would so allow. Thank you.
Member Gaines has a hand up.
Yeah, thank you. If I could just ask a question of the executive director in terms of why is this issue coming up? If this has been information that's been provided to the Wine Institute for, I think, decades, what has changed that has precluded the release of this information again this year?
So I'll pause just to, as a part of a work group, to defer to Ms. Cohen and Vice Chair Schaefer as the co-chairs if they want to address that.
Thank you. I appreciate that. Mr. Gaines, could you repeat that question? I think you're looking for like why specifically?
Yeah, why is it that the BOE cannot release this information as they have released it in the past?
Mm-hmm. Mm-hmm. Let me, as I have come to understand it, is that there's the law or the legislation that has changed is precluding us. So I'm not quite sure if although the information was previously released, one could argue that it should not have been.
Ms. Cohen, would you like me to assist?
Yes.
Thank you, ma'am. So I just wanted to be respectful and defer to our co-chairs. So if I may, BOE, prior to 2017, members had a practice of providing a list of information, public domain data available to anyone who subscribed for it. And we had a number of people who would come to the agency to subscribe to get access to a variety of data, or types of data for the variety of tax programs, alcoholic beverage being one of them. And in that public domain data, you can subscribe to it. Thank you, staff. Give me a second here. They could subscribe to it as provided in a listserv. In addition to that, that public domain data is also provided on our what we refer to as the open data portal. The intent of the open data portal on those lists are any data that's categorized as public domain data is, taxpayers have a right to see as part of government transparency. So for years, that information was provided. And just for comment, if you recall, I believe the stakeholder with interest in this area actually presented this in a prior meeting a couple of months ago. So the information was provided, Mr. Gaines, and just as a part of that, apparently just one of the errors that we made, just a human error that was made at the time, was that there was a slight category of data that was provided and that on the returns for the alcoholic beverage tax program, data on those returns was given to this specific industry group and the representatives that we're talking about. When we shifted to new technology, there are a number of factors. One of the bigger ones is we had a split in the organization. So you had two different agencies now looking at data differently. As you know, alcoholic beverage tax program moved to BOE, but we are still basically contracting with CDTFA to do, some of the efficiencies of it. The second piece of it was that technology shift. So as that technology shifted from our old system to our new system, there's a little bit of a review of how does data work, et cetera, et cetera. So that's just a high level, some of the conditions that changed. When then we got a request from this specific stakeholder, the request came to CDTFA to say, I'd like to see the data that I had historically been receiving. At that point, with this shift in technology, new role players, new staff, just a kind of an aggregation of changes, CDTFA appropriately said, based upon that, we have to refer you to the agency who is responsible for that tax program. And that came to us to our disclosure office as a Public Records Act category of a request. When that's examined, just the key there is then the way that it was provided in public domain was a little bit more was definitely more flexible. It's public domain. But when the request came to us under this current climate, it came to us as a Public Records Act request, which means legal does a review. And they have to apply the rules and the laws, et cetera, that apply to Public Records Acts in terms of confidentiality of data. So long story short, that shift caused the conversation to shift from public domain data, which was in error. And there's some background in between there where we went to just confirm, with AG's office, what's appropriate and not appropriate under the laws regarding confidentiality. It was determined that a greater percentage of the information on the return is in fact non-disclosable. So that narrowed what we were able to provide to the stakeholder. Stakeholder, of course, is saying, wait, I've been getting it historically, so that Reader's Digest version at a very high level is a summary of basically where we got today. So Ms. Khan, Mr. Vice Chair Schaefer, I'll turn it back. Unless you have other questions, Mr. Gaines.
Just to follow up, if I could, because so has the law changed, has statute changed over time that, or was it just a legal review of our operation, acting now because of AB 102, and now that information is handled a little differently.
Yeah, so, and that fundamentally, the key is that the law that changed was AB 102, just shifted to organizations that causes you to review your processes, who owns it. Okay. And so everybody sort of does that check and balance. In terms of confidentiality law, that law has not changed.
Okay, very well. Thank you.
Thank you. I'm sure my staff will send me a note if I've misstated. I don't see anything popping up on my screen, so I trust that I'm on point.
Senator Gaines, that was a far more fuller answer than what I provided to you.
But you can take full credit for it, ma'am.
Thank you. Okay.
Yeah, I just appreciate the clarity.
Do any of you other colleagues have any other questions?
I
Looks
do.
like Yvette Stowers does.
Up there. Go ahead.
Okay, I kind of want to back up. You started off, Ms. Fleming, saying that you started off with over 1,000 zip codes, and then you narrowed it down to 136.
Correct.
I follow that logic. Where you kind of lost me at was that you said one taxpayer could not represent greater than 80%. 80% of what again?
80% of any specific zip code.
Of any zip code. Okay.
Yeah, and the general rule, without getting into, because again, it's a slippery slope to get into this level of data analytics and the rules that are applied. But in essence, those standards that we applied, which is, 4 of the taxpayers and not one taxpayer being greater than 80%, really is designed because the narrower your information, then it's more easily able to either through deduction or through examination, figure out and identify who that taxpayer is. And so that was through the data analytics exercise that staff went through. They apply a number of tests basically to see what's going to give you the broadest opportunity for data, but finding the balance of maintaining the confidentiality. So you don't want to give, make it so narrow that you can come back and identify, who the taxpayer is. So you just keep basically doing a tweak, if you will, to your calibration to allow you to maintain the anonymity of the confidential information while at the same time trying to at least look at what might be disclosable. So that just happened to be the right balance.
Okay, so based on that, I actually have 2 questions, and I acknowledge that maybe the chair and the vice chair maybe have a better feel for what you think that you can provide, since I'm assuming they've seen it. But my first question is, what are you redacting?
So the redacting information is dealing with identifiable information typically, and I'm going to ask staff to send me a couple of bullets here, basically identifiable information. So it's going to be the name of the taxpayer, the address of the taxpayer. Just for note, historically, zip code was the geographic information that wasn't previously included. It also included tax penalties, that kind of category of information.
Okay, so you're going to redact the name, the address, the tax, and the penalty, but you're not going to redact the zip code.
Well, so the zip code in and of itself was not a non-disclosable, was not a confidential item. So
it was not? Zip code is not considered to be a part of the address?
It is part of the address. So again, I'm being careful here because if we're going to, I'm trying to find the balance between making sure we're answering your questions and now getting into the depths of the analytical data. But there's certain categories of data that are disclosable and others that are not. And so zip code historically has not been a part of the report. Providing the information by geographic identification has historically not been, but the specific zip code in and of itself as a data element is not defined as confidential.
So the zip code is not defined as confidential. And you're telling me in the past when they were receiving this information, they were not getting the zip code, or they were getting the zip code?
So historically, they were not getting any geographic information, because the issue is that when you start to take zip address plus street address, street name, zip code, the composite of that information makes you able to identify who the business is. If you extract one of those data elements, just a zip code, with the combination that we talked about, Deputy Controller Stowers. So when I mask it with those other items, I can provide information by zip code, applying those standards. If I just provided everyone by zip code without those standards, you could identify, and that renders us into a being able to identify the taxpayer. So it's not just the issue of it's just zip code. This is a part of the formula. So it's zip code with the criteria that we established. So it's a year's worth of data, 4 or more taxpayers, no one taxpayer with 80 more. That combination by zip code gave us the opportunity to show you what was disclosable and not disclosable. It allowed us to share information without revealing any identifiable information. So data threaded together, the aggregated data threaded together can give you different results. And it's basically a way of configuring those specific elements that meets a threshold that just says, okay, I can safely go here, but I can't go any narrower.
Okay. My second and final question, maybe final, no promises, is that from my understanding, the Rhine Institute is asking basically for information so they can look at what's happening in the industry on a regional basis. That's what they're saying. That's their ultimate goal. They want it on a regional basis so they can analyze the industry. Are you confident that what you're saying that you can put into the Open Data Portable is going to provide them with the ability to analyze on a regional basis? I lied. Third question. Have you consulted with them?
So let me ask the easier. Personally, I have not had a conversation with them. Again, as a work group item, the co-chairs of the work group item have, according to the work group rules, have had those conversations. If we need to get into that level of technical detail, I'm happy to talk with the stakeholder to assist in any way that I can with limited access, using staff, but always willing to try to help out where we can. So in terms of the second question, Deputy Controller Stowers, in terms of my confidence, in terms of what I am confident of is we understand data. I'm not trying to be a smarty pants, but we do understand data and we do understand the thresholds of maintaining confidentiality. So what I do know and I'm confident in is our ability to say we will meet the standards and maintain confidentiality. We're going to try to be helpful, but we will maintain the standard for confidentiality. So we will hold to that, and then whatever is in a public domain or disclosable category, working with staff to determine how that information could be provided. So our first, as a governmental function, our first and foremost focus is to protect taxpayer information. As Member Cohen and Vice Chair Schaefer has discussed before as a part of this discussion. So I am confident in our ability to apply the appropriate standards, understanding the data as well as we do. And I'm thankful to have subject matter experts who are overseeing this very tightly. And just my former resume allows me to be a little sensitive to data protections.
Okay, thank you, Ms. Fleming. I appreciate your response. Member Cohen, Member Schaefer, are you guys confident or have an opinion on whether it's going to meet the constituents' needs as far as what you're proposing?
I think it's up to the industry to determine whether or not what we provide is valuable. So it's hard to say. It's up to the constituent to determine that, but I think we have carried it as far as we can on this body.
Yeah, we've done our best to give you the broadest brush possible while protecting, what we're statutorily responsible for. But we're trying to give you the broadest brush. And again, just to note, again, a part of the other option that was given direction was this was one of two options in terms of remedies. One being administrative to check the feasibility, and the other legislatively. So I defer back to the co-chairs.
Thank you. And as one of the co-chairs, Ms. Fleming, I want to also let you know that we have a representative on the line that could probably best answer your question.
I'm gonna be quiet, Member Cohen. I just want to say thank you for the detailed report, Ms. Fleming. I'm gonna, as normal, I have confidence that your staff has done an analysis, and what you're saying that you can release is within the confines of existing law. That you're not going to be providing any disclosable information. And as you guys all know, one of my main concerns was protecting taxpayer confidentiality, and I do believe all of you guys had that same concern. But that has been my main concern about this project, confidentiality, and also the trust that taxpayers have with us when they file their tax return, their excess tax return, that we're going to protect their data. I mean, that's really important. And also the knowing that we are going to protect it and it's going to increase compliance. I don't want to send anyone down the path where they're not going to disclose information because they think that we're going to share it with the general public. But Ms. Fleming, if you're saying that you've come up with a way to do it that is not going to provide any confidential information, I will be quiet from this point forward. Thank you.
Ms. Fleming, sorry, Ms. Stowers, yes, all of our concerns and are the same. And we certainly stated that on day one. What I would like to do is maybe at this point pivot and bring the representative on, the industry representative who is on the public line, So Ms. Taylor, maybe you could help.
Certainly, yes. AT&T, could you please let us know if the representative is on the line or if there's anyone else that would like to make a comment?
For comments, please press 1 and then 0. 1 and then 0. Okay, one moment. I'm going to open up the line here. We're just making sure it's your representative. It'll be just a moment. Okay, Tim Schmeiser, your line is open.
Good afternoon, members. Tim Schmelzer with Wine Institute is now on the line.
Great, welcome, Mr. Schmelzer. Wanted to give you an opportunity to say a few comments and speak to particularly Ms. Stowers' question or statement.
There's a bunch of questions, so hopefully I'll do my best, I'll say.
Okay. Yeah.
I listened carefully, and I've been made aware of the administrative efforts to provide data. I do believe it's a positive step forward. We're going to have to see the data to really make the full assessment, but anything that enhances our ability to geographically differentiate some of this data really helps us greatly to understand what's happening within our industry. For example, what may be happening in Napa could be entirely different than what's happening in the Central Valley, than is happening in Monterey, et cetera, et cetera. So anything that helps with our understanding of that is extremely useful to the industry and greatly appreciated. That being said, no diss on the efforts. I really do appreciate it. It is, in our opinion, a one step forward towards a disclosure that we were previously receiving prior to all this, the historical data that we were being provided. We have been listening hard to all this, and the second option besides this administrative method has been to develop a legislative solution. And I did want to let you all know that at Wine Institute, we've been working with our legal counsel and our economist and have developed what we think is simple legislation that would essentially solve this issue for us. And it was just adopted for support by my board of directors last week. So I look forward to being able to share that with the board and would encourage the board to consider supporting the legislation at a future board meeting.
Okay. Thank you.
You're welcome.
Mr. Vasquez, I turn it back over to you. I think that pretty much exhausts the topic. There's not much more to say.
We need to officially take a vote, though, right, on the motion, right?
We do, and we probably need to take public comment on it as well.
Yes. And Ms. Taylor, did we check if there was anybody else? I know we had no other written comments, but did we have any others on the line that wish to speak?
Let me check with AT&T. AT&T, did we have any other speakers that had queued up?
Presently, we don't right now. As a reminder, it's 1 and then 0 for comments. 1 and then 0. No one is in queue.
Okay.
Hi, Chairman Vasquez, if I can.
Yes, go ahead.
Just as a reminder to the board, this is a work group, so the motion would take the form of a recommendation to the board. Obviously, to the extent that there's consensus, the executive director is free to start working on the item and moving forward on that basis. But just as a reminder, according to the work group charter, this would be the motion, even though it would be, if it's approved by the members present, it would be a recommendation to the board. So it would need to be ratified at the next meeting.
So along those lines, do we need to take a vote or can we just have a consensus?
Sorry, a consensus would be fine. That's enough to give direction to the executive director.
Since you mentioned it's just a recommendation moving forward, right?
Yes, or if you want to formalize it, a vote is fine as well. So again, it would be a recommendation to the board that would be significant enough to have the executive move forward on that consensus.
Okay. Let me ask the two co-chairs, are you comfortable with just a consensus or should we take an official vote? It is a recommendation. Does it matter?
It doesn't matter. I'm happy to take up the recommendation.
Okay. So it looks like, unless I see any objections, there's a consensus that we move forward with the recommendation, and then we'll take it up with the full board in January.
So do I need to make a motion to rescind the motion that's on the table?
I think you're okay.
Mr. Henry Nanjo, just for clarification, or Ms. Taylor.
So, yeah, if we could ask Chief Counsel to join us, but I think the adjustment that would be needed, and Chief Counsel, please correct it, is that you're making a recommendation to the board instead of the direction to the ED. So in this case, your recommendation is to the board, that modified language, the rest of it could be the same, and then the full board then can either take it up today or could agendize it, excuse me, at a subsequent meeting, Chief Counsel.
Yes,
okay.
That's correct. Roll call
votes are
have to be at a subsequent meeting because this meeting's already been adjourned. So.
Okay, so just so I heard correctly, I'll make a motion to rescind the motion that's on the floor open. Is there a second to that motion?
I'll second that.
All right, thank you. So Mr. Vasquez has seconded that motion. We could take, I don't think we need to take public comment on that. And then what I'd like to do is just, what you said to-
I just make a formal recommendation,
Make a formal recommendation. Okay, so then at this point, I'd like to make a formal recommendation that the board direct the executive director to post taxpayer data related information to the wine industry by zip code that has been redacted to preserve taxpayers' confidentiality in accordance with the existing law. That's the recommendation that I'm going to bring to the full board for a vote.
Member Cohen, I do apologize for the information, because if I could just offer one suggestion, instead of posting it, it would be an issue of disclosing it.
Okay, I said post, but I meant disclose. That's exactly right. Thank you.
Okay, so we don't need to take a formal vote. It looks like there's a consensus. So that's the recommendation. It'll be brought to the board at our January meeting. Correct?
Correct.
Okay.
Are we, can Mr. Nanjo, I believe we should probably take a vote.
Okay.
Yeah, we should take a vote. So again, members and staff, okay, so the roll call vote, because we're on in a different environment. We're not in a public meeting. So taking a roll call vote, I think would be consistent with our and best practice. Since the regular board meeting has been adjourned, we cannot go back to that item at this point. So this would be an official recommendation by roll call vote. Then the item would be ratified at the next public meeting when the regular board meeting convenes in January.
Yes, I would concur with the executive director. If this is going to be a formal recommendation to the board, the vote is
time discussing procedure here.
All right, Ms. Taylor, if you would go ahead and call that.
Yes. Certainly. Chairman Vasquez.
Aye.
Vice Chair Schaefer.
Aye.
Member Gaines.
Aye.
Member Cohen.
Aye.
Deputy Controller Stowers.
Aye.
So that's unanimous. It'll be, the recommendation will go forward at our next meeting. And with that, unless there's anything else that you had, co-chairs, seeing and hearing no other recommendations, then we will officially close out this work group meeting and adjourn it. And like I had mentioned earlier, we will not be having a second or a meeting tomorrow, subsequent meeting to our meeting that we just adjourned earlier today. So our next official meeting won't be until the January the 25th and 26th. And with that, once again, just wishing everybody a good and happy and safe holidays, as well as a happy new year. Thank you all, and thank you all for your patience. I know it was a little bit of a lengthy meeting today, but I guess it's a good way to close out my tenure as the chair. So, and I want to just thank you, the staff, the members, and specifically my staff, starting with my chief of staff, Kari Hammond, and everybody else that's been working really hard during this whole COVID period. Thank you all and wish you all the best, and stay safe. And if you're in those circles or those groups, especially large groups, be careful. This COVID is real. I just saw a little announcement that the US just broke the record for other countries. 800,000 people have died from COVID so far. So protect yourself, wear a mask, especially if you're indoors or with large groups, and be safe.
Thank you.
Thank you all, and thank you, staff.
Thank you.
See you next year,
Thank you,
everyone.
members. Happy holidays. Happy
Happy
birthday.
holidays all.
Take
Happy
care.
birthday, Ms. Vaughn. Thank you all.
Bye.
Thanks.
Thank you, staff.